good morning, everyone. We are about 5 minutes away from starting today's Traders Conference, Day 3. I hope you've been joining us for the last few days. We have had such great information over the last few days. And of course, going into this morning, we're here in the US, we're post-election. Well, I guess we're still waiting for some results of the election to kind of see where we are. But we are post-election here. We're going to have some great market views and analysis going on today. We're starting with the great Vince Vora, who does a lot of great chart analysis. So stay tuned. Be sure to be ready for that one, and also be ready with some chart symbols. I know he does like to take some requests, so make sure that you have some chart symbols that you want to look at coming up for Vince. But let's go ahead and take a look at today's schedule, just to get that ready. Here, let me bring that up. So the easiest way to get to the schedule is to go to MetaStock.com. That's MetaStock.com. Click on that homepage banner right there that says Traders Conference November 7th through 11th. And if you click on that, it's going to take you right to the homepage here. And let's actually just click on Wednesday, since that's where we are. So again, we're starting with Vince Vora. He'll be our first speaker of the day, doing some great chart analysis. Welcome, Wall Street Warlord. Greatly looking forward to an outstanding conference and brilliant trading strategies and intelligence. Great to have you here. Thanks for the morning comment. So Vince Vora again is our first speaker. Then we'll be going to Rahul Mohindar. Then after Rahul, we have Jeff Gibby. If you don't know who Jeff Gibby is, he's been the one who's been running basically this whole conference and the mastermind behind putting all this together. So we love hearing from Jeff, and he's got some great things for us coming up. We'll be hearing from the second session from John Osborn. He'll be talking about using plus momentum to find your perfect trade in 2020-22. Then we have the famous Larry Mcmillan, who will be speaking with us today, and Marie, which also does some awesome chart analysis, so looking forward to her perspective. Dan Passarelli and Steve Primo and John Seville. So we have got another huge, great day of learning ahead of us. So get some coffee, get ready. It looks like everything is coming together pretty well. So let's just check and see. Oh, the most important thing. If you're here on YouTube with us, you want to go to this page and you want to register down here, because we will be giving away prizes throughout the day, and you want to be eligible for those prizes. So make sure to fill out that form, get all registered, and you will be eligible for the prizes that we give away today. Jeff and I will be giving those out throughout the day. So about 3 minutes out here, I'm going to go do my checks, make sure everything's working great. But as you come in the room, make sure to say hello. Tell us where you're coming in from. Again, my name is Kelly Clement. We're here in beautiful Salt Lake City, Utah, getting everything ready for this morning. Tell us who you are, where you're coming in from. We'd love to hear from you in chat. And I'll be right back with you. Looks like we are just about ready to go. We've got about 1 minute till we get started. Again, if you're just joining us, hello, my name is Kelly Clement. Welcome to day 3 of the Traders Conference. Again, if you'd like to see today's schedule, just go to MetaStock.com, click on that homepage banner, and then that'll take you right to the Traders Conference page. where you can see today's full schedule and also register for the awesome prizes that we'll be giving away throughout the day. And again, you just click right here on Wednesday, and that'll show you the schedule for the day. So let's get today's show rolling. One of the things I do want to mention is, please, if you have any questions throughout the day, please put them in chat. We love passing your questions on to the presenters. You're here to learn, so take advantage of the presenters who are typically very, very good about answering your questions. So put your questions in the chat. Let's get them answered, and let's get today's Traders Conference started.
All right, thank you, Kelly. Good morning, everybody. It's good to see you. Thanks for coming in today. I hope you're doing well. My name is Jeff Gibby. I'm going to be talking all day. It's good to see you, Jason, Sterling, Trey, Paolo, William, Richard. Derek says good morning. How are we doing? We're doing great. Sterling says good morning. Good morning, everybody. My name is Jeff Gibby, as you probably figured out in the last couple of days. Let's go ahead and read a legal disclaimer for you. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I want to say good morning to all of you that are joining us. If you're watching us on YouTube, do me a favor, hit like and subscribe. It helps a great deal. We really, really appreciate that. And I'm going to start by saying thank you to a couple of the sponsors we have. Thank you to Stocks and Commodities. They've been kind of sponsoring our events for years now. They've been publishing since the 80s. They've done 17,000 different trading articles. If you subscribe to MetaStock as a result of the conference, or you'll get at least 5 months for free of their magazine. If you spend more than $300 today, you'll get a 2-year subscription. So very, very awesome. We also have partnered up, and we are sponsored by the CMT Association. CMT Association is a nonprofit. They've been doing accreditation programs for a number of years. They'll specialize in risk management, systems development, portfolio management, and behavioral finance. Tomorrow, Tyler Wood's going to come in and talk about the benefits of a CMT accreditation if you were managing money or looking to manage money, and it's really, really interesting. So make sure you stick around for that or come in for that tomorrow as well. So we're MetaStock, of course. MetaStock, I've worked here for 25 years, for 29 years in a row. MetaStock's been rated #1 in stocks and commodities for the best software. We're going to talk about a lot today about how it can help you scan the markets and find opportunity, test trading ideas, forecast price action, have real-time alerts, commentary, signals. Pricing for MetaStock, it starts at like $69 a month if you're in the US, $59 if you're out of the US. You can get an extended trial where you pay for a month and get a second and third month for free. You can do that at metastock.com/conf-promo. If you have questions during the day-to-day, you can give us a call, 800-882-3040. Or if you prefer or are international, go to metastock.com and chat with us at metastock.com/saleschat. Sterling says, thanks for hosting such great webinars. Thanks for coming. I've been very, very happy with how the webinars have been doing. The speakers have been great. The audience has been very alert and asking questions. Really, really happy with the way things are going. So our first speaker is Vince Vora. Vince is a really good friend of mine. We've been working with him for a number of years. Right after the I'm going to say right around 2020, he called and wanted to kind of create a system that was designed to work around the volatility of the current markets. Well, those markets have just gotten more volatility, but we created a methodology that we call the victory system. And it's a system that I've actually used a lot to find trades and identify trades. And it's something that I very, very much like. I'll say this about Vince before I kind of turn the time over to him. I think Vince is a great presenter. I really, really like the way he lays things out and the way he talks about things. And he does a really, really good job. So let's go ahead and bring him on here. Vince, how are you doing this morning?
I'm great, Jeff. How are you? Thanks for having me on.
Of course. It's good to have you. Let me go ahead and make you the presenter right now. Okay.
Great.
And you should get a...
Show my screen. It looks like my webcam is closed on your end. I don't know if you want to keep it that way or... Oh, there we go. Are we on?
Okay.
There we go.
All right. Yeah,
how are you?
Perfect. I'm good. It's good to see you.
Yeah, same here.
See you in about 10 minutes. Or, I mean, the floor is yours. All right, we're off to a good start, right? Your turn.
All right. Great. Thanks, Jeff. Thanks for having me back, by the way. A big thank you to everyone at MetaStock. They have a great team, including the sales team, which has been great and very supportive. So if you ever need anything, just give them a call. But I'm happy to be on again and happy to demonstrate our victory system. As Jeff said, we put this together. Actually, we started late 2019 and finalized it in early 2020, just before the pandemic hit, right? So the timing, although it was completely coincidental, it happened to be perfect timing for it. But what we were trying to do is find a way where we could use the charts to tell us or identify turns in the market very, very quickly so we can respond to them and take advantage of those trends early on. And I want to show it to you here. What you see on my screen, these arrows and circles and little exit flags, etc. This is what we call the victory system. And it is based solely on technical analysis. No fundamentals involved here, but really, all we need is price to trade. Price is a reflection of what is actually happening now. What you see on your chart are real transactions, not opinions, not, analyst expectations or anything like that. They are actual real money transactions. So that's what matters at the end of the day. And the algorithm behind this is meant to help you not only identify that trend, but try to get you in early and get you out as quickly as possible when it starts going against you. So let me explain what you're seeing here. These little arrows, these are the initial entries. So you'll see both green and red. Obviously, green means long, red means short. The circles, green and red, what those are telling you is that the exact same formula that came together here with the arrow is coming together again. The only reason we identify it with a circle instead of an arrow is because we're already in a trade. So this is what we call the initial entry. These are the re-entries, okay? So if you were to get in here and you see this little green circle pop up, that means you can add to your position if you're a little more aggressive, or just be confident that it's still telling you to remain in the trade. If you miss the initial entry and you see this, now you can jump on and take advantage of the rest of that move. The red circles are, mean the exact same thing, just in the opposite direction. Now, sometimes when you're in a trade, we will flip directly from green to red, okay? And if you're in a long trade, for example, you see red, it means you definitely want to exit your full position, okay? Not necessarily go short, but to exit your position. And other times we'll see an exit flag. Either way, if there's a change in color on the bars, you want to exit that trade or change the direction. Yellow bars mean that you should not be long or short. You should be out of the market at that point. There is no match for the formula, which means we should be sitting on the sidelines waiting for the next trade setup. The beautiful thing is it's usually 1 or 2 bars max and we're back in another trade. Now, one thing I want to be very clear about is we do not want you to be, or we do not want you to take every single signal here. That is not the intent here. The intent is to trade with trend and momentum on our side. That's how, as traders, we give ourselves an edge. All right. We need to trade with trend and momentum. If we're doing that, then more than half the battle is won even before we enter the trade, believe it or not. All we're trying to do is ride the wave with that current trend. So the way we do that is we use this little blue line here. That is the 20-period simple moving average. Okay? Not exponential, not weighted. We've tested all of them. The 20-period simple moving average based on the close works best. Okay? Now, what we want is to only take the trading signals that happen along a sloping 20-period moving average. So if we're going to trade to the long side, we want to make sure that that blue line, that 20-period simple moving average, is sloping upward, okay, in the direction of the trade. And the bigger the degree of slope, the better. Okay, that means the trend is even stronger, right? So you could have slight slope, or you can have very, very significant slope. The higher the degree of slope, the better. It works the exact same way in the opposite direction. If you see a downward slope, you do not want to trade long. You only want to trade short. So you only want to take the signals to the short side that are along a down-sloping 20-period moving average. If you get a flat period, now there aren't many here, but here's one right along here. You see how the 20 is flat here? We had this green, this red re-entry, green entry here. We don't want to take any of those. Why? Because that means we're trading without momentum. All right. The 20-period moving average, when it's sloping, signifies momentum in the direction of the trade. Okay. Without that momentum, the likelihood of success is very small. So in order to play the odds and increase our opportunity for success, we want to make sure that we're not only trading with slope in our direction, but with significant slope in our direction. And one last thing I want to mention to you before we start flipping through charts and showing you exactly how this indicator has performed, is that we prefer to take the entries that happen close to the 20. In other words, sometimes there are entries that happen far from the 20. And, it could be a gap situation or just a stock that has really taken off, run away from the 20, and now gives us a re-entry somewhere up here. The further price moves from the 20, the likelier it is to snap back to the 20. So we don't want to get caught in that. For example, here, now this was the pandemic drop, a very, unique situation, but we see this all the time on individual stocks. Price pulls away from that 20. So if we had a short signal down here, this far from the 20, we would not take it. We would just ignore it. And again, a nice thing is that there will be so many opportunities across the market that, skipping one here and there, it doesn't mean you're going to be inactive. You will be very active if you use this. We also have a scanner that is going to save you a ton of time searching for opportunities here. I'll show you that near the end of the presentation. All right. So now, just to recap, we want to take the signals that are in the direction of a sloping 20. So this green arrow here, this green dot here, they happen near the 20 sloping significantly. These are what we call high probability trades. These are exactly the ones we want to take. Just like this one here, this one here, etc. on the short side. Okay. Now, before we look at individual markets or individual stocks, what you can do with Victory is use it also as a guide to judge the overall direction of the market. So, for example, this is the S&P 500, SPY, the ETF. Now, if we go to the monthly chart, you can see that you can tell exactly when we're in a bull market versus when we're not. Right now, we are not. Right? That's pretty clear. We are not. We are below the 20. We have no slope in that direction. And victory's giving us all red bars. So that's the other thing. Once you're in a trade, to help you remain disciplined and not get scared out of a trade early, we color all the bars in the same color of the direction of the trade. So this is a long trade. All bars will remain green until we get either a change in direction or an exit. Okay. So that way, if you get in here, it moves in your favor. Suddenly you get 1 or 2 red bars. It's not going to scare you out. You're not going to see them. Okay. So I really like that. But this is how you can use it for the overall direction of the market. Let's say the S&P 500 gives us a long here, right? So we clearly on a longer time frame chart, this is the monthly, we have a bullish market, right? So, yes, there are times where you can short certain stocks, even in a bull market. Absolutely. Individual stocks can do their own thing sometimes. And it's always a good idea if you have, say, 10 positions in your account to at least have 1 or 2 in the opposite direction during a bull market, just in case you get a quick turnaround, right? As a bit of a hedge. Victory will obviously help you find those. But when the overall market is trending clearly in one direction, and in many cases trending very strongly, like we had over here recently before this downturn happened, this was 2020, 2021. When you're in that kind of bull market, now you can flip back to whatever individual stocks you want to look at and focus on long setups, right, rather than short. So Victory is also a good guide for overall market direction. Now, I'm happy to answer questions along the way. I'll try to keep an eye on the question panel. Jeff will help me out with questions as well. Also, by all means, enter symbols. Tell me if there's something you want to look at. I'll throw on a few. We'll look at the indexes. We'll look at gold, crude, Bitcoin, which and Ethereum. All of crypto has had a major move in the last 24 to 48 hours. We can look at that. All sorts of things. I don't think I mentioned it yet, but this works on all time frames, any market, any exchange around the world. It's based solely on technical analysis. It is a formula. So anything you can chart, it will work on and work very well. So, we go from the monthly here. Let me switch this all the way down to a 1 minute chart just to show you if you're a day trader, right? Works the exact same way. So again, here, just, this was yesterday afternoon, basically. That's all it was. And I can try to bring in more. Here we go. I'll bring in a bit more data. So almost all of yesterday, right? So in the morning, we were rallying here on the SPYs on the 1 minute chart. And there's some beautiful entries to the long side. Look at these. Look at the slope of the 20, right? You get a little retracement back. You get your re-entry. It happens right near the 20 and boom, take off, right? So this one was a nice one. This one was a nice one. Here, do you trade short? No, you do not. Why? Because the slope is in the opposite direction. Remember, if you're going to trade short, you want the 20 to be sloping lower, right? This one you may have gotten in. We still had a bit of a slope here. And you see how it gets you out very, very quickly? That's the intent here. The intent is to keep losses as small as possible, but keep you in the trade when you do catch a run, right? That's why we paint the bars all the same color to help you remain disciplined and stay in the trade. This one here, although it worked out great, not a trade I would take. The 20 is completely flat, right? So once I got out here, okay, I might have gotten back in here, out here for a very small loss, and then I wait. Now this one here, yes, get in, add to it here, yep, and we're out here, okay? Throughout this whole period, flat, you do nothing, okay? Even here, you missed this. Now, if you're, experienced with technical analysis, there are other things you can add to this. For example, one of the things we like to do is identify channels. And, if you were to grab yourself a copy of this indicator, with it come 2 training classes. And in there, we'll teach you a method that we use with Victory, where we try to identify channel breakouts. So I'm going to draw one in here just roughly, where we identify the tops and the bottoms, right? So we identify a channel. So when you break that channel, right, you know, it's a more of an aggressive trade, but yeah, you can go with it. So would I have taken this signal up here? No, the 20 was not sloping lower. That's a rule I will not break, all right? But once we saw that we broke below this lengthy channel, now we can jump on board. Or we could just wait until we get the next symbol with slope. We do not want this one sloping in the wrong direction, right? We don't want these ones, no slope. This one we do. Nice little win there. This one we do, and boom, there we go. Okay? That's a 1 minute chart. We go to 5 minute, right? Again, it's easy to identify the opportunity once you train your eyes, and it doesn't take long at all. You're just looking for those few items, right? You're looking for that arrow with slope in your direction and the trade being near the 20, okay? Price being near the 20. Then, you know, let's say we saw this trade, we want to get in here. What else can we do to determine whether this is a you know, really strong trade candidate or not? Well, you look to your left, right? And you try to identify whether or not there's going to be any sort of resistance in your way. If there's no activity, you know, up here, chances are there's going to be very little resistance. So if you're in a situation where that stock or that market is close to an all-time high with no prior activity anywhere near here, that's an easy trade. And that's when you usually get your explosive moves, right? So you can add that to your list. Only take the ones near an all-time high. Those are the best of the best trade opportunities. But again, you've seen the 1 minute, you've seen the 5 minute here. I showed you the weekly to start, the monthly. You know, you can go to the daily chart. It's very easy to see where the quality setups are. They are not in flat areas of the 20. They are not necessarily, you know, we do not want to try to pick bottoms or pick tops. Those are very, very difficult things to do. We just want to go with the current trend and take the easy path, right? So once we had that shift here, look, and if you understand technical analysis, you might have realized that this was going to happen a little earlier, meaning you move below that moving average, you come back, you retest it, it fails, you break this low, and off it goes. So, you know, if you were more aggressive, more experienced, you could have taken this trade right here. Okay? And we actually had a bit of slope there. This one here was a no-brainer, right? This one, very, very easy to spot the degree of slope. And there you go. See, so the move was already underway. The trend was established already, okay? And moving. All we're doing is jumping on and riding the rest of that wave. That's what we're trying to do here. And it works very effectively. Let's look at the cues. The cues, for those of you who may not be aware, is the ETF for the NASDAQ 100. Okay, again, when it's trending, right, and you see those signals that happen along a slope, okay, and you get mini trades, so trends, excuse me. So, for example, you know, the overall market is moving lower. If you look at this chart from the top left to the bottom right, it's pretty clear what the direction of this market has been, right? But there are times when you get these mini rallies. Even these mini rallies present you with opportunities, right? Just like this one and this one, right? So do you have slope? Yes, you do. And is it near there? Now, we can look to our left and say, well, there's going to be some resistance. So, you know, maybe that keeps us out of it. When we're comparing one to another, there might be a cleaner trade that we take over this one. But again, it depends on how you want to trade this and, you know, how aggressive or conservative you want to be. But the absolute easiest trades to take are the ones that happen in the when you have the overall direction of the market, okay? So you can use a top-down approach, right? Start with the monthly, okay? And say, okay, what is Victory telling me about this market on the monthly? Well, it's headed lower, isn't it? So maybe I should be focused on short trades, right? You can confirm it on the weekly, right? There we go, going lower. We actually have an entry here recently, last week, right? And then you go to the daily and so on. And so if you come down here to the daily and you have one of these, while the monthly, the weekly, all pointing lower, you might want to pause and say, maybe that's not the best idea, and wait for it to roll over again and present you with something like this. Here's the easy one, right? Nice and easy. Now, again, this doesn't just work on equities. It works on commodities, futures, Forex, anything, crypto, you name it. If we look at gold, here, again, there's a lot of areas in here that we do not want to touch, all of these. Now, in reality, for those of you who have been trading for a while, I'm sure you'll agree, where traders lose most of their money are in sideways markets, right? Where they get chopped around, get stopped out very often. That's what we want to avoid, okay? So, again, you look at gold right now on a weekly, and it's just telling us to exit the short trade, but there's no doubt we're in a downward trend right now, right? And that's, again, very, very easy and quick to identify. There's very little work to do if you do rules that I'm giving you, and it's very, very easy to spot. And once you get familiar with it, if you grab a copy of this indicator, just go through as many charts as you can the first few days, so you can quickly train your eyes to identify those specific signals that I'm telling you to focus on. And you can pull up any chart, and you'll quickly be able to tell, looking at the far right, whether you have an opportunity or not, or just move on to the next chart. Okay, let me see if there's any questions here. Peter wants to look at CSIQ. Absolutely, let's look at CSIQ. Canadian Solar, let's see. Now, if you're asking for a symbol, please, if there's a specific time frame you want to look at, let me know. I just happen to be on the weekly. I'll go back to the daily and so on. But you can see that here, if I look at this chart quickly, there's really only one, maybe two opportunities that I would consider taking. One was down here, right here, where this, the 20 had started to slope, and we were looking like we're taking out a few of these highs, right? The other one was here. This was the obvious one, right? Look at that slope. You look to your left, there's nothing but blank space, clear sailing ahead, and boom, there it is, right? There's also a few here to the downside, but overall, when you see a choppy chart, the best thing to do is flip to another chart. You want nice, clean, trending charts. Here's the daily. There are definitely opportunities at times, no question. There's also a lot of periods that you do not want to touch. Okay, I hope that helps, Peter. Let me see. Who was it here? Neil wants to look at oil. Absolutely. Let's look at oil. Oil futures. Now, this is the daily. So quickly, you look right here to the right. What do you see? I see a flat 20. I move on. Right? There's no point in wasting your time here. This is flat. It's been going sideways. Chances are it will continue going sideways, right? Can we say we have a trend here? Even if we use basic technical analysis, right? Can we say we have higher highs and higher lows, or lower highs and lower lows? No, we do not. So there is no trend. Don't waste your time. That is what we call dead money. You put your money in there, and the best you can hope for is to break even, right? You're asking to take a loss if you do that. But in periods like this, back in here, there's a win for you, there's a win, etc. Now, if you get into a trade, say here, and it just takes off like this, it doesn't mean you have to wait until it gives you an exit. Yes, overall, longer term, if you just follow that, you will you have way more winners than losers, okay? And your winners will be bigger than your losers. That's the whole thing we're trying to achieve here. But when you get a gift like this from the markets, you can scale out, okay? Absolutely. You can take profits. When it moves away from that 20 like that, chances are it snaps back. So there's no way to predict the actual top. There isn't. But, it's a good problem to have, right? When you have a move like this, anywhere you get out along here is fantastic. I think he also wanted to look at the dollar index, which is, to me, probably the most important chart to watch in the markets right now. Now, this is the daily chart. And here we are. We're starting to roll over for the first time in a long time, right? Now, we did briefly here and here. And so it may quickly bounce and go back up. But in my opinion, the only way equities have a chance to sustain a longer term uptrend here is for the dollar to weaken. But I highly doubt that'll happen, only because the Fed will continue to raise rates. They've said it. They've followed through on it. They continue to say it. I seriously think we're going to see more dollar strength here coming up soon. So right now, it's trading lower. If this were to turn, okay, and you still had a slope lower than the 20, you do not want to jump in on the dollar. You want to wait for a slope because, again, you have a slope higher, boom, re-entry, boom, another one, there it is. This one, there it is. So you don't need to get in at the very, very bottom of the move, right? Nor do you need to get out at the very, very top. That middle 60% can make you a ton of money over time if you just focus on the ones that put the odds in your favor. And that's what you want to do. Time frame you use, whether it's the weekly, look at the weekly. How easy is that to trade and stay in, right? This is what we're talking about. And you can, look, we can go to the monthly chart. If you're more of an investor, okay, if you're, you have a full-time job, you're raising a family, you can't sit in front of your computer and watch the markets all day, right? You don't have that luxury. So you have a retirement account that you're managing and so on. You just want to put your money to work and go off and do what you want to do. The monthly and the weekly time frames are the best for that. Let me show you a few charts. Costco being one, right? Look at this. Look at this. Okay. So Costco has been in a long-term uptrend going back to, like, let's be generous and say 2011 here, right? And look, if you draw a line across these highs, right? I should put it a little lower, but let's do it this way. Okay. Once it broke here, every pivot high along the way was an all-time high. So every one of these setups, when you looked at this, like, think of taking this one, we say, do we have slope on the 20? Yes. Is the price near the 20? Yes. We look to our left. Is there anything there? No. No brainer trade. Easy. Boom. It pulls back a little. It tells us to get in again. We go through the same exercise. It's close to the 2020 slope, and we look to our left. There is nothing but blank space. Beautiful. I'm in. Boom. You get another one. And it goes on and on and on and on. For years, you could have been in this all the way through. You could have been adding to your position. As an investor, this would have made you a mint, right? Let's be honest. And how easy is that to follow? Now, not every chart is this clean, and you don't know that ahead of time. But if you just follow those rules, you will be right way more often than you're wrong. And that is the key. And when it starts going against you, it gets you out quickly. Okay. We don't talk about this enough, but the safety net built into this, with getting that change in color quickly when it goes against you, makes sure that you preserve most of the profit that you have. It's not, you get in, you make a nice move, and then your exit comes in down here, and after you give it all up. We get out of there very quickly. Why do we do that? Because if we're wrong and the trend continues like we were here, we just get back in. That's it. Commissions are irrelevant these days. They're so inexpensive. It's completely irrelevant. Not something we need to be concerned about. So you can get in and out, not a problem, right? Well, questions come in 1 second here. Let me see if I can read this. Lisa saying, can you please look at ticker PVCT? I believe it is. Sure. PVCT. On the pink sheets, let's see. Okay. And she says, I'm most interested hourly, daily, maybe also weekly, and OTC stock. Okay, so Lisa, here's the thing. When I look for trading opportunities, one of the best ways to make sure that you're in the right trade is to make sure it's something with volume, right? Something that's very liquid. So if you're going to focus on pink sheets and so on, there are definitely stocks in there that are liquid, are what we call in favor at the time, right? That a lot of people are focusing on. But there are also many stocks on the over-the-counter market that are illiquid, right? Just don't get enough action. And when you see this kind of thing here, now this is the monthly, so I'll change time frame. But if you were to see something like this on the daily time frame or on an hourly, you want to avoid it. There is nothing here except for these signals in here that we would take, right? Nothing else. It's all flat. It's all chopped. That's where you're going to get chopped around. Now, we go to the daily. You see this? This is telling you there's no volume on this. You don't have to look at the volume to know this. This is very choppy. It's messy, right? It's not clean. If you try to ask yourself, is there a trend? Is there a clean up trend, a clean down trend? No. So what this spells out to me is risk. You want to make trading safe. Okay. Listen, we as traders make trading difficult on ourselves to begin with. We're the ones that have the emotional baggage, of previous losses and all sorts of other things that we bring into our trading. And these mechanical systems are meant to try to help us keep those emotions out and just follow what our charts are telling us. But you look at a chart like this and it's telling us, even though I'm telling you we wouldn't use the victory indicator this way, but look at this, out, in, out, in, out, in, out, in, out, in, right? You can't make sense of it. So I would suggest you avoid something like that. But you don't have to avoid the OTC market completely. You don't have to avoid biotechs or anything like that. You just have to get into or focus on stocks that are going to give you an opportunity. This, when you see this, deciding to get in like this, you should expect more of the same. Okay, so not one I would touch, unfortunately. And looking back, you could see that it wouldn't have worked out well here on that one. Let's see, slow. Okay, Ed is saying if slope is so important on the 20, what would you use to calculate the slope now? How many periods are best for? I'm sorry, I'm trying to read it. Like it's hard to see for moving averages. I think you're asking about the degree of slope. If I understand correctly, let me know if you meant something else. Let me just bring up a chart of Microsoft, for example. Let's go back to the monthly for a second. Here's a perfect example. So for the longest time on the monthly, if you're an investor looking at Microsoft, for the longest time, it was completely flat. So whether it's OTC, whether it's, big cap, medium cap, small cap, it doesn't matter. If no one is buying it aggressively or selling it aggressively, it is going to just go sideways and you don't want to touch it. Okay. Now, the degree of slope tells us the strength behind that move, right? Remember, it's just a simple calculation. It looks back 20 candles, right? And it averages out the move. So if the 20-period moving average is going higher and higher and higher, that means over the last 20 candles, it continues to go higher. Price continues to go higher, higher, higher. That's the only way that calculation can draw a line upward like that, right? And that's what we're talking about. So the higher the degree of slope, the bigger the move in that direction, right? It's all about momentum, okay? Don't get hung up on the fact that it's just a moving average and that it's lagging and, you know, all the things you'll hear out there about moving averages. What it's plainly telling us is that price is going up if it's sloping higher, and if it's sloping lower, price is going down, and that's really all we want to know from it. And so I don't know. I'm not sure if I answered your question, but let me know. Let's see. Maybe Jeff can help me out with some questions here. There's some pretty long ones. Let me just flip through a few more charts here and show you. Here's TLT, right? The bonds. 20-year treasury. No. And let's go to daily for a second. Look at that move, right? Clearly, we're in a downtrend, right? Top left, bottom right, boom. You have slope on the 20 pretty much throughout, right? Can it get any easier? It really can't. When it comes to trading, if it's difficult, okay, if it's really difficult, because overall it is, there's so many things that we can wrap into trading. I mean, there's the Fed. Their decisions weigh heavily on the market, right? There's employment. There's the political scene. There are wars out there. There, you know, inflation, the CPI. There's like all these things that we can try to understand, wrap our head around, and try to figure out what the market's going to do next based on all those things, right? It's a recipe for insanity. That's what it is. It really is. There's no way, I don't care who you are, how intelligent you are, how much education you have, there is no way you are going to look at all those different pieces and determine what the next move of the market is. If anyone's telling you that they know where the market is going next, it is beyond the lie. None of us know. None of us. Let's just admit that. If you can start there and admit you don't know what's coming next, that's a great starting point. So we have all these tools now that can help us identify what's likely to happen. That's the most we can do, is say what's likely to happen. So we don't care why something is happening. Don't ever ask yourself, why is this happening? Just ask yourself, what is happening? If you look at this chart, you can say, well, the 20-year treasury is just getting annihilated here. Why is that happening? Don't care. Don't care. What is happening? It's getting annihilated. That's what we can see clearly, right? So how do we take advantage of it? Well, if there's a slope lower, we get a red signal, right? We look to our left, and there isn't a whole lot here supporting it. There's nothing down here. We go with it. It's that simple. Okay? I hate to make it, you know, say it's that simple, because we all know trading is very difficult, but it doesn't have to be. We make it difficult. We let all those other stories cloud our mind, you know, cloud our judgment, and worry about, well, do I know enough? Am I really smart enough to do this? Or, you know, what if the Fed says this or that? How is it going to affect this trade? Maybe I should just wait a bit more. Just go with what the chart is telling you. When there is selling pressure, the 20-period moving average is going to be sloping lower, and the price is going to drop. There's more sellers than buyers. It is what it is. And that's the environment we're in here. And you could have taken advantage of this over and over and over again on this stock, on any time frame. Look, I always use Apple as an example, okay? I always use Apple as an example. Let me go on a longer term chart. Apple is probably, from a fundamental perspective, one of the most solid companies out there, if not the healthiest from a financial perspective out there, right? They have more cash on hand than the GDP of many countries. Okay. So if that was the case, and the stock price was a reflection of how healthy that company is, Apple should never drop. The price of Apple should never drop. We should never see a down day on Apple ever, if that was the case. But we often do, like we're seeing now. On the monthly, we have a signal now, and it's not the end of the month. It's still early in the month, so we have to wait till that candle closes. Okay, that's the other thing I should tell you. Whether you're on a 5-minute chart, an hourly chart, a daily chart, or whatever, while that candle is live, while it is open, so within those 5 minutes on a 5-minute bar, and the price is bouncing around, you may see that signal appear, and then if the price drops, it goes away, and so on, while it's live. Once it closes, whatever signal there is there, it's there for life. Okay, there's no repainting, there's no adjustment that happens, but you need to wait for the candle to close. Okay, so right now it's telling us that so far in the month we're likely to get a short signal here. Now there's no slope downward, etc., but it looks like we could be potentially starting a new downtrend in Apple. It's a little early yet to decide here. All right. There's a couple other pieces I want to show you on here, but looks like there's a question that I'm going to try to answer. Sorry, I'm going to move away from the mic to see if I can read it quickly.
I can.
Jeff, yeah, sorry. If you can, there's a link on there. I don't know. It looked important, but.
William wanted to know what's the difference between a dot and an arrow.
Oh, so the dot, they're the exact same thing, except once we're already in a trade, once you have seen the arrow, and the formula comes together again to tell us it's a good time to buy, we identify it differently just because we're already in the trade. So if we were not in this trade and this appeared, it'd be an arrow. But since we're already in a trade, we call that a re-entry. So what that means is if you're already long here, you can add to your position here. If you had missed this one, you can use this as an entry, but it's the exact same formula. So yeah, they're the same thing.
Randall wants to know if this will work well on a 30-minute.
Yeah, any time frame really. And what you want to focus on are the trading opportunities that put the odds in your favor, right? So you want slope, you want the setup to be near the 20. You don't want a lot of support or resistance in your way, right? The same criteria applies, but regardless. Also, I should say, because I know MetaStock is global, anyone not trading in the US but trading on other exchanges, it works the exact same way. So whether you want to, if we look at the Hang Seng in Hong Kong, for example, right? Let's go back to the daily or weekly, right? So here's the Hang Seng recently on the daily, right? Now this is the index, but you can look at individual stocks. It works the exact same way, right? The Nifty 50 in India, right? It works the exact same way. Kind of choppy recently, but had really been moving well the last couple of years. So it doesn't matter what exchange, whether it's a crypto, commodity, name it. Let's look at Bitcoin.
I have a request.
Yeah, go ahead.
For DAX on an hourly.
Let me see. Is it .DAX or?
I believe that's correct. But
this is Kelly. It's actually .GDAXI.
Thank you, Kelly.
Yeah.
GDAXI.
That's fine.
There we go. Thanks, Kelly. Awesome.
Yep.
So this is the weekly time frame. This is the monthly, and let's go down to the daily. There we go. So we've seen a rally just like we have here in New York, right? A nice little rally recently. but if you look at the chart again from top left to bottom right, it's been a tough year overall. But again, which are the signals that you want to focus on, right? Where are the trading opportunities that are not only going to give you potential to make money, but keep you safe, right? Prevent you from losing a ton of money. They're the ones like this one. This one, you see the slope, it was questionable, right? So, and if you look overhead, there's resistance, which did act as resistance and then killed it. So, this one, and now this one on the way up, but there's some resistance there. So, with those training classes that you'll get with the indicator, we will show you exactly how to evaluate one when compared to another. So on any given night, when you run the scanner, right, you're going to come up with numerous trading opportunities. You want to, pick out the best of the best. That's what we'll focus on. So please keep asking questions, but I'm going to quickly show you the other pieces here before I run out of time. If you go to the top left here and click on View, you get the expert commentary. Now, here you'll get this box that talks a bit about trading wins and myself, etc., and the indicator. But it will throw a little triangle here right at the most recent candle, right? Just above the most recent candle. Now, you can move that by either clicking above a different candle or using these arrows at the top of the commentary window, right? And move the arrow along. So let me show you. Let me go to this candle here. Okay. So here I was just above this last red candle here. And you can see it's telling you that we were in a short. But let me show you what happens when I click next. Now it changes the text, right? And it tells you that it's signaling a long opportunity. Notice how the text color matches the trade direction color, right? So it keeps everything consistent. And now, as every new candle develops and you move forward, right, it will now give you an exit level. Okay, so it'll tell you, hey, you want to consider closing your position if it gets below this price. And then, next candle, it'll raise it, it'll change that price, etc. So this is basically your trailing stop. Okay. Now, if you're in front of your computer, you don't have to monitor that. You can just wait for the exit, right? And then exit. But if, say, you're going to work every day, so you want to leave a stop order before you go to work, then you just follow this price, right? Every night you look at it, up your stop loss area, and you move on. So this is meant to sort of hold your hand throughout the whole trade process. Very effective. And for those of you who who trade options and may want some help with options, sorry, this is an index. I should check a different stock. This will give you an indication. Let me just get above a. All right, let's use this. It'll show you which option you might want to consider. Delta, expiry date, etc. So it gives you some guidance there as well. Now, if you click on the letter P in the top left here, the Power Console, and you go to the Explore tab, right? At the top box is where all the explorations are, right? They're in alphabetical order, so you'll have to scroll down to the bottom for all the Vora ones. And what you want to focus on are the Vora Victory and the Vora Victory Re-enter. But now we have one that has the word filtered in there. Those are really the ones you want to focus on, the two I have checked off. And the reason being is those are the ones that are filtered for slope on the 20. So with this scan, you avoid a lot of the flat areas, right? We're only focusing on ones with significant slope. So then you come down here and you select your market. Now, in the interest of time, I've only selected the 30 stocks in the Dow Jones and the 100 in the NASDAQ, okay? And then here on the right, you select your time frame. I'm going to stick with daily for now, but you can do a 1 minute, 5 minute, 30 minute, weekly, monthly, whatever. And then you just click Start Exploration. You'll get this box, and you'll see how quickly it scans those charts, right? Selected 125. We're already through half, 3/4 here, and in no time, we'll be done. And it'll populate if there's any opportunities. So one that came up is match, and then we have a second, the reentry filter, which likely has more. Let's highlight match here. And by the way, you can sort by these columns. Most important one is slope right here. See how it has a negative 9.39? So the negative means it's a downward slope. Positive number would be an upward slope. And anything greater than 5 is what you want to look at. So when you're using the one that has filtered, it's already filtered out anything below 5, either a positive 5 or a negative 5, right? So if we highlight it and click Open Chart, it's going to show us. There it is. So the degree of slope is considered a 9 here, which is pretty significant. And there's our short entry coming up. If we go to the re-entries, which means the circles, we have Baiynd, NetEase, and Heinz here. Again, we can filter by slope, right? So Kraft Heinz is a 10.2 positive slope, right? So if we're looking for a long, there it is. And then these two are negative. Sorry, go ahead.
Oh, I didn't realize that's live. I was like, that looks pretty good. Although I did notice it had a little overhead resistance on the left side.
That's right. That's right. And again, that's exactly what we're going to focus on in the training classes. Let's look at Baiynd, because Baiynd has been dropping for a while. There might not be a lot of support below this. This is a negative 33. There you go. So look at that drop, right? How beautiful was this trade? And now we're getting another opportunity at it here, right? So obviously the box is in the way, but if you look to the left, there really isn't anything there, right? And you can confirm it even further going to a higher time, right? Going to the weekly, etc., and confirm that there's nothing below there, right? And if the daily has it in a downtrend, right? Red bars, the weekly, the monthly, all align like that, even better. But again, this scanner will save you a ton of time to be able to find trade opportunities regardless of whatever time frame you trade at. And remember, all you need to do is focus on the ones that put the odds in your favor. That's how you beat this game, by playing the odds, okay? Don't try to figure out what's happening tomorrow or next week or next month based on, the economy, the Fed, etc. It is an exercise in frustration. Don't do it. Focus on price. Focus on taking trades with trend and momentum on your side, and keep it simple. That's it. I'm going to turn it back to Jeff. I will stay on for questions, but he's going to let you know how you can grab yourself a copy. Thanks again.
Yeah. One question, if you don't mind, before we kind of let you go.
Yeah.
Lisa wants to know if the indicator is based on quantity, meaning volume, or price indicators, and how it works in identifying dark pool orders. In a nutshell, I paraphrased that question. It was pretty long. I think I got. Yeah.
In a nutshell, there are only two indicators behind this. So I've been in this game for a very, very long time. I'm approaching 4 decades now. So over that time, developed many systems, played with many different indicators and combinations. I found too, and when these two line up, you're trading with the trend and momentum. It's guaranteed. There's no other way that they could line up unless they were, in that trend. So I can't reveal what they are, but they are common indicators, but with very special settings. It took me a long time to work with, but luckily came up with the right combination. So it is based on the price movement. That's what I can tell you.
Awesome. And this isn't a question, but it's a comment, and I have to read it. Jamie says, no question. This is one of the best trading sessions I've attended. Easy to understand, excellent tips, great presenter.
Thank you very much. I appreciate it. You know, and honestly, I can't say enough about the MetaStock team as well. You guys have been so great to work with. It was the sales team that actually came up with the name, right, Jeff?
Yeah, it was Bobby.
Yeah.
Which has quite grown on me too. We were like, what are we going to call this thing? And he said, well, how about Vora Victory? And I actually quite like the name.
Yeah, and so I will say, but I know I'm out of time, so I apologize. Jeff's going to tell you a lot more about it. But with this indicator, you're also going to get a membership, a pro membership with Trading Winds, where we get together 3 times a week. We have Zoom calls with all our clients live as a group. And many of our clients have been with us for you know, upwards of a decade. So very experienced traders. And we spend over an hour 3 times a week together. So that's a great spot to come and get your questions answered. We'll get trade ideas, etc. We also send out emails nightly with victory signals, different trade ideas that I'm focusing on. And every Sunday I send out a weekend market recap video as well. And those 2 training courses that come with this will give you a lot more technical analysis information that you can use along with this indicator. So again, thank you very much for the opportunity. I hope you grab a copy for yourself, and I'll let Jeff take it from here. Thanks, Jeff.
It is. I appreciate it. It's good seeing you. Another great presentation note here from just great job. I appreciate you coming in and everything you've done, and we love Victory. So thanks for all the help over the years.
Thank you.
All right, very cool. Let me go ahead and do this. Let me go ahead and do this real quick. And we'll go ahead and show the screen here. Yeah, and as Vince said, you got the Vora Victory method. This was actually our best-selling add-on of 2020. And it's a great add-on. It works really, really well. I use it myself, and it's awesome. It does a really, really good job in identifying trade. So actually, I was wrong though. It was the best-selling add-on for 2021. With it, you get the detailed commentary breakdown. You get those expert alerts. You get the full market scanning with triggers and the re-entry signals as well. And I added, we actually added the filtered scans to just show you the ones that had a more positive slope. So it does a really, really good job. It does include system testing. You can go in and do system testing with it. And as Vince had kind of mentioned before, as part of your purchase today, you're going to get Trading Winds Pro membership included. So that's normally about $97 a month, I believe is what the price on the website is. It's a total of $1,200 for 12 months. That includes, as Vince was talking about, 3 one-hour live group sessions each week, a nightly email with trade ideas from Vince and the Trading Winds team over there, and a Sunday market recap video. So that's huge. We've never really offered that before. It's a $1,200 value. And if you enjoyed having Vince come in and talk to you for just a minute today, what it felt like a minute. I can't believe we're at 9:02 already. How good would it be to get those 3 one-hour live sessions as part of the actual package too? So you're going to go ahead and get that. The normal price on just the add-on itself is $19.97. Here at the conference, we're going to do a special. It's going to be $9.97. You're going to get 12 months of that pro membership, which is worth $1,200. The savings there is about $2,361 for doing it at the conference today. So you get the 12 months pro membership. If you don't have our award-winning MetaStock program, we hope to help you with that. We can give you a free MetaStock real-time trial, which will set everything up for you. Vince and I did, and I think this was in 2021, sat down and we did a boot camp class where we talked about, actually he did all the talking and all the lifting. I just read a legal disclaimer, but 2 very, very good sessions about where to look for support and resistance, what else to look for in addition to the symbols, and very, very thorough. You said it was a fantastic presentation, and you're right. I mean, he just does a really good job in teaching and kind of making everything available. So I would encourage you to set this up again. 12 months of the pro membership with the videos and the alerts and the market recap on Sunday. You'll get the MetaStock real-time trial. You get the bootcamp classes, 2 of them. And I didn't even mention this. You're not going to need it. But if you decide you don't like the Vora victory method, for whatever reason, we'll give you a money-back guarantee on it. So give it a go. Again, it was our most popular add-on last year. MetaStock.com/conf promo, MetaStock.com/sales chat, and then 800-882-3040 for the phone number there. Gregory says, can this be used with end of day? Absolutely. Actually, for me, and this is going to go on a little bit of a side note, I generally run my scans right towards the end of the day, and I only look at them once a day anyway. So you can use it with end of day. Be very, very helpful. And typically with the amount that I work, or at least the amount I tell Kelly that I work, right behind me, is, no, I'm just kidding. Generally with kind of the busyness of the schedule of being in the office and working with the partners and doing a lot of webinars, I don't really get a lot of time to look at the market. So for me personally, I can go in and run my scans and decide on what I want to trade in, and then I can get back to work. So again, the number there is 800-882-3040. MetaStock.com/conf promo. If you have other questions, I think we answered all of the questions, but if we miss your question, I apologize. We have a lot of people in the room. Make sure to chat online with MetaStock.com/sales chat. We have a staff that's ready to answer those questions for you. So there you go. We did talk about stocks and commodities, and we appreciate them sponsoring. CMT Association is also a sponsor of our events today. We do appreciate that. They've been working with us for about a year. They've been great partners. I love working with them. They do an accreditation program, and you can find out more about them at cmtassociation.org. They're a great nonprofit organization that you can work for. So there you go. Sterling says, thank you. I was looking for the MetaStock platform. Good. I hope you found it. And I hope you start a trial. I hope you like MetaStock as much as I do. I wouldn't trade without it. And again, we're doing a promotion here where if you pay for a month, we'll give you a second and a third month for free. You can do that at metastock.conf promo too. So we're running just a minute late, about 6 minutes late actually. So let's go ahead and get on to another good friend of mine. Rahul Mohindar is a person that I'm going to introduce now. He's actually one of the partners that have been with MetaStock for, I think, 25 or 6 or 7 years. I know he's been a partner of MetaStock for about as long as I've been an employee with MetaStock. We love Rahul. He runs a teaching. He runs a company in India that trains people how to trade. Has several offices. He's helped many traders over the years. He talks on CNN India and CNBC India. And actually, when he's done talking, I'm going to talk a little bit about his RMO method that's built in MetaStock, because it's one of the first methods I actually started trading with. So this guy, we love him. Rahul, let's go ahead and bring you on here. How are you doing today?
Hi, Jeff.
Hello, Rahul. We can hear you.
Okay, that's great. Well, thanks,
Yeah,
Jeff. I'm doing great. Yeah.
How many years has it been? Is it 26?
Tough to count back, but yeah, I reckon about that. Yes.
Okay. Yeah, I had to do the math for myself too. All right, Rahul. Let's go ahead and get your screen shared. All right, I can see your screen.
Perfect. So let's go ahead and
great.
dive right in.
Yeah, I'm going to get out of the way. It's all yours.
Thanks, Jeff. I know we're pressed for time today, but appreciate that quick and meaningful introduction he gave me. But friends, just to give you a little bit more knowledge of what I do, who I am, besides representing MetaStock in India for over 2 decades now, I have practically been a real-life trader. I trade stocks, futures, options, currencies, all with I own money. I don't manage other people's money. I'm not a stockbroker. I'm not someone who makes money off giving you recommendations or advisory services. So, just to get it out of the way and make it clear to you, I speak to you from the heart and soul of a trader, an investor, someone who puts his own money on the line. And I think that's where you and I would resonate, that my business is not just putting stuff out there, but to show you how to make money with the tools that we have. And not always do you need to keep upgrading the tools, and not always do you need to keep changing the tools or exploring newer and newer tools in the effort to find a holy grail. I say that, look, if we master one or two things correctly, that sometimes could be more than sufficient. Having said that, the RMO ATM is definitely one of those top add-ons out there. It stems off the inbuilt RMO system, which came into MetaStock, probably more than a decade ago, I reckon. And I think people have loved the ATM. People, even till this date, have seen the curve of growth and development that we've put in the RMO ATM 3.0. We've literally done an upgrade every year. And mind you, if we do an upgrade, it's a meaningful upgrade, something that adds a solid new tool or a scanner or a screener. And I think we've broken a lot of ground here where we don't leave a lot to manual approaches. The best thing about the Armo ATM add-on is uh, it takes you to a level of scanning and a level of system which doesn't depend on the human sentiment or the human touch or the element where you need to put in a value or you need to draw a line. So it takes out subjectivity, and in a way, I've taken away a bit of that emotion out of the trading, which definitely helps a lot. So let's dive in with first the basic RMO. And today's session is centered around the fact that we're going to do the RMO2, which is part of the ATM suite, and the RMO super filter, which is again part of the ATM suite. So you'll see the three different variations of the RMO system. And if I have time to touch on a few other things I love using, I'll definitely put it in. But again, we are pressed on time, and I will try and do my best to give you stuff which you can immediately use to come to you with concepts which are real life practical, probably with as up to date examples I can give you. And I think that's where I'd like to take it off from. So to start with, the first thing which we look at when we load the RMO template, and again, this is the inbuilt RMO template where you right click on MetaStock, apply template, and choose RMO trade model. So this is the inbuilt template I'm first discussing, not the add-on. And this is with every one of you who has a working copy of MetaStock today, be it end of day, be it real time. And you can see I've even screenshotted this from a very old version just so that you're sure that you do have it. Doesn't matter whether you're on 15, 16, 17, or 18 in terms of a version number. So let's start with the cell. And the cell is three concepts very simply. It's about bar colors, which are red in color, which are negative, arrows, which are the short term signal, and a negative RMO. Now, let's quickly break up what these three mean. What is the RMO trade model as a system? It's about blending in three very important elements: short term, medium term, and the long term. What we want to do is we want to trade when all these three align, when the short term is aligned in the direction of the medium term and long term, when the medium term is aligned in the direction of the short term and long term, and when the long term is aligned in the direction of the short term and medium term. So there's a perfect alignment that I'm looking for, which means I am in a situation where I will not get these signals very often, but the idea is to get more crackling signals, signals that are worthy of a true trade, and that's what I'm aiming for. So the first thing I'm going to look for is the arrows. And let's start with the arrows because the arrows represents the short term and they spring off two indicators, which are the swing trade 2 and 3 indicators. And when they crisscross, that's when you get the arrow. Now, you don't need to worry about how these are being generated. I think what you and I are talking as today and the way we are interacting today is trader to a trader, investor to an investor. How do we apply and make money off this? So an arrow will always appear first, which is why you see the red arrow comes up first. And then you have the red colored bars that come up, right? So red colored bars, the bar colors are the medium term trend. The arrows represent the short-term trend, and the histogram on top, which is the RMO, which stands for Rahul Mohindar Oscillator. That is my longer-term or primary trend. Why have I drawn a vertical line at these 3 points? Notice that these three vertical lines that I've drawn, they have a perfect alignment of a red colored bar, an arrow behind it, and the RMO negative. So I've looked at all three elements, red colored bar, got an arrow on it, and I've got the RMO negative. Now you could say, why have I not marked this? I could definitely mark this as well. I could mark this as well. So anywhere where you have a combination of all of them, you can certainly go ahead and mark it. What is the most relevant is this first signal, the first time when blue bars move to red, the first time when the RMO moves from a positive to a negative zone. So in other words, this is truly my first breakout. This cell that we see in August and September, the vertical lines that we see over here, these are what I call add-on or secondary signals. These may be taken as an additional input, an additional trade, but these really come in as second and third breakouts. They don't fit in as the first breakout. So if you're really looking for the most optimum point to trade or the first setup to trade, it is going to be where you have the first alignment where you shift from a positive oscillator to a negative oscillator if you're going short. So to recap, we're looking at the arrows, which is the short term. And mind you, the arrow will come before, can come before. No worries on that. The bar colors may change later. The RMO may drop. So it's about when these three align. It doesn't mean that all three must align on the same day. That's not going to happen always, right? That's probably going to happen more in the add-on signals because you already have everything aligned. So when it's starting to bud, you might start with an arrow, then move to a color, then the oscillator dives in. So doesn't matter if it's a fragmented signal. It may take 5 to 8 bars to even mature, and that's good enough. Where do I sell? I'd like to sell below the low. It's simple test of weakness. If I'm calling this a sell and a change of primary trend direction, I want to make sure that the low of this bar is broken, and that's when I want to go and short the stock. And I'm going to keep a stop loss at the immediate turn point or pivot point, which I have over here, which in this case represents this high. So let's be clear that I'm looking for an alignment of three, even when I'm going long. Notice here I've got blue bars, buy arrow, positive RMO, pretty much very straight cut rules. Here too, the arrow comes in, the buy arrow comes in February or end February. I move to a blue bar in March, and then I wait for that RMO. Now you look down on the ribbon on the x-axis, that suggests to me that the RMO has turned up. So this is a great way to look at it through the expert advisor, because the expert advisor is marking this ribbon for you at the bottom of the chart. It doesn't need you to keep the oscillator open, because I can understand that screen real estate is a precious thing today, because you may be wanting to look at multiple templates or multiple stocks or watch lists, and I totally understand that. So I think we've been very efficient here by giving you this access at the bottom, which means when I look at this chart, the arrows are the short term, the bar colors are the medium term, and the ribbon at the bottom represents that RMO oscillator that I was looking at, right? So just in one glance, I'm able to look at that. So the first vertical around end of March is my buy, and towards April is where you get a second buy, which is more like an add-on trade. Now I keep getting the question, can I trade an add-on? Well, of course, that's why it's called an add-on trade. But again, do you trade it with the consciousness that this is a very, very fertile signal? Not really. It's the first one where you want to put most of your eggs in. It's the first trade where you want to put most of the money on and take that with more importance. So given a choice, if you run a scan, and the beauty is we do have integrated scanners, which give you a steady list of which are the stocks that meet all three criteria for a buy and a sell, or buy or a sell, and they come to you ready, you would like to choose the ones which are a first breakout versus the ones that are an add-on breakout. So often when you keep looking at various indicators, what happens is you confuse yourself. You start drawing lines, you put moving averages. Someone says put a 13-day average. Someone will say no, put an 80 period. Someone says put a 200 period. There's a lot of confusion. And I think what I tried to do with the RMO when I developed it, and mind you, I did develop it for my own trading really. And when I developed it, was totally around the fact that I want to stop using so many indicators and I want to simplify my chart with removing all the averages and all the lines which I was drawing, all the patterns, and get something which was more aligned to my long-term trend. So remember one thing: we're not trying to catch every trend. We're trying to catch every trend in the direction of the long term. So here, for example, you may feel that, okay, I've got a signal to sell over here, and mind you, I've marked the dotted line, the blue dotted line, because that's the point where the RMO turned from a bullish to a bearish. And mind you, that happened just for one single day. And this is where I'm trying to caution you, is that there's no point trying to sell this so deep, because A, the stock's fallen too deep. And now you may say, how deep? You remember I said the signal may take 5 to 8 bars to mature. But look at this. The arrows come in here, the red colored bars come in here, and the RMOs come in 5 or 6 bars after that. So in the whole process, we've done through 30 bars of just a signal maturity. And it doesn't matter if it took that much time, but the price was around the same. You had a lot of price distortion. I can understand we took 30 bars here and we were sideways and then aligned. But here you had a lot of price distortion. So anyway, this doesn't make financial sense to do because of the fragmentation of time. Besides, it does not break the law. In other words, whenever you get a sell, if you recollect the rule I just mentioned a moment ago, was sell below the low, test the weakness. If it doesn't breach the low, don't trigger the trade. So keep in mind, we're not just looking at, okay, we've got a buy set up, we're buying just because we have it. We're going to buy above the high, right? Or sell below the low. Keep that little test of strength and weakness. So first or add-on is an important concept, which is something we all need to filter. You need to try and give more weightage to those first breakouts. And just to remind you, the first breakouts is the first time when the RMO turns from bullish to bearish, or the RMO goes from a negative region to a positive region. That switch, that first time switch of that histogram, that's where I'm going to draw some attention to. Trigger with a filter. So I say buy above the high. Give it a few ticks above the high. For example, if it's a daily chart, you might want to say that I want at least one hourly bar to be above that. I want 1 hour to be trading above that high. So trigger with a filter, whatever filter you're comfortable with. There's no hard and fast rule of, but all I'm trying to say is if you're trading $150 stock, you're not going to say that if it goes to 150.01, I'm going to go long. No, that's not the way you do it, right? You want to wait for a couple of minutes. You want to see it's definitely at 150 and higher for a few moments, and then only trigger that trade. So trigger with the filter. Again, I'm fine tuning from a practical standpoint. You want to stay disciplined with the rules because as much as I may say it, and I think we all realize our greatest enemy today is our own discipline. And I think that kind of resonates in anything we do in life. We all know how to get things done, and we all know the method usually, but we're not disciplined about it. Whether it's our health, whether it's something we want to try and achieve, we know the route to achieve it. We know our goals. When you have everything defined, our greatest enemy is our mind, where we try and waver off. And how can I give you an input? It's easy to say stay disciplined, but again, I'm talking to you from a real life person who puts his own money on the line. And mind you, I trade US equities, Indian stocks, Chinese markets, Asia Pacific, as a rim right up to Australian equities. So I've done quite a bit of that, and I keep doing that as I speak. It's important that you isolate yourself. So a lot of people say, what if we come together, and we discuss stocks as a group? Join a trading room, join a social media circuit where I keep exchanging ideas on stocks, watch newsletters. I'm someone who believes to the contrary. Why don't you just work with one chart and one indicator? Why don't you work with just one or two templates and focus on that? You don't need to go beyond it. For example, the RMO system, you got short term, medium term, long term, all intertwining for you. You don't even need to look at multiple time frames. Because what happens is you buy a stock looking at a 5-minute chart. When the time to stop it out comes, you look at the daily. We don't want to do that. Don't switch your time frame. Don't switch your method. Do the same stock, the same rules 10 times in a row, and then tell yourself that you're 7 out of 10 correct, right? Work that way out. Don't keep changing the equity. The problem is, you trade Baidu and that goes down. You say, okay, scrap it. It's, we're going through turmoil. Let's switch. Let's look at gold. Then gold doesn't work out. You switch the stock. So you never really realize your true strike rate. Yet, if you read the last 10 trades on Baidu, you pretty much see that, wow, I could be short on that stock and make a lot of money. So it's about consistency. It's about making an environment for you where you're not glued to the TV. I may appear on various media channels. And again, I don't keep a television set or access to the TV when I trade. I think it's something which would make me indisciplined to watch the TV and watch newsletters and read different trading tips during the market. Not my cup of tea. In fact, I wouldn't even like to read a business daily for that matter, because I think it's all in the price. If you really believe in technical analysis, if you remember principle number one of the Dow theory, price is supreme. Price discounts everything. So literally, good fundamentals make good technicals. And the news is factored in. The inside information is factored in. Price and volume is a wonderful representation. Now, I also use a bit of Fibonacci. Of course, today's session will not allow me to get into Fibonacci, but just to give you a ballpark, whenever you're looking at a first breakout, getting past the 0.618 retracement is an added advantage. The 0.618 retracement level is a key resistance at times, and when we split that through, go past it, it reconfirms the trend. Volume as a confirmation, I'll try and trickle into this, but volume, whenever you get a first breakout, look that I've got above average volume. If you notice, we've not plotted the volume here, but when you apply the template, you will get volume by default at the bottom with a moving average on it. You want to at least see that you've got some signal the first breakout with above average volume in and around it. You don't want to be trading stuff which has under average volume, because you don't have a primary trend breakout without money, without volume, without interest, right? So these are the ways that you can refine that inbuilt RMO system so well. Focus on that first breakout, figure above the high if it's a buy, sell below the low if it's a sell signal. And as I said, create an environment where it can help you stay disciplined and bring in volume as a confirmation. Now, if you have the ATM, which is an add-on we have, you have these integrated buyers and seller scans. So you don't need to worry about running, okay, let's find the ones with a new arrow. Then within those, find the ones which have a blue bar. Then within those, find the ones which are bullish. Well, of course, you can run 3 scans together and then kind of simulate things. But very straight cut answer for you, if you're trying to look for the first breakout or an add-on breakout which has all 3 aligned on the current bar exactly, you need to be running that integrated buy setup and integrated sell setup. Those 2 scans will do a wonderful job. I will just dive into the super filter, but to give you a heads up, what is ATM RMO super filter? It's the more refined version of the inbuilt RMO where it customizes to the stock. So I'm going to come to that shortly. But those are the scanners. And we also have a power screener, which is built in, where you can run this as a separate application and get the voice alerts, email alerts as and when these signals happen. So this is an external application which works off the MetaStock API. And if you have real-time data, it works live. If you have end-of-day data, you do need to configure which path you have your data downloaded, but it does the scanning for you. So what's the advantage of a power screener? You don't need to manually run a scan. You don't need to remember that I must run the scan. You cannot forget to run the scan. It always is running. You don't miss a signal. So that's the whole idea. It doesn't depend on you. It just needs to be open. So as long as the power screener application is open, it is running, gives you an alert as you get a signal. And that whole situation is, oh, I missed it and I didn't spot it, will never happen, right? So if you look at theory, even a simple study like trend lines, I love the one on the left where we say, look, you've got this perfect, rising tops and rising bottoms, peaks and troughs, and you draw the line and it's beautiful. But when you look at the real world of trading, you have crazy announcements, you have gaps, you have jagged price action. You say even an uptrend is so wacky at times that there's no question of drawing a line. You keep wondering, where do I draw that perfect line that I read about? So markets have become more dynamic, and let's accept it. That doesn't mean that we can't trade. It means that we need to have more dynamic tools. And this is where I kind of dive in and say, that's what helped me create this whole concept of the ATM add-on. And in the ATM add-on, one of the most recent updates on the ATM add-on was the super filter. And the super filter is an amazing little thing we did. And whilst I may use the word little, I think it would be injustice because we've married so many things into the super filter to refine the RMO itself. Now look at this chart. This has four colors: a light blue, a red, an orange, and a dark blue. The light blue and dark blue indicate the quality of the trend, the orange and the red. So red is the strongest form of weakness that you see over here. That was the sell. Orange is milder. So, you were red here and you move to orange. You understand the pulse. And then you go into a blue. Light blue over here indicates that, you may be petering off or you're not as solid as a dark blue. So whilst light blue is bullish, it doesn't indicate complete strength. Dark blue, for example, here is complete strength. So if you have to align up and say, okay, I want to look for where I have dark blue and the arrow and the armor, that makes so much more sense. I want to look where I have dark red. So, before we just had three colors. We just had the color of red and blue, which we were relying on. We couldn't really define ourselves. So, we need to understand it's from two colors. Uh, we move to four colors, and those four colors help us understand light blue, dark blue, orange, and red. And that gives us a very good sensitivity as to where that quality of trend is. For example, look at this portion in the middle of the chart where you have the RMO, right? You see the RMO goes negative, positive, negative, positive. You had a bit of an up and down. But what's the color on the bars? The super filter is denoted on these bars. It's red or orange. Red or orange means what? It's bearish. So don't bother if the RMO went up, but this guy is orange. So this is very important. It saves you. It cleans it all up. Now these bars normally would have gone blue in the original. So what's the difference? Why do I call it super filter and not filter? Why the word super? Because it's customizing. It is fitting in to the volatility of the symbol that you load, right? uh, it's fitting into that volatility. It's trying to find out what is that best fit in terms of value to use for the equity that you're using, and then pasting those colors on the bars, and therefore the colors on the bars become more superior than ever, because they're not just four colors, they're more refined and tailor made. It's like, wearing a shirt or a dress that's custom made. You always are going to enjoy every little centimeter of that dress that you wear or the suit that you wear, because you can see how it's working in line and in tune. So this is what I call refinement. And the good thing is about this optimization is it may not save you every time, but definitely you're doing a much more superior job than just using the pure armor. For example, one recent thing, point would be, the stock of Facebook, Meta. Now, if you look at Meta over here, and mind you, this is a daily chart, around the 15th of August, you would notice between the 10th and the 20th of August, there's this phase where the RMO popped up and went into above zero or positive. These even sprung up to being blue bars on the old system. And look at the new system. If you look at the super filter had it all orange. In fact, right from the beginning of 2022 till today, we haven't had a single light blue bar. And that goes to show that if you were trading Meta on this system, you never ever had a situation, not even one day this year, where you could think of buying. And that just goes to show you a lot. Now you may say, oh, it's a straight line move. No, it's not a straight line move. The patch that I showed you in June, July, August was absolutely choppy and sideways. It stuck between 160 to 175 for weeks and weeks and weeks. And that's the place where it handled itself so beautifully, right? So all you could do is really sell the equity and just focus on being on the short side rather than looking at going on the long side. So there's this refinement which comes in, which is where once you start using the super filter, you smoothen out the data. So you can sense transition so much better. So if you just look at this chart, it's so easy for me to bifurcate. Okay, this left phase is all the bullish phase because all I have is light blue, dark blue bars. And on the right or towards the end, I have all red bars. Now, I often get the question is, can I start my trade because I've got a red bar? Because notice the red bars come in earlier, even before the RMOs turn negative. The RMO turn negative much later. And this is a common problem because a lot of users feel, oh, the RMO will lag. It's going to take a little time to turn. So this is where the super filter comes in very handy. The super filter does have the ability to become fast if it needs to become fast. The super filter can slow down the indicator or speed up the indicator. So don't think that the super filter equals to a faster RMO. No, that's wrong. The super filter equals to a smoother and a more refined RMO system, which will help you speed up when you need to and slow down when you need to. For example, over here, notice in the months of November, December over here, you had a lot of movement between RMO going negative, positive, negative, positive. There were 5 or 6 curves. You look down at the x-axis, you can see over here there's a lot of negative, positive, negative, positive. Because it's 2 days positive, 2 days negative. All that's happening over here. But when you see the bar colors are blue, so in other words, the indicator slowed down, the super filter slowed down and just helped it stay blue. So you can see it was slower over here so that it refines it, and it was fast over here, so you get that earlier signal. And mind you, these signals, these arrows that occur, they don't change. Whilst I call them optimized, unfortunately, there's a dearth of systems out there which use the word optimized and adaptive, but they change the past signal. Here, my friends, if you've got an RMO cell or you've got a red colored bar, we're never going to delete that. It's going to stay, it's there to be there, it's there not to be changed. So the optimization happens every time you load it, but not at the consequence of changing the signals that have already been displayed. So that's the good part about it. So whilst the optimization is a continuous process and an everyday process, it does not change past signals. And I think that's one of the things we have to appreciate in the process of optimization. So here again, if you look at the dark blue bar, we've got a signal nice and early before the RMO went into positive. So you got the dark blue when the RMO was negative. So you can start right there. You got an early heads up that's the point you can start above the high. Now, even here when the RMO went negative, it was still light blue, right? So we're not going to go short. We're going to wait for that red to kill in for you to go short. So you can get a lot more control and save yourself from a lot of these whipsaws where you go from positive to negative. So there are other ways to refine it. You may say, look, I can refine it looking at volume and average volume. So that refinement is already done so well with the super filter. So it makes sense for us to move on to something more progressive, like you see in this chart here. And, I hate doing the comparison because both are tools that I've designed, but I love doing the comparison at the same time because it just goes to show how much we've elevated. If you look in the last 20 or 30 bars, you got this bunch of red bars. And unfortunately, if I went short, it would have made no sense. But here I've got all blue bars, which helped me stay aligned in the direction of the uptrend. So, I didn't have the red bars back here. I didn't have the red bars back in April, May. So it just helps me stay aligned in that direction of trend. It saves me from the whipsaw of the RMO as well. So I think this is where I'm trying to say with the super filter, you elevate. And mind you, we have a scanner, a screener, which gives you these alerts where you say, I want the first signal. Even for example, here, the red comes in way earlier. And mind you, this was the crash that occurred, before COVID. COVID was just kind of stepping in. This was February of 2020. And I recall this signal so well because we had a lot of MetaStock seminars. We were traveling around in India and Australia and parts of Asia. And this is where I was telling everyone, look, we got a perfect setup to go short because you got the deep red bar, and 3 or 4 bars later you had the arm also that trickled in, and that's what led to that big drop that we saw just as the COVID pandemic came. So here you are. You got various areas where you can understand that orange and red helps me stay aligned on the short side. So if I have a light blue, I'm not interested in buying. The RMO is bearish. I want to focus on my reds and dark blues for my new signal. So you can really iron out. So this whole square is where I've got that dark red trickling in. and how you can ascertain. So this is the power screen application. This is how it looks like. I don't have time to run through it today, but you can just put in symbols that you are trading. Mind you, this is a very old screenshot, but just more to give you an idea of what this is capable of. Every time you have a new breakout, the word down break will come. If you have an upshift, which means light blue moving to dark blue or orange moving to red, those are also highlighted for you. And you can run it on a custom stock list. You may have stocks of your choice. You can run it to intervals of your choice. So SF is super filtered daily. This D is the daily. You can of course say I want to run it on a 5 minute chart, or I want to run it on a 30-minute chart. It's up to you. You can put in a time frame you are trading, you want to track, and it's going to update for you live and give you those scanners. So more and more examples of how this dissects and filters. So again, why this example? Notice here the RMO went from positive to negative to positive. If I can save you off even half of those bad trades, here it's been blue all the way. Even at one solitary red that came, the low is not taken. It just goes to show the alignment of trend, the smoothing is so elevated. And now that you're a must on the trend, let me just dive into the trend decider. This is another indicator we include with the ATM. Another absolute beauty. If you have learned how to read the super filter and you can combine it with this trend decider suite, it's just amazing because giving you a sneak peek. This is QQQ on the 30-minute. Of course, it's not fully up to date, but it goes to show, if you look at the point where green is the trend decider daily, red is the trend decider weekly. The moment the green is above the red and the price is trading above it, that's a buy, right? Notice the green just continuously was above red. Over here, the green slipped below, but the price slipped below, but low is not taken. So you can see this on the x-axis. It's bullish all the way through. When it turned bearish was here. Why? Because here's where the green slipped below the red, price is trading below both, and the low is taken. So you got bearish. So even now, as this market rallied up, it still was in bearish mode. Of course, this is not fully up to date as of yesterday. That is, you could see, the whole month of September, October, November is virtually in front of you. The last 3 months, you can see how beautifully 5.6% moves from that sell point. You got this big drop, you got the big rally up, you got the big drop. So it helps you stay aligned. You'll really become a master in terms of saying what's the trend with that super filter and trend decider. Trust me, if you can learn to read the RMO super filter with the trend decider, you have really done yourself such an amazing job in terms of trend detection. And I can bet you there's hardly any indicator out there that can deliver what this does, because mind you, this updates every week and every day. The trend decider weekly updates every Monday. The trend decider daily updates every day. And this is the best momentum tool that you could use, which is not really like an oscillator. So it's a beautiful marry that you could do the super filter along with this. You can go places. For that matter, look at NVIDIA. And why NVIDIA? Because this bucked the trend. Whilst the market hasn't been perfectly straight line, October to November, NVIDIA has been up. And you can see early NVIDIA was bearish. You can see that on the x-axis. When it turned bullish around 17th of October, it was price traded above the trend decider daily and weekly. That's bullish for the day, bullish for the week. And the green line is above the red. So in other words, trend decider daily is greater than weekly. You have that beautiful rally that kicked in, and it stays bullish all the way through. So mind you, even if I close below both, somewhere in that 3rd or 4th of November patch, doesn't matter because the green line is still above the red. So this whole alignment which I'm teaching you is already programmed into that x-axis. So if you can learn to integrate just one or two trend tools, as I was telling you, you don't need a plethora of time frames or a plethora of indicators or hundreds of add-ons out there. It's just a crowded space, unfortunately. The way trading is getting is, everybody wants you to get more and more in terms of looking at more charts, more indicators, more time frames, more software. And I'm trying to tell you, try and consolidate. Even when you buy the ATM suite, it's really 7 core templates. We're not trying to go beyond 6 or 7 core templates. The whole idea is let's work with that and solidify that, because already it's optimized. It's easy for someone to say, okay, I'm going to give you 100 tools, you do the carpentry, you do the artwork. It's like giving you a box of paints and telling you to paint, right? Whereas here, this is virtually outlined the painting or you given you the color scheme and you just have to be in execution. So look at it from that perspective. The, the efficiency that you're moving up with optimized tools is insane. So that was a sneak peek on the ATM trend decider. So what we did originally was the inbuilt RMO. Then I walked you into the super filter. And now I'm taking you into the RMO2 plus and RMO2 minus, or in simple words, I call this the RMO2. So it identifies the trend for you with a lot of clarity. It helps you set up for options because I know a lot of you people love trading options. And I think even if you don't trade options today, you might be hearing a lot of the jargon and you're tempted to trade it, but don't know exactly how to, follow through with it. And I think the Armor 2 is a great place to start. So I think the first piece which gets a little difficult when we do options trading is should I buy a call or should I buy a put? Again, I'm not telling you to do naked option writing. I'm not telling you to sell options because that is like carrying, unlimited risks. So I'm just talking about buying options, buying a call or buying a put. Very simple. You buy a call when you're bullish, you buy a put when you're bearish. When do you think buying a call makes sense? Buying a call, of course, makes sense when you think that the market's going to go up. And of course, buying a call makes sense when the call is cheaper. In other words, when it's lower in price. When do you think a call is going to be cheaper? When the market is dropping. So, can I have a tool which tells me to buy a call when the market is dropping? Can I have a tool that tells me to buy a put when the market is going up? A put is when you think the market is going to move to a newer downtrend. So this is what the RMO2 aims at doing, not just trend detection. So look at the two verticals to start with. These are the two trend points. And these are the 2 points where you can see that the RMO2 plus is the blue line, the RMO2 minus is the red line. If the RMO2 minus has gone to a level of -1, which has happened here, you will say below the low of this bar, which is when this fires, I'm moving into a downtrend. Likewise, when you have this going to a +1, when you have the blue line going to +1, you say if I cross the high of this, the trend is up. So every time I have a pullback to zero, like this, a pullback when the RMO2 negative pulls back to zero, buy put options. So when you buy puts over here, the market's going up, it's curled up 3 or 4, and you're going to be buying puts over here. And when you buy the puts, look at the timing. The next 10, 12 bars, you've visually seen new lows. So presently, we're in a stage where you say buy calls. The last 3 or 4 bars dropped, and you're now in that mode of buying calls. So put are bought when the market goes up, and the are more minus. So what's the stop loss or what's the risk when you buy these options? Of course, you're limited to the risk as to the premium that you pay. And if you're very worked up that okay, you don't want the premium to become completely zero, you can definitely see in case the RMO2 for any reason goes into a positive mode. In other words, let's say you went and bought puts here and the blue line flicked up, you would be ready to, exit. For example, here, this may have happened here. You got into puts over here. This went to a value of +1. You say, forget it. You don't really lose too much. But the point is when you win, your win ratio is extremely high, right? So if you look from a risk is to reward, is it a 1:1, 1:2 kind of ratio? Yeah, you have an amazing risk is to reward ratio. So don't chase, hit rate. So even if I've got 6 out of 10 correct trades, the point is the 6 correct trades are delivering me $2, and the 4 bad trades are taking away $1. So that's where the math totally scales it in your favor. So if you do options, the biggest thing is direction. And here we're going taking a directional trade. We're buying an option, not doing a complicated strategy. In fact, the first time I started reading about options and I went into a couple of these seminars in the US, I've attended all those fancy courses, the $10,000 and $20,000 courses in my quest, right in my teens. And all I understood was after all the butterflies and insects that were discussed, the biggest insect was what do you think is the direction? If you could say that the direction is down and I can expect in the next 10 to 20 bars to see a new low, that's what you were really looking for. And I think this is where, I have seen that options work best. Now, I'm not trying to say people can't trade based off the volatility. I have much respect for those who are doing those hedge strategies and trying to combine various combinations, calendar spreads, or various kind of straddles and strangles, trying to trade the volatility out. But those volatility based players or hedgers are hedging, which means their first intention is capital protection with a secondary goal of profit maximization. That's what you call a hedger, or someone who's trying to take a bit of a protective stance. Here, I'm going directional. I'm taking a clean stance. I'm buying a put with the hope of a new low. I'm buying a call here with the hope of a new high. So if you look over here, if you want to go directional, you can see when this goes to -1, chips that low out, you want to go long. Similarly, if you want to add more weight to it, you can also use what we call the zone detector on top. For example, this buy that you get over here, where the RMO2 goes to a value of +1, the zone detector is at a value of 0. And mind you, the zone detector is telling you if the market is dormant or active. Sometimes you get a signal where the volumes are too low or the volatility is too low. You may ignore this kind of a buy, right? So if you get a sell over here and you see after that it's gone into a +1, that's fine, right? For example, here this sell is a good sell because it's hyperactive. So we get into explaining these various concepts to you as you get the add-on. We have a masterclass series. We also have one-to-one training that we deliver. We have a lovely manual that's put together where we explain these concepts, and probably within a week or two, you would be well versed with the way the studies work and work with these few core strategies, the 6 or 7 core ATM strategies that you want to be doing. But to simplify, the RMO 2 is more designed around that options trader who says, look, I want to buy puts every time I roll back to zero. I want to look at an opportunity. And mind you, every time you're buying the puts, the markets had a bit of a run up, and then you're buying the puts. So the puts are quite reasonable. You're buying a call when the market, when the indicator dips down to zero, you're getting into a call option where the markets had that drop. So the risks are relatively low. For example, here, let's take a bad trade. You came down, came to a value of zero. If you bought here on the call and the RMO went into -1, you just use this bar as low as your risk. So you're not risking dramatically. And that's, as I said, even if you're 6 out of 10 with that kind of a risk reward ratio, it's a win-win. So we've got expert advisors in built for you where, this whole RMO2 chart checkup is done. For example, here it would write the RMO2 is in a neutral zone and option strategy should be considered as a major move may trigger soon. So, these are the little inputs that you would get through your expert advisor, and you don't need to go through this, manually. So the good part is we're not leaving it to chance that, oh, will I find this trade? Will I not find this trade? And just to give you a sneak peek of, the application, uh, we have the Power Screener application, which will automatically sync up for you and take you, using your MetaStock feed, uh, populate for you the various signals that you have at a given point in time. So let's see if it holds up good. We've got a few moments, so I just thought I'll take the liberty of showing it to you so you can see it's connecting to my MetaStock API, the feed, and the data feed is going to be synced in. You got to give it a minute or 90 seconds for it to all connect, because what this is going to do for you is now uh, populate signals based on lists that you have created, based on indicators that you want to see a setup on. So rather than me running explorers for each of these indicators, I could just simply go into the Power Screener app, which I have open right now, and run through it. So in my case, since I'm using the real-time feed, I would be able to run through real-time data. If you don't have real-time data and you have end-of-day data, you just need to get into a bit of a configuration mode where you just need to one-time configure that this is the data path my data is stored in, and it will populate off that list. So very quickly, if I just say, let's populate using the Dow page that I have here, Of course, I've been playing around with the page. It's not a perfect page. So, you can create your own kind of groups. So this would automatically give you these columns, and you can now add what kind of a column you want. For example, I could look at the ATM counter trend, the RMO2, the RMO super filter, the strength weakness indicator, the trend decider suite that I was talking about, the breakout catcher. Now, and we've also had a lot of popular stuff out there like candlesticks or the MACDs or the CCIs or moving averages, RSI, stochastics. Now, the whole idea of adding this is you don't need to look through, you don't need to each time look through as to, which indicator uh, should I scan. You can have multiple indicators working for you, and that's how it would work off. Of course, it's not populating right now because maybe I'm just connected for the presentation, but you know it would literally throw up all those opportunities for you in real time. And let's get back to the slideshow. Okay. So another tool which really marries in volume is the strength weakness indicator. And again, I don't have much time to dive in, but very quickly, people want tools which are just based on volume. This plots a line and dissects the price just based on volume. Is it bullish or bearish based on volume? And what do I mean by dissects it based on volume? That whole concept of if price goes up, if and it goes up with volume, that's positive. If price goes down with an increase in volume, that's a confirmation of the downtrend. So we are marrying this whole concept into the strength weakness index and seeing that balance of volume. For example, here you may have 5 bars running up, but the volume is not there, which is why it's still below the SWI line. So this is also a nice way to plot the indicator on the chart and see is the market bullish or bearish, just from a volume perspective. So you develop a mastery of trend detection where you have a tool like the super filter, which is already so optimized. Look at the trend decider that I showed you, which is going to update every day, every week, because we have a trend decider daily, a trend decider weekly. We even have a trend decider monthly if you want, for those of you who are very long term. And the best part is if you just want a tool based on volume, you got the SWI. So just look at the combination. I mean, the power of these three working together gives you tremendous, scope of enhancing your performance as a trader. And mind you, I don't need to use a plethora of indicators. I quite honestly, there's a feature in MetaStock which lets you delete indicators from the indicator quick list. I am a great fan of that because, I want to just keep 10 in my list. I don't need to have too many on that list. So if you can, if you can downsize the indicator list, if you can downsize what you're doing and just work on 2 or 3 templates with more, solid inputs, uh, optimized and solid inputs, you don't need to keep changing time frames and indicators. Just focus, same stock, same rules. With that discipline, you're going to win. So that kind of wraps it up for me. It helps, should help you understand that what I'm trying to tell you is to simplify. What I'm trying to tell you is, with the add-on, you have a lot of optimization. You have tools which can help you as an options trader. You have tools that can guide you from a volume perspective. So, if this is of interest to you and you want to change the way you trade, I would highly encourage you to, use the ATM. It should do you wonders. So over to you, Jeff. And if there are any questions, I think we still have a good 3 or 4 minutes to answer them, and you could tell them how to get hands-on with it.
Absolutely. Yeah, Gregory says thank you. But we do have a question that says, can you please talk about using RMO to find options trades?
So the one indicator which I would use very extensively for options, as I was mentioning, was the RMO2 suite, which is this, the chart that we have up here. So what I'm trying to do is look for areas where the RMO2 pulls back to zero, right? And when I pull back to zero, that's when I want to buy puts. When the red line pulls back to zero, I want to buy puts. When the blue line pulls back to zero, I want to buy calls. So it's about directional options, going long on options, which is what I'm doing, without getting into too much of jargon, because as I said, the most important thing is the direction. If you have the direction right, and you know that from the pullback point, we usually expect anywhere between the next 10 to 15 bars, you should be at a new high or low. So I think the RMO2 is a great spot to be looking at. And we do have a scanner with wherever the so you'll never miss that opportunity.
Yeah, I always found that that's such a big part of like, okay, what direction are we going? Those are kind of like the first questions you had to answer. And Arma's really good at that. So Lisa was hoping that you could put up the slide that said the words volume. She said it was the previous, but I think it might be the next one. I'm not sure where we're at in the slide deck, but she wanted to look at the volume slide again.
Right. So this one was the strength weakness indicator. And this is a measurement of the way volume works. So the SWI uses volume as an essential ingredient, which makes it an excellent indicator to gauge strength and weakness. And the reason I use this is only on stocks which carry volume data. Sometimes, let's say if you plot it on the Dow Jones index, or say the Nifty index if you're trading in India, or the let's say the ASX 200, you don't have volume data, so the SWI would not plot. You do need volume data to be using it, and that's the indicator which is doing that measurement of how price goes up with volume.
All right, and now this isn't really as much of a question as anything else. Ali in the Bay on YouTube says the software is epic. So good job. Thank you.
Thank you. That's a great way
I
to
personally agree. I absolutely love kind of what you've done with the software. The power screener is so unique. I'm going to talk a little bit about it, but Rahul, I want to say thanks for coming in and spending some time with us. And one thing I had to say about the systems and kind of, I think the reason I gravitated to them, and RMO in particular, early on in my trading, was just the simplicity of it, the ability for it to show everything and keep things simple and not overcomplicate things. And you have a real skill for that. So I appreciate you coming in today.
Thank you. It means a lot, Jeff, and appreciate your organizing this stuff. It's amazing the commitment you have to customers as a company. I'm always a great admirer and always ready to do stuff with you for that.
All right, great. Well, we'll have to plan some more stuff. I'll call you after the dust settles. Thanks, Rahul.
You got me. Thank you so much, Jeff. Have a great day. Thanks, everyone, for joining in. Appreciate your time.
Okay, I'm going to talk a little bit about the offer that we're doing, and then we're going to kind of just give away a prize, and we're going to talk more about stuff. So let me go ahead and make myself the presenter. And RMO ATM3 is what Rahul just talked about. It's his add-on. He showed the Power Screener app. I'm glad he did. I think it's one of the coolest things independent developer has made for MetaStock, the ability to go in there and kind of screen things and show them. In the ATM3, you're going to get the breakout catcher, the counter trend indicator, the SWI, the trade decider, and the super filter. Normally that's $149 per month. What we're going to do here at the special is we're going to just, or the special at the conference is we're going to do $99 per month, and that's a rate we're going to let you keep forever. So you can keep that promo rate forever. You can also prepay for that and even save a little bit more. The prepay rate for a whole year would be $1,069. And if you do that, you'll also get 2 one-on-one training sessions with Veritech staff. So it's a great opportunity. You can actually just try it out for a month for $99. If you want to get all of that included training, you could go and get the 2 one-on-one training sessions by prepaying for the year. So to take advantage of that, give us a call at 800-882-3040. You can also go to, you can't do that online. It's a special rate. You want to call our sales guys or visit them at metastock.com/sales chat. So we have had, and then there you go about that. Going to handle a couple of questions that keep coming up. We get a lot of questions about the recording and if the recording's available and how to get the recording. And you may be watching us on YouTube right now, but if you're not, we are streaming this whole event to YouTube in real time. So we generally leave those up. We make them available to everybody. And there's a link for, if you're on YouTube, you don't need a link, but there's a link for the whole playlist for all week. You can just hold on to that. We will email you a copy of that at the end of the week. One of the things I really like is, there's a few companies out there that do Well, we just offer the recordings for free. I mean, and it's important because we talked to a lot of people. We had another gentleman from India yesterday that was up till probably about 4 a.m. his time. But we want you to be able to watch them. We want you to be able to review them. It's a lot of content. We're doing 39 hours of video. So, and I think it's gone really well. And there's the recording. You can watch it at your leisure. The other thing is, if you are watching on YouTube, welcome. I hope you've been on our channel before, but if you're new to the channel, I want to welcome you and invite you to register for the event. We're going to give away a prize right now. And in order to qualify for those prizes, you just have to come to a website that Kelly behind me is going to put in the description link, and that'll put you on our list. Once you're on our list, we'll notify you when we do events like this. We do 2 of these big, long events every year, and they're generally really, really good. We do single sessions almost every month, where it's a full day of 8 speakers. And then we do individual webinars probably once or twice a week. So we do a lot of really good content with a lot of really good gurus. If you're enjoying that, make sure you like the video on YouTube. It helps a lot. Make sure you subscribe and YouTube will let you know. But make sure you register too so I can give you a prize. And I think this is a good segue. Actually, let me talk about a sponsor. And then I'll turn it over to Kelly for a minute while we give away a prize. So I do want to talk about Stocks and Commodities magazine. Let me move this over here. Let me go back into the full screen of the recording so I can see questions because I'm talking next. Do want to say thank you to Stocks and Commodities magazine for sponsoring all of our events. We've been doing events like this, big events, with multiple speakers for almost a decade now. It'll be a decade, I think, in January. I'm pretty sure about that. But they've been sponsoring them ever since we started them, and we love Stocks and Commodities. They have 17,000 trading articles. They've got 1.3 million subscribers. They've been making magazines since 1982. If you do a trial subscription to MetaStock today, or like we call it the extended trial subscription, or if you spend $300 or more, we're going to give you free time. They're going to give you free time as part of their sponsorship. So if you do a subscription, you get 5 months. If you spend $300 or more, you get 2 years. And, I think it's so important, and I think you probably agree with me. You're here in the middle of our session trying to learn more things about trading. And I think with trading, it's something that you continually evolve at. You get better. You should be a better trader than you were last year or the year before that or the year before that, right? You're either getting better or you're getting worse. You're either learning new things or you're not. And I think education is such an important component to that. And to be able to get a magazine every month for free or even just paid for, a very, very good way for you to make sure you're kind of staying on top of things. So in any case, there you go. We also have CMT. CMT is great, cmtassociation.org, and I'll talk more about them in a minute. We are, of course, MetaStock. With MetaStock, we've been talking, and I'm going to talk a little bit about my favorite things on MetaStock in just a minute here. But I love MetaStock. It's been rated #1 in its price category for 29 years in a row by the readers of Stocks and Commodities magazine. It's great for scanning. We're going to show you some scanning in just a minute, testing trading ideas. Scott, if you were here on Monday for Scott, helps you test trading or helps you do forecasting of probable price movements using a lot of really fancy statistics. And we've got a patent on kind of the math under that. Gives you real-time alerts, comments, signals. 29 years in a row, it's #1. Starts at $59 a month, $69 if you're in the US. And if you buy a month, we will give you your second and third month for free. You'll be using it into February of next year. Can't believe that's only 3 months away, right? December, January, February. I had to do the math just to make sure. I'm like, wait, that sounds like forever from now. But $23 a month, they'll get you a copy, and you can do it at 800-882-3040, metastock.com/comp-promo, and metastock.com/sales-chat. We're going to give away a prize, and then we're going to start with MetaStock. So we're going to do a real-time version of MetaStock here. I'm going to give away 3 months of MetaStock real-time. So it's going to include everything that we're talking about with MetaStock, with the ability to scan and test and trading ideas. One of the other things it's going to include is a product that we call MetaStock Zenith. MetaStock Zenith is fantastic. They spent about $1 billion designing it. It's supported by couple thousand reporters globally in 200 different news bureaus, giving you some of the best news and information available on the planet. It's literally an institutional strength feed. It's quite a bit cheaper when you get it from us, because we only do a retail version of it, and it's a white label product. But we're going to give you 3 months of that institutional quality product. It's a literal competitor to Bloomberg. And in addition to that, I'm going to give 3 months of learnmetastock.com. Learnmetastock.com is a site that includes all kinds of formulas, all kinds of training. MetaStock's a huge toolbox. We've been working on it for 30 plus years now. And it really is designed to kind of help you get the most out of that big toolbox that is MetaStock. So we'll also give you a home study course for free, called Unleash Your Power MetaStock. That's normally $99. We're also going to have whoever wins get an installation with our white glove installation service. And we'll do this for anybody that is a new MetaStock customer, but we'll basically get on the phone with you, make sure that you have everything installed properly, and answer any questions you have. If you want to know how to do scanning, they'll take you through scanning. They'll really walk you through the program. We've been doing that for a couple of years, and it's been awesome. People really, really like that kind of handheld attention. So there you go. Kelly, are you ready to help me give away a prize?
Yes, sir. Let's do this.
All right. So I'm going to give you the number. Did I miss anything important about how cool our software is?
No, I think you hit it pretty well.
All right, let's see. So today we have actually 11,039 is the number that we're going to go with. So give me a number between 1 and 11,039.
2,795.
2,795. Okay. And that is Joel C. With a Yahoo email address. So Joel C. with a Yahoo address. Let me make a note of that. That way I don't have to pull the video later and figure out who kept the prize, and just try and keep the records together as good as possible. Let's see, so MetaStock winner. Okay. Okay, congratulations, Joel. I'll reach out to you within the next several days, probably early next week, with information how you can collect your prize. Thanks for registering for the event. We really appreciate it. I want to say real quick before I turn the time over to Kelly to introduce me, thank you to all of the presenters that have spoken so far and have agreed to speak. Thank you for all of our sponsors. And thank you for everybody for listening and being here and asking questions and participating and all that kind of good stuff. So, Kelly, it's all yours for a second while you introduce me.
Okay, well, before I introduce you, Jeff, I'm going to take the great honor of reading a disclaimer before your presentation. So I'm going to go ahead and go through that, and then I'll introduce Jeff. So this demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with. Okay, so let's go ahead and introduce our next speaker, Mr. Jeff Gibby. So I know you have all been listening and learning from Jeff over the last 2.5 days, but I just want to take a moment and introduce him as a speaker, because Jeff is, beyond just putting together this amazing conference, which we've already had 21 speakers at, and much more to come. Jeff's done an amazing job at that, at putting it together. It's actually been in the works for months to put together. But having Jeff as a speaker, you're about to learn an amazing amount about MetaStock and what it can do and how it can help you in your trading. Whether you use MetaStock or not, there's a lot of different methods out there in the market to understand. And Jeff has such a great working relationship with all of our partners and the people that we work with on a daily basis that he understands a lot of the different methodologies extremely well. So to hear Jeff speak, you're actually going to be able to pull a lot of great information out of him. So be sure to ask questions during Jeff's presentation. He's going to give you a lot of great information, and he's going to show you some awesome tips and tricks in not only MetaStock, but also trading as well. So, again, a big thank you to Jeff, and I'm excited to hear what you have to talk about, Jeff. So let's go ahead and bring you on.
All right, and here I am. Hopefully we didn't oversell that, Kelly. Thanks for the intro. All right, very cool. Okay, let's go ahead and get started a little bit. So the way I usually start is just to kind of give you a little bit of my history. I started here at MetaStock 26 years ago in March. So it's been 25 years, going really strongly on 26. And it's been a great place to work. I remember that, I started in inside sales. So I did that for about a decade. And that just means if you had questions about the product, what we were doing, like how it could help you, that kind of stuff. It's my job to kind of talk to you a little bit about your trading and what you wanted to do and how our software can help you. And that was a lot of fun. I did that, like I said, for about a decade. The decade after that, my primary job was to round up partners and talk to partners and work with partners. And as part of that, I do a lot of the events that we do online. This is where I met all of the people that we're talking to this week. Like Bigelow, Price Heatley, Rahul Mohindar, Vince Vora, all of that. Organize everything that we do with partners, but in addition to that, I'm also in charge of kind of the sales team, and it's been a really, really good job. I absolutely love working here, and I'll say that way. I would also say it's a great software. I've been really, really proud to represent MetaStock over the years in so many different capacities, mostly because it's been so highly rated. And it is something that I use in my trading and that kind of stuff. There's a little bit of history about the company, but we've kind of talked about it already. We started in 1982. When we started, MetaStock was a part of Reuters. They became Thomson Reuters, and then it's been Refinitiv, and now it's owned by the London Stock Exchange Group, but it's all still Reuters. And I'd say that has been a pretty big advantage to us over the years because, we'll talk about all the data that's available, and we have tons of people on YouTube that are coming from London, or India is a big one, Australia, Singapore, Malaysia, whatever those markets might be, the ability to have really, really good high quality data for hundreds and hundreds of exchanges and a really super good news feed has been a really, really big advantage for us. So, and then again, it's just been a great company to work for. One of the things that we pride ourselves in is the fact that we keep more people in support than we do in sales and marketing almost all the time. And really, I'm going to take this out because I don't need it and it's given me a bit of feedback. Really, that allows us to kind of go in and, support our customers. If you have questions, you get unlimited access to our support. And so it's been great. John says my mic's off. Let's see. Can you guys hear me? Let me know if you can hear me. Okay, good. John, hopefully you can hear me. Let me know if you are having any audio issues. It's kind of funny to ask somebody that can't hear you if you can hear me. Dinesh says, is Refinitiv a British data supplier, and how are they associated with MetaStock? So Refinitiv I'd say they're a very huge strategic partner of ours. It used to be Reuters. Now it's Refinitiv. Now it is owned by London Stock Exchange. Initially Reuters was a London provider. When it was for Thomson Reuters, I think they headquartered in New York, and now it's owned by London Stock Exchange Group. So it is associated. They are a partner of ours. We white label one of their products. We call it MetaStock Zenith, and it is some of the best news. They're one of our most valuable partners. So hopefully that answers your question, Dinesh. Okay. All right. Today, what I'm going to talk about, and then the other thing, and I misplaced a slide. I think I moved it on accident. But the other thing that I'm really proud of is that 29 years in a row, just back to back, longer than I've actually even worked here, and that's a long time. It's been rated #1 in our surprise category. And, you know, the amount of things that we've been doing to kind of shake up the software and refresh it and revitalize it has been amazing. Like Ed Downs yesterday when he was talking about MetaStock, he's like, I love the new 18.2 charting engine. And I'm like, me too. I love the look, the amount of changes that we've been able to do in the last several years, kind of where we're going with things. It's been an exciting time to work for MetaStock. So there you go. Today, what I'm going to talk about, so we're kind of trying to cover a lot of the bases. Monday morning, Scott, the owner of MetaStock, talked about the forecaster, and that was a really, really good meeting. Later in the week, either tomorrow or Friday, depending, Kelly's going to talk about like all what we call the power tools of MetaStock, the ability to test trading ideas, scanning, expert advisor, you know, really the core reasons that MetaStock's been rated so highly for so long. And so I kind of wanted to talk a little bit about some of the things that might be the hidden gems of MetaStock, some of the things that I really like. And some of these are projects that I've been involved in. We'll probably go through about 3 of them. Some of them were already in MetaStock, but just some of the things that are available, you know, and I could probably do a whole series of this. But just some of the things that I really, really like in MetaStock that you may not be aware of. So there you go. Do I have any MetaStock users in the audience? Like if you're on YouTube or in GoToWebinar and you've been using MetaStock, give me a number of how long you've been using MetaStock in years. And I'm really, really interested in hearing that. But the first thing that I'm going to talk about, also, while I get you to start typing, if there's any specific symbols that you'd like me to look at, I don't really come in like as a presenter. I think it's like super easy to go in and find some really, really good chart examples, right? Okay, well, you know, ExxonMobil just had a really big run up this year. It's kind of been taken a little bit, but anything that was gas related earlier in the year would have been great to trade in, so I could show that. But I don't really like to cherry pick examples. I just kind of want to give you an idea of how things work in MetaStock. And it would be super easy to show you just like 50 good examples. But really what I want to show you is like just how some of these tools work and what they're designed to do. So 12 years. Awesome, Ralph. Great. Thank you. Appreciate that. Okay. The first thing I want to talk about is a tool that's inside of MetaStock called Dynamic Trading Tools. And I haven't gotten any symbols yet. So we'll look at the Dow. I was looking at the Dow a little bit earlier with this RMO trade model. And actually Dow may not be. Yeah, that's fine. We'll just do Dow. Looks like we have a little bit of an indecisive inside bar so far today. We'll see if a decision gets made. But what I want to show you first is a tool called the Dynamic Trading Tools. And I absolutely love this tool. If you've listened to Vince much, one of the things that he likes to do is he really, really likes to find stocks that are breaking out into new all-time highs or new all-time lows. And one of the things that we've had in MetaStock for a number of years is the ability to find and identify support and resistance on a chart for you. Okay. In addition, and I'll kind of go through this after I apply the template, but in addition to support and resistance, it's going to identify up trend lines and down trend lines. Neil's been using MetaStock for 27 years. Neil, that's great. Thank you. I appreciate that. So what I'm going to do here is we've included kind of the tools in MetaStock for, gosh, a long time now for dynamic trading tools. But we recently built a template a few years ago because I'd show people the different tools and how to apply them. But I wanted to include a template so you could just easily apply them all by yourselves without asking me for a template and that kind of stuff. So what I'm going to do here is I'm going to right click here and I'm going to go to apply template. And the name of the template that I created and asked the programmers to include in MetaStock is called the Dynamic Trading Tools template. So I think we started including this in maybe 17, might have been 16, but I want to be very clear. I did not design the indicators or the scans or that kind of stuff. I just made the template that put it all together in one place. So I'm going to go ahead and we're looking at the Dow. I'm going to go ahead and apply the dynamic trading tools and just kind of give you an idea of how this works. So we'll go ahead and click on no. I'm going to zoom out a little bit so that we can see a few more of the lines that are getting drawn. Okay. And I'll just kind of go through them. I'm going to make them a little bit thicker. Once we kind of put things on the internet, they're already a little bit small and hard to see, but I'm going to go through the lines one at a time and just kind of explain what they are to make them a little bit more visible. So if I hover over this one, it's going to be DT. That stands for dynamic trend. This is resistance. It's longer term. I'm going to make it bigger so you can see it a little bit clearer. Okay. And this is automatically labeled and identified on the chart for you. And you can see if we're looking at it right now, it will move. And right now we're seeing that long-term resistance is going to be right here at 337 before we had the longer-term resistance at 355. And anyway, as it updates, it's going to kind of change for you. The next line that we're going to talk about is this really, really hard to read line. I'm going to make it bigger just so you can see it. But this is the shorter term resistance. And actually, I'm going to come back to the longer term real quick. I'm going to make it super fat. Okay. Okay. Apply. Okay. And so if I do the shorter term, you should be able to see that now. Our shorter term resistance is right now sitting at about 328. And we broke that just yesterday, in fact, pre-election. Okay. So as long as that level holds, that'll be good in terms of we could now view that as a resistance level or a support level instead of a resistance level. The last time we had a major resistance or support area here was actually before the market collapsed. It collapsed through that area here temporarily and here a lot more temporarily. So back at 340.96, and you can see that. I'm going to go ahead and make it a little bit bigger. Again, I want you to be able to see these lines. They are automatically drawn for you. I'm just going to make them a little bit fatter. And you can see right here, our longer term support before that was 266. Okay. And that's still valid because that's our last long-term support. Here we've got our shorter term support. You go ahead and make that a little bit thicker again for you. So you can see that. Right now I have a shorter term support right here. And if this level continues to hold, what we'll probably see is this will become our longer term support as well. But right now it's at 289.6. Okay. And that's how it works. Now it's not finding any trend lines. Okay. In fact, I'm going to change charts real quick and see if I can show you some trend lines. Before I do that, I'm going to make sure, because this is a demo machine, that I'm going to keep all my charts the same. Yeah, I will. Let's just see if we see any trend lines on Apple. Select instrument. Richard says, I've been using MetaStock since version 11. Yeah, I think I've talked to you on the phone, Richard, way back in the time. Way back in the times. So right here, you see right here, I'm going to just make this one bigger too. If it doesn't find anything, it won't plot it, right? Go ahead and click apply. Here is a longer term trend line down. Okay. If there's a trend line up right here, you see a longer term trend line up. I'm going to go ahead and make that a bit fatter too. Go ahead and click on OK. And so in Apple, it's we're kind of getting into this period where, oh, we also have a longer term trend line down here too. So this is developing a pretty good wedge according to these trend lines. But these are automatically drawn for you. You can kind of see where they're coming in on the chart. I do kind of think this is a really good place to draw it. You've got 1, 2, 3 holds of this line. It's kind of bouncing off the bottom right now. Here you've got 2 holds of the shorter term and your longer term. I think this is actually, and there are sometimes that I don't agree with where it's putting the lines and I put them in a little bit of a different place. But I would say that this is actually in a pretty good kind of triangle base pattern based on the way that these are drawn. And I like these lines quite a bit in particular on Apple. Now, That's cool. You can apply it to your chart. You can see where we're kind of pointing out the trend lines. And, there's even an expert advisor where you can open up and see where those lines are. Actually, I'm going to show that to you. I wasn't going to, but let's go ahead and show it to you. I love the scanner. Here we're going to do with the longer term support and resistance level. So I'm going to apply that. We'll go ahead and click on close. And what I'm going to do is I'll just go and I'll open up the commentary. So I'll go click view expert commentary here. And it's going to say, okay, here, we broke down below the downside support level. So it's saying we broke a support level here today. Okay, this is a bearish sign, the previous support. So it just breaks down exactly what it's seeing a little bit with the thing. Now, this is cool because you can actually, sometimes trend lines are a little bit visual and you can apply it and it's objective because the computer is doing it, you're not guessing. But I think the real advantage is since we're looking for these longer term breakouts of support and resistance and we're automated the way that they look, I can go in and I can say, well, okay, with Apple, if I want to look for something that's breaking an all-time high, and this is something, or breaking through, let's not say an all-time high, breaking through a major resistance area, that's a stock I want to see. I want to know stocks that are breaking out. Vince Vora, he spoke a couple of sessions ago, says, I love to find stocks that are breaking in resistance areas. A lot of times that's where they don't find any more resistance, especially if it's an all-time resistance or an all-time high. So since these are automatically drawn for me, what I can actually do, Ash Price also talks about how once things start moving, it generally, it takes so much, if you can view, he likes to equate the processes of rocket, right? Like it takes so much fuel to get out of the gravity. But once things start moving, I know one of the first stocks I ever looked at was Taser. If you remember Taser, man, that stock was on fire for the longest time. And I remember I was having a customer that was just talking about, hey, Taser, it broke out on a new high. And every day he'd be like, you should buy Taser, you should be Taser, you should be Taser for months. I'm like, dude, this thing's gonna come down. And it did eventually, right? But like it went up and up and up and up for the longest time. So once something starts moving and there isn't a lot of resistance, it can move with quite a bit of momentum. So because these are drawn, because these are figured out by the computer, we also have scanning. So we have the ability to say, okay, well, show me all the stocks that are breaking out of a trend line or breaking down under a trend line or breaking up above short-term support, short-term resistance, long-term resistance, or breaking down through support. And those are all automated strategies that are really helpful if you want to find stocks that kind of meet that criteria. So awesome. Hey, Kelly, do me a favor if you don't mind. Will you pull the recording link and put it in the GoToWebinar chat for Hassam? He wanted to know where the recordings are. So let me show you how that scanning works. I'm going to go ahead and open up the Power Console here. And what I'm going to do is we're going to go to our scan. So right here, we've got the charts, we've got Quote Center, we've got scanning, testing, forecasting, option scope. Scanning is where all the scanning happens. One of the things that we just added, and I love this because there's so many scans that you can do in MetaStock, is I can just search for the scans that I want. So I'm going to go ahead and click on DT, okay? And here are a list of all the DT. See how fast that was? I just love it. Like, okay, so we have longer term support and resistance, shorter term support and resistance, breakouts longer, this would be trendline breakouts either to the up or the downside, and longer term and shorter term. So I'm gonna, obviously I've run this demo before because there's a little bit of an R indicating there's a report that's been fired here, but I'm gonna run it again right now. I'm not gonna select a huge list because, well, just to kind of keep things moving, I'm not very good at telling stories and entertaining scan runs. Let's just pick a few ones. I do want to reiterate though, and I've mentioned this a few times over the sessions, regardless of where you're at, there's about 321,122, I guess that's not about, that's pretty precise, instruments that I can scan for. So if you're watching this and you're in Australia, you can do Australian stocks or Indian stocks or London stocks or optionable stocks or ETFs or Canadian stocks. Like because we get our data from Refinitiv, You can scan anything you want to. And again, that's been huge for us. To keep it kind of moving in steady and kind of where we're going, let's do a kind of a bit of a shorter list. I've expanded the list out here to just show the index constituents. I have about 100 selected. It's probably like the NASDAQ 100. It's the S&P 100. What I'm going to do is I'm going to select the NASDAQ 100, the S&P 500, the S&P 500, and the Dow Industrials. So this should come back pretty fast, and it should just give us an idea of all the stocks it's broken through. I could do as many as I want to, and it wouldn't even take that long. I just wanted it to run super fast so that we can kind of keep moving, okay? What it's doing now is it's going to go through those 526 stocks that I just selected between those 3 different index groups. And it's going to tell us which ones have broken up through a major support resistance area. And I'll show you how to look at the report as soon as it's done. And there you go. Sorry, just messing with my display over there while the report runs. Okay. Let's see. Awesome. Here's that link for the whole playlist. All right, very cool. All right, so it's done. Okay. And with this one, it looks a little bit different. So right here, you've got a list of the instruments that are available. You've got their close price, and then you have a breakup and a breakdown. Okay. The breakup is going to have a number. That's actually the number of bars ago. So in the case of this one, we did the scan on the daily basis. That's the number of days ago that it broke up. So I'm going to sort based on that column. Okay. And the NAN just means it's never happened. Okay. So I'm going to go ahead and sort. We can look at Rockwell that broke up over 2 or 3 years ago with 643 days. But generally, I want to find them a little bit closer to when they broke out. I do like the fact that this actually lists everything, whether it broke out just now or recently, right? So right here, if I wanted to find out stocks that broke up through support or resistance just recently, like yesterday, 1 bar ago, here we'd have United Health Group, SiriusXM Holding, Nordstrom, Mettler Toledo, Campbell Soup, and Automatic Data. So let's look at the United Health Group. We'll go ahead and click on open the chart. If I apply, I should have applied the template there, but if I apply that dynamic trend template, again, I'll just come in here to apply template. We should see that breakout for 1 day ago. Okay, so here you see that long-term resistance level being drawn on the chart. There was your breakout. I'd still wait for it to kind of penetrate through this high, but if it does that, I'd say that you're probably in a pretty good position for it. So that kind of actually totally not a recommendation to buy, but this looks like it's in a pretty good situation if it does break through those highs. So, and again, we're not going to, here we've got where that long-term trend, that's a longer-term trend line down. Looks like we're breaking above that as well. Here's where the shorter-term resistance was. Looks like we're breaking above that as well. So this stock looks pretty good. I wouldn't recommend you buy it because I can't. I wouldn't even buy it until we're looking at it breaking out, even just a little bit higher here. But if it does, this might be a good opportunity. So there you go. Okay. Let me go ahead and I think that's what I want to show you with dynamic trading tools. I'm going to check. Whoa. I just noticed it. I spent 36 minutes talking about dynamic trading tools. That's usually a lot more than I normally do, but it's a really cool tool. If you're looking for, like a lot of times the questions we get is, how do I find a stock that's breaking out? There you go. It also helps you find stocks that are breaking down, breaking through trend lines, breaking down with trend lines. And if you've been using MetaStock and you haven't been using that as a scan, it's a good one, especially if that's the type of trading you want to do. So there you go. Let's move on a little bit. I didn't see anybody request any symbols, but if you have one that you want to look at, we're going to talk about something completely different for about 15 minutes or so. So the next tool that I wanted to talk about was a methodology that was based on the name of this battleship. So this is, and I'll just tell you what it is. This is the Haguro battleship. And so when we kind of put this together, I actually did a Google search for Haguro, and this is a battleship in a Japanese battleship, I guess, if I remember correctly. And the method that I'm going to talk about now is called the Haguro method. Also, the Haguro was and it's been a while since I've looked at the details for that, but it was I guess it's a very sacred mountain range in Japan. Okay. The genesis of this project, and I'm quite proud of it, is, it's a method called the Haguro method. I was down in Australia. This was a long time ago, probably more than a decade ago. And I met up with a guy by the name of Gary Burton, who ran the Australian Technical Analysis Association. And I was just down there for a trade show, down there for work. And I introduced myself. I'm like, hey, I'm with MetaStock. He had a booth, like I think it was right here, like it was right next to us, right? And we kind of started to talk, and I was like, have you heard about MetaStock? Do you know what it does? And then I was like, hey, what do you do? And he talked a little bit. He did a lot of training at the time for people in Australia that were into technical analysis. We kind of started talking a little bit about what he was doing, what he was teaching. And one of the methods that came up was this Haguro method. Now, Gary didn't develop or design the Haguro method. It was actually put together by a guy by the name of, that was me trying to go into those memory banks and pull the name Seki Shimizu. Seki Shimizu actually created this. It's a very, very obscure book called The Japanese Chart of Charts. And he was the one that created the methodology. Gary was teaching people how to use it and how it was designed to work and how it was designed to kind of give a forecast on a weekly basis and how it was designed to indicate support and resistance. And so it's like, that's really cool. Will you send me some information about it? And I remember when I got back from Australia, he sent me like a ridiculously large slideshow. I think it was like 600 pages, but it was big. I don't remember exactly the size. I just remember this is really, really big. But it kind of outlined a lot of things around technical analysis, like what a chart is and that kind of stuff. But it outlined this idea called the Haguro method. And I really liked it. I actually then we drilled into it. We made experts and scans for MetaStock and put it in the program. We provided it for free to anybody that wanted it. It's now built into the program. I liked this program so much that as soon as we were done with it, I called a friend of mine, the late Dennis Peterson, who did a lot of reviews in stocks and commodities for our upgrades and MetaStock. And I was like, Dennis, I want you to look at this Haguro method. I really like it. I want you to take a look at it because I think you'll like it as well. I remember we kind of went back and forth quite a bit, and he liked it so much that he did 2 reviews on it. He did one that just talked about the method and what it did and kind of like the mechanics of it. And then the second review was just to talk about how the add-on that I had programmed. And I remember because it was one of the best compliments I've ever gotten. I'm not a programmer by trade. I do write a lot of stuff, but I don't consider myself a good programmer. But one of the things that he mentioned in his review was that it was well programmed. And so that's what Haguro is. That's what it is designed to do. But I see a lot of questions. If you have questions, let me know. So with Haguro, I'm looking at the time. It's designed for weekly candles. It's designed to provide support and resistance on a weekly basis. It's designed to give you key turning points. Turning lines, which is another word that Seki uses for candles. Lines and candles are kind of the same thing. And it gives you a fairly accurate weekly forecast of what to expect. Okay. Now, the way that this is broken down is there's a few things that I'm going to kind of just talk to you about, and then I'm going to show you how to use it in MetaStock. But everything has to do with the candle, the shape of the candle, whether it's a green candle or a red candle, which is the close to open relationship of the candle. But the other thing that it incorporates quite a bit is the midpoint line. So on a single point, the midpoint line is the range between the middle of the candle. If you take the high and the low and divided it by 2, that's the midpoint, that's it. Okay, so that's the midpoint of a single candle. In everything that Siki did in his work has to do with the midpoint and where the rest of the candle falls in relationship to that midpoint, and whether it's a green candle or a red candle. Okay, and so here, this next slide, okay, this just tells you what the midpoint is. This next slide shows you how he classifies each line. Okay, so if you have a midpoint here, and then your body is here, and your high and low is here, then this would be a 1 pattern. This would be a 2, 3, 4, 5, all the way through 16. I mean 11. No, I don't know why. For me, I don't know exactly why this isn't 10 and 11 and 12. I don't know, but there's 16 total different patterns that are available, and they all have a relationship to whether it's a green candle or a red candle, and where the body is in relationship to that midpoint line. Each of those different candles on a weekly basis has a different meaning according to Siki. Okay, and hopefully, I'm sure every time I do this actual presentation, there's a very nice guy on our marketing team that actually spent a lot of time in Japan that tries to help me with my pronunciations of these, and maybe I'm getting better. I'm not sure. The other thing that I want to talk about before we kind of talk about the candle definitions and what they mean is significance. So with significance, lines have more significance if they're extended in range. So each of these candles have a meaning, but if we're also in an extended range, they're going to have more of a meaning. So in other words, if we're pushing new highs on the down, your candles are your number 3 and your number 7 and your number 1, and those numbers are going to be much, much more significant. Okay. One of the things that Gary and I did, because this is kind of the thing that was most objective, how do you measure if something is significant? You know, and so what we developed was, and we played with, was we would measure using a zigzag indicator how far something had traveled from the last peak or the last trough. And if it wasn't more than 7%, we'd call it significant. Okay. We changed that recently to 10% because the markets are way more volatile than they were back then. And we figured that that was a change that was overdue. But generally, that's the only kind of ingredient that we added. We said, okay, how do we measure if this is significant so we can tell you it's significant? And that's what we came up. If it's moved 10% from the last peak or trough, then we determine it's more significant. So, all right. And then the other thing, the more significant events here, actually, before I go into this, looking at the time, we're going to wrap this up. We're going to bring it in on time. I want to show it to you on a chart. So I'm going to right click here. I'm going to apply the template. I'm going to go to Haguro. We'll go ahead and apply this on a chart. And remember, it's for a weekly basis. So I'm going to go ahead and change this to a weekly so we can be looking at it a weekly basis. Now, right here, I'll just kind of talk about some of the elements of the chart. Right here, we have all of the lines, okay? Or all the line numbers, so that you'll see 2, 16, 2, 2, 2, 15. You'll notice that the 15, these 15s are blue right here. And they're also, if you're into candlesticks, they're inverted hammers. This 3 right here is blue, okay? This 3 is blue. And I can stop drawing the circles around it. You'll notice that the 15s are all highlighted in blue because those are generally determined as significant turning events. And not all the time. Like right here, we had a 3 and then the trend continued to go up. 3, this generally was pretty close to the top. It went down. Here we had 2 15s in a row and it went up. So that's considered, those are the patterns or the candles that are considered significant or likely turning points. Okay, and that's the reason we made them blue is right here. 3, again, you had a nice run up after that 3. 15, it was the end of a little run up. But it's interesting to see kind of, you generally, not always, but you generally do see some hammers, either inverted or otherwise, before a turn up. Okay, now all of these patterns actually have a definition. If I come into the commentary here, right here, this is a 2-bar, and this is what a 2-bar means. When this is a long line, the midpoint is set as future supported declining prices. Okay. Concerning line 2, this appears at the outset of a rise in the market after a fall in prices. After opening price above after this, if you have an opening price above a midpoint, the following price movement should occur. If it opens above the midpoint of the line, you could consider long. If the price closes below the midpoint of any of the line, close any long positions. After 4 weeks of upward movement, a trade should be liquidated. And then we put the classifications of the line. But what we tried to do is kind of make a definition and kind of give you the definition of what we're looking for in all of the trades. So if we went back to this 15, it would outline that this is a key reversal line and what we should look for after the reversal line. Okay, so all of these numbers have significance. Before I kind of actually talk about the scanning and the scannability of these, the other thing that's particular that I want to spend a little bit of time is this big heavy, I'm going to go ahead and close the commentary for now. It's this big heavy black line. This is what is considered the Haguro midpoint, okay? And you'll notice it doesn't change every week, okay? It only changes every once in a while when you have a fairly large bar, okay? This line is a Haguro support and resistance line. So if it's trading above this line from last week, which it is right now, you consider that as a support area. If it's trading below, you consider it a resistance area. And that's a significant event. If it goes from above that line to below that line or the other way around, that would be something that you'd want to pay attention to. Okay. Now, you might ask the question, Zinabu, if you don't see the charts, I'm going to guess that you're looking at the app version. You're looking on your phone, which great. Swipe left and you can see the charts. So on the app, you can either see me or you can see the charts, but not both. So that's how that works. The reason we changed the midpoints is based on the range of the bar. So in the exact rule, I'm going to scroll in just a little bit here, is we look at the high-low range. So right here, if you took a high-low range from here to here, if that range is greater than the week before and the week before, that becomes our new midpoint. So this line level didn't change here because this range was bigger so far, like this week's open, right? But it didn't change here because this range was bigger. It didn't change here because this range was bigger. So if your range is bigger than it was the week before and the week before that, that's when you're going to get a new support and resistance level. Right now, that moved last week because that was your big area. And then this is where that Haguro range is. That's where the support and resistance or the midpoint would be. Okay. According to our zigzag, this too is less significant. This is the zigzag indicator that I developed with Gary. And since it's since we just hit a pivot and we haven't traveled much from that, this would be considered less significant than this 16 or this 2 or this 2 because those have traveled enough in range. Okay, I'm glad that works in Zinabiro. I'm glad you can see the charts. Okay, so the significance events, we're going to bring this in time today. There's the candle 3 and the candle 15. And if it crosses between them, crosses the midpoint, okay? And so since those are kind of the events that you want to pay most attention to, we built scans for them. So if I wanted to find, let me go ahead and go in here. And again, with that new tool, I can just type in Haguro here, and it'll just show the Haguro things. But right here, if I wanted to find a 15 candle that also has is 10 plus or minus 10% in range, there's a scan for that. If I wanted to find all the 3 Haguro candles that are also plus or minus 10 in range, I could do that. Or if I wanted to find a midpoint cross, I could do that as well. So I love this project. I love the fact this is one of, I have gotten to be involved in so many cool projects with MetaStock in terms of designing. This is one of my favorites. A lot of them, we get deeply involved, but I actually coded this entirely by myself. And I was really, really happy with the reception that it got, both from Dennis Peterson, who's a person that I respect his opinion tremendously, but also like I remember in the before times, we ran into a guy up in Toronto that's like, I use Haguro and I use RMO and I love them. And that was just before, I think, gosh, it was just before the pandemic hit and all that kind of stuff. But this is just something that's available for MetaStock. It's part of the software. There's hundreds of examples. We could do a whole series of things about stuff that's in MetaStock that's just available. You know, it is really a tool that would put a lot of heart into it. And so play with it. If you like it, use it. Let me know. Drop me an email if you use the Guru and you like it. I'd love to see the feedback on it. So that is probably where we're going to kind of the other, I usually try and talk about three. The truth of the matter is there's three things that I like to talk about when I do the hidden gems. And dynamic trading tools is one, Haguro is one, and the RMO trade model by Rahul Mohindar is the third one. We don't have time to go into RMO right now, but RMO is another great system that Rahul has included in MetaStock. It's exclusive to MetaStock, and it's something that's you can just get as part of it. And he talked a little bit about RMO during his session. I would recommend that you learn a little bit about that as well. Again, it's the first system I actually started trading with, and I've shown it all over the place, all over the country, all over other countries, everywhere. And a lot of the times what I'll do is give me a chart. You guys have been very stingy with stock symbols, I'll say that. But like, don't worry, but I'll say, hey, give me some symbols. Let's look at some charts. And we'll look at charts. And it works, not all the time, but it works very, very well in terms of identifying the trend, and that kind of stuff. So look at it. It's also objective. It's easy to use. And again, it's included with MetaStock. So, and I want to apologize too for saying that you've been stingy with the symbols. You guys have been great. Like the questions that we've been getting from the audience, all that kind of stuff has been really, like we have a great audience for all 3 days. So appreciate you guys coming and visiting with us. The last thing now we get a symbol. All right. The last thing I would want to say is, like, with MetaStock, it has been rated #1 in its price category for 29 years in a row. It's a huge toolbox. We've talked a lot about scanning and testing, and Scott did a forecasting demo, but it's really easy. One of the things, it's really easy to kind of develop software that has like a big bulleted list of things that it can do, but isn't very functional. It isn't very helpful, and doesn't really have a lot of depth. There's a reason MetaStock's been rated 29 years in a row, and there's a reason that even after using it for 25 years, I use it every day I trade. It's helpful. There's a reason that rating exists, and I'd encourage you to try it. And for those of you, that have been using MetaStock since 11 and 12 years and 26 years, we really appreciate your long-term use of MetaStock. I wouldn't trade without it, and I hope you like it as much as I do, and I appreciate your business, to be frank. So we do have 2 versions of MetaStock. We have a real-time version. We have an end-of-day version. The real-time version does come with that Bloomberg quality data feed. We call it MetaStock Zenith. It also comes with everything we've shown you as well. It's normally $265 a month. And if you're a bank or a hedge fund, you'll be paying way more for a similar package. So $265 is what we do for the real-time package, and that includes great news, great information, the software that's been rated so highly for so long, everything we've shown you today. Our end-of-day version doesn't include that news package, but it's only $69 a month here in the US. If you're outside of the US, it's only $59 per month, okay? That'll include everything we've shown you, all the tools, the systems, the scanning, everything. $69 a month. It includes data. You don't need to worry about paying anything extra for that. Everything that you need to do everything we've talked about. Okay. The offer that we're doing here at the event is if you pay for a month, we will give you a second month. and we will give you a third month for free. That means you're paying, and I can't believe to say it, but it's November already. You'll be using this thing until February if you sign up today. And during that time, you'll have some holidays. You'll be able to maybe have some downtime and play with it and really kind of test MetaStock and see if it's something that is going to help you trade. Because if it helps you trade, well, it's worth $59 a month. If it helps you find better trades, it should pay for itself. And so it's a very low risk opportunity to try it. As part of that extended trial, we're going to give you MetaStock 18. We're going to give you data for the region that you're interested in, whether that's North America, Europe, Middle East, whatever. We'll give you white glove installation support. We'll give you that Unleash the Power MetaStock. We'll give you unlimited access to our support team. You can call them anytime you want. You can chat with them. You can send them emails. One of the things that I also sometimes fail to mention, every week, anybody that talks to our support team will get a support survey. And it is consistent, not every week, but there's a lot of times where we get 100% perfect rating on that. So you can sign up for that by giving us a call at 800-882-3040. You can visit metastock.com/sales chat, or you can go to metastock.com/promo. Okay. Dugan says, I'm retired and focused on long-term trading. I'm interested in the end-of-day version. Does it include all the necessary data for US and Europe? I'm going to estimate my ongoing cost per month. It's a little bit extra if you want US and Europe, Middle East, and Africa. And Kelly, if you know that price offhand, could you just kind of chime in and tell us what it is? I think it's like, oh man, what is a 2-region subscription? Yeah, US and Europe. It's like, I want to say 78.
No, it's 98.
$98. This is what you pay monthly for that. So there you go. That's all you need to pay. You'd get MetaStock. You'd get all of the exchange and all of the commodity and stock exchanges in US, Canada, Europe, Middle East, Africa, South America. It's a huge package. So $98. And then that's about 30-something bucks a month for the trial. So Doug, thank you for that question. All right. So there we go. I do want to say thank you to CMT for sponsoring today's event. Again, CMT is a very well-accredited organization. They do a really, really good job of supporting us. They've been sponsoring us for about a year right now. And we do really appreciate it. We're very, very proud of the CMT sponsorship, and because it is such a well-respected organization. If you want to find more about the CMT, go to cmtassociation.org. And very quickly, it looks like we're doing pretty well on time. I'm coming over here to the prize computer. Kelly, do you want to help me give away another prize?
I'm ready. Let's do this. Great presentation, right, by the way.
Oh, thank you. I appreciate that. I felt like it went okay. You're always your worst critic, right?
That's true.
We're going to give away, Ken Calhoun has a service that is $247. It's called Trade the Open. And as part of it, we're going to give it away to a lucky winner. But as part of it, they're going to get access to lessons on daily trading ideas, access to the Traders Coach seminar with nice, huge QA format. Ken's going to share with you his live trading setups Monday through Friday. Normally it's $247. We're going to give away a lucky winner. And Kelly's going to give me a number between 1 and 11,039.
11,002.
11,002. See, the reason I like that one is you're rewarding somebody that just registered for the event off of the YouTube stream.
That's what I was thinking.
Probably. Or they
like
registered today. Yeah. It's a very good chance. But it's a Linda M. In the U.S. We're doing our best not to dox people. But Linda M., if you have a Gmail account and live in the U.S., there's a good chance that you just won Ken's prize. So congratulations for that. And we'll have Ken reach out to you in terms of claiming that prize and getting it in just a couple days. So there you go. Dugan, if you just want to do US, it would be $69. So $69 for US, $99 for US and Europe. Thank you for that question. Rahul, if you want to do Forex, thank you for that question. FOREX is actually included in all the packages. So regardless of what you sign up for, you'll get FOREX. And if you want to talk specifically about the packages that are available, sales chat, metastock.com/sales chat is a really good resource for that. So, and thank you for all the questions. I appreciate it. Our next presenter is John Osborn. John spoke yesterday. I believe it was yesterday. Yeah, it was yesterday. When you do these big events, the days tend to blur together with all the great content and speakers and stuff like that. But we have John in here, I believe it was yesterday, and he talked about like trender and identifying trends in a chart and stuff like that. Today is going to talk about the way that you can fairly value stocks and see if they're undervalued or overvalued. He does a great job. He's a really good programmer and a really good presenter as well. So John, let's bring you on here and get you going. How are you doing today?
I am doing pretty good. Can you hear me?
Yeah, I can hear you. There's always that, oh, is the audio going to work, or are we going to have to go to the oh no video?
Well, I was speaking.
Uh-oh. All right, I accidentally, and this is totally my fault, just ejected John from the webinar. And instead of making him the presenter, I ejected him from the room, and that was me. So give us a second and message him to get in touch with us real quick. And I'm sure he'll log back in as soon as he realizes what happens anyway. He's coming back in. Okay, good. So he's already on his way back in. It does take a second for him to get through the audio wizard, though. So again, my mistake. All this time I'll make him the presenter and not eject him from the room. Hey, John. All right. Well, his audio gets working again. We have our emergency book of dad jokes. So we'll just pick one out here for you. These are the good and the bad and the ugly. John, as soon as you get your mic working, go ahead and unmute it.
I am back.
You know what happened? It's my fault.
I know. Yeah, I got removed from the conference, so that's a nice welcome.
I meant to eject you, and I actually removed you for the conference. But I did then promised a dad joke. So why was the vegetable lonely? Because it had no pear. That's a really bad one.
I have a really bad dad joke.
Oh, go for it.
So when the Pilgrims came across on the Mayflower, it has to be for November, right? The Pilgrims came across on the Mayflower. They had Sirius radio. What station did they listen to?
I have not. Okay, go ahead.
Plymouth Rock.
Woo! That sounds like a good station. I'd listen to that too.
Plymouth Rock?
Yeah. All right. Very cool. John, I can see your screen. I can hear you. I promise not to eject you again today until you're done.
All right, that sounds good. And Jeff, I've known you for many years now, and I didn't know that you programmed an indicator and that you showed there. So that was pretty cool.
Yeah, but that's a story. But yeah, it actually is pretty cool. It's all yours, so I don't want to take any more of your time.
All right. Well, welcome everybody. I know I'm in a tough spot here, being right after lunch, so I want you to wake up, because yesterday I talked about a offering that we had that was hedge fund quality. Today, I'm actually going to talk about something that was created for a hedge fund, and we have access to it. So I want you to get laser focused on what I'm going to show you here. And I'm John Osborn. I'm from Basecamp Trading, and we're going to talk about that exciting patented technique that was created to turn a hedge fund around. And that turned around the hedge funds where it was hemorrhaging cash until it was making lots of money. And that allowed the hedge fund to succeed. So you're going to have an opportunity here to turn around your trading if you'd like. So let's go through our disclaimers and get started. And I want you to consider what I'm going to show you here, because you're going to have the potential to really turn things around here. So anyways, let me read a couple sentences here and we'll get started. So trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. Just remember, trading is risky. Don't trade with money you can't afford to lose. We've done our best to ensure the accuracy of the information I'm going to share with you today. This webinar is to provide you with the information you can use to help you make your own independent trading decisions. Past performance isn't indicative of future results. Markets are unpredictable. You want to be prepared. And the government wants you to know that trading has both rewards and risks. Again, don't trade with the food money. Don't trade with the rent money or the college fund. You'll perform better if you're using money set aside as risk capital. I'm not soliciting you to buy stocks, options, futures, or any other securities. Again, be careful. The market can take your money. But at risk, where it's trying to take your money, that's how we can take money from the market. And that's what we're going to be talking about today. So today, we're going to talk about how to completely transform the way you are trading and to start seriously growing your account by using a very powerful patented hedge fund technique. Now, I want you to imagine for a moment being able to approach the markets every single day instead of being nervous or afraid or wondering or not sure what to do, but instead you're going to arm yourself with a sophisticated patented software that a hedge fund developed to reverse their losses into spectacular gains. Now, if you had a tool like that, think for a moment, do you think you'd possibly improve your trading? I mean, just imagine being able to identify trades with pinpoint accuracy, just like a hedge fund does. If you had that information, if you had that tool, do you think it would help you drastically grow your trading account? Because if the answer is yes, I totally agree with you. And if you've never thought it was possible to get hedge fund decision tools like this, I have some great news. It's totally possible for you to get this tool and use it in your own trading. Now, maybe you're thinking to yourself, yeah, John, that'd be great. Great to be able to trade like a hedge fund, but those hedge funds, they're so sophisticated. They have smart people working for them and the best software and other cool tools. How could I possibly be able to have the ability or the resources to use them? Well, that's the good news. What I'm going to show you is how to see exactly what the hedge funds see in real time in real world markets so that you can stay ahead of the masses. And you're going to have the option to add the tools to your own trading toolkit today. So today, I'm going to share a tool that's essential to my own trading. And after you see it, I'm quite confident you're going to want to start using it immediately. Because once you see it, you're going to see how powerful it is and how it can elevate your trading results. Even more importantly, you're going to find out that you might be trading with a piece of information that's critical to your success that you didn't even know you weren't using. What's this tool called? It's called value charts. And I like to call it the hedge fund fixer for obvious reasons. And I'm going to explain how this powerful tool can make a huge difference in your trading. Like this $41 rise in Microsoft in a month, that's a 14% gain. Or this Apple trade, signaling a buy entry, making more than 8% in just a couple of days. Or this trade in Solo, where it signaled the buy entry on the 30-minute chart, and it made more than 7% in just a few days. Now, 7% may not sound like much in a few days, but don't forget, banks aren't paying you hardly anything, like a fraction of a percent over a full year. So if your money's sitting in banks, it's actually losing value, especially with the 40-year plus inflation rate that we have. So we have to find ways to keep our money at least staying at the same level through all this inflation. But that's not good enough for me, and I don't think it's good enough for you because you're here. You want to see that grow. And so if we can do 7% in 3 days, what does that do in a week? That's 14% if you could do it twice in a week. And if you can do that 4 times a month, suddenly we're up to, what is that, 55% and a month. And you were talking about turning your money around many times with this 7% gain in 3 days. So many times in a year. So this isn't small stuff. This is big stuff, even when you have little tiny gains like that. And we're going to show you some big gains too. Now, some of you may not know me. So I don't know if anyone heard me talk yesterday. I want to tell you a little bit about myself. I spent most of my professional career as a software engineer, and I've been investing and trading throughout my lifetime. And I sometimes get asked by people, well, if you're a trader, and you're using this, why do you teach others how to trade the markets? And the reason is my dad. And I mentioned this yesterday. You see, he was the one who got me interested in stocks many, many years ago when I was a kid. And he explained to me that the only way to stay ahead financially, even for an engineer like he was and I am, is by using the stock markets. He struggled to make money in the market, and he always thought he could do better. And I wanted to do better too. And I really wanted to figure out how to trade so I could teach my dad and pay him back for all the wonderful things he did for me over so many years. So I went out and I said, I'm going to learn this thing, and I'm going to spend whatever it takes and do whatever I need to do. And I struggled with that for years. And until I started following the teachings of base camp trading, where I finally learned how to trade, I finally got to the point where I could show my dad what to do. But by then it was too late. So instead of teaching my dad, which I would have loved to do, I teach others who are interested in learning how to trade so they can teach others, and on and on. So I hope you'll learn how to make money in the markets as I try to teach you today, so you can teach your dad or your son or your mom or your daughter or your husband or your wife. And when we succeed in trading, we can give back by helping others learn to trade so they can reach their financial goals in big numbers. And I know if we can all do that, that would make my dad really happy. So I'm not putting pressure on you to make my dad happy. I already know that my dad's happy that I'm doing this and helping other people get better at trading so they can have a better life and for them and their family. So let's learn how to take money out of the markets here. Now, I want to teach, and I want to see each of you achieve your goals. And what you're going to learn about today is something that has the capacity to get you back on track toward achieving whatever goals you had. Maybe you've forgotten about those goals, or maybe you set them aside and you weren't thinking on it. Maybe you've given up on those goals. I hope you still have them somewhere, because I hope you can rekindle those dreams again, because some of you will have the opportunity to transform your trading starting today before the end of this hour. So let me introduce you to the essential tool I keep talking about here and referring to help give you that hedge fund trader's edge in your own trading. In fact, like I said, I call this the hedge fund fixer, and you're going to learn a little bit more of how that works. And it's called MQ value charts. So let me start out by letting you know that you probably are missing something in your trading that you may not know you actually need to trade. Okay? And we're going to talk about the three components of trading. So we need three things in order to trade, and to trade well. First, we need price. Price is something that's provided to us as traders. It's the current and the historic price of the stock or commodity or whatever you're trading. Price shows us the movement in the markets, both where it is right now and also the history. Okay. The next thing we need to include when we trade is momentum. So I'm hoping all of you know what price is. I hope most of you know what momentum is. Momentum, what does that do? Well, it shows us the power and the potential follow-through of a market. Momentum can be identified through a number of indicators. Some of you might use something called MACD. That's a good momentum indicator. We prefer to use our own custom MQ momentum, so we're not using moving averages, but instead using true strength to be able to calculate it. Our indicator looks similar, but it gives us a little extra edge and a little easier to read a solution for us. So it's something we add to all of our charts. Now, the third part that some of you may not include in your trading, or you might think you are, but perhaps you're not, and you can let me know if you aren't later, is value. And value is different than price or momentum. Value lets us know whether something is overpriced or underpriced or fairly valued. Now, there are times when something's cheap, but it's still not a good value. And there are times when something is priced high and it's still a great value. Okay. So when you're trading stocks, regardless of price, we need to understand the current value to anticipate whether it's likely to rise or fall. Once you understand this concept, you can't even imagine trading in a market without having knowledge of what the current value is. Knowing value is critical because it can indicate the potential of price movement. Sadly, as some of you might agree, value is something that many traders don't have access to when they trade. You might think you do by looking at price, but it's not really value, and I'll explain that in a little bit. You can find during this presentation that your feelings about value, if you never heard of it, you're going to learn about it new, but you might change how you look at value and understand how critically important it is as separate from price. Most traders don't use it because they don't have a good way of identifying it. It's actually quite elusive to determine because value is not as readily available as price or momentum. There are a few things that come close, but there's only one place where you can get the patented hedge fund tool that's proven to show value. But I'm getting ahead of myself here. So let me explain a little bit more about why value is critical to your trading and why you're at a disadvantage if you're not using it in your trading. So what is value? Let's go ahead and talk about something. This is kind of a nice subject here, but imagine you're shopping and you're shopping for a diamond. Now you might have a budget in mind for that diamond and a price that you're willing to pay. Now, should you just go out and buy the cheapest diamond you can find without researching it? Or maybe whatever people tell you or a friend tells you, or maybe the jeweler tells you, or you read it online. But if you're just going out and buying the diamond with a price in mind, then you're buying it without consideration of value. If your intent is to have the price of the diamond rise over time, then just getting the lowest priced diamond isn't going to assure its price will rise or even drop. Right? If you buy a diamond without understanding its value, even at a low price, you might be paying too much and you'll never get your money back for that purchase. Now, if we're trying to invest in a diamond, there'll be a much better chance of its price rising if we buy a diamond that has great value, which probably isn't the lowest priced diamond. So hopefully you're seeing here, there's a disconnect between price and the value. You could go out and say, all right, I'm going to spend $3,000 on a diamond, which some people might think is a lot and some people would think is nothing, but that's a sizable amount to spend $3,000 on a diamond. And if you went out and just said, give me a diamond that's the best one I can find for $3,000, you may not be getting the best value, okay? Because you're focusing on price, not on value. Now, if we're trying to understand whether a diamond has good value or not, there's actually a process used by gemologists to grade a diamond based on criteria like identifying the impurities in the diamond that can change its color or how clear it is, or the ways that the diamond is cut plays a role in how sparkly the diamond is. And of course, the diamond's weight or carats is important, and where it's from is also going to affect its value. So it's quite a complex process that takes a lot of knowledge, training, and years of experience, more likely, to accurately grade a diamond to determine its value. And if we're looking for the price to rise after our purchase of that diamond, it's essential to make sure it's a good value at the time we buy it. Now, ideally, we can have a diamond independently certified, which lets us know the value of the diamond. And we get a piece of paper that tells us that the diamond has certain characteristics to it to tell you about the value. Okay? And once we understand the value, we can determine if the asking price that we're being asked to pay is too high or too low. Do you see how value is different than price? Because the price doesn't necessarily match what the value is. If we can buy the diamond when it's undervalued, meaning that the price is lower than what the diamond is valued at, it's likely a better purchase than just finding a diamond that's cheap and buying it if the value is unknown. So if we don't know the value, then who knows if the price we're paying is high or low? So as you can see, price alone doesn't determine value, even though most traders think that value is determined by price. But you need to know the value to be assured that you're getting your money's worth. And it's not a lower price that'll help you assure the price will rise. It's buying it when it's undervalued or even fairly valued. Maybe you'll pay a fair price. The jeweler says this diamond has these features and we sell that for this amount. Well, at least you know that that diamond has been certified and you know the value and you're paying a fair value for it. Okay? But if you can get it undervalued and know the value, that's even better. And that increases the chance that its price will rise over time. It's knowing value that gives you that clarity. Trading without understanding value is letting the seller tell you what it's worth, right? If you don't know what the value is, you're just taking the seller word for it. And if you think about that, if they're selling it, they probably have overvalued it to be able to make a profit on it, or overpriced it compared to value to make a profit. Because in general, they probably don't think much of that diamond, because what if they're going to sell it, they don't think it's going to go any higher. So why would you want to rely on the seller to indicate its value? Now, do you think that hedge funds trade without understanding the value of what they're buying and selling, regardless of what the price is? They understand that you need to know the value to be a wise buyer. And now, hopefully, after this explanation, so do you. So hopefully you understand the difference between knowing the value of something and the price that you have to pay to get it. All right. So what happens when we look at our charts when we're trying to understand the value? Whether it's stocks, futures, options, Forex, whatever, when we look at a chart, we see a collection of prices, not value. How can we tell by looking at a chart of prices whether the current stock price is overpriced or underpriced? It's tough to know without knowing the current value. Yeah, we can look at previous pivots and talk about all that stuff, but we're missing what the real value of that market is. We might think we have an edge when we look at a chart and then we look at those history of prices. But unlike the diamond, where we have tools that show us what the value is, when we can actually plot out those past prices and see where it's been, which can be a little misleading. So let me ask you this: if price is rising and we don't know its value, how do we know when it's reached the point where it's likely to move back down again? Because really, that's what's important, isn't it? It's knowing whether when we buy something, does it have room to move higher? Or if we sell something, does it have room to move lower? Or is it ready to reverse? And that may have very little to do with price alone. We need something to help us determine what the current value is. So for diamonds, we do have the ability to identify value, and that lets us know if we're paying a fair price or not. Then we can determine if the price we're buying at is undervalued, or where we can buy it. If it's overvalued, we know to stay away, right? Even if we don't have to look at history or anything like that. We can just look at value. That's great for diamonds, but what about the stock market? There isn't some type of certification for stocks that we can look up and find out what the fair value is. So if we can't look at Apple, what's the value of Apple right now? Now, if there was a book or a certification that gave it to us, we have to keep in mind that stocks change very quickly. So if we had a book, it would be outdated as soon as the next day. Or if we had a certificate, it would be outdated as soon as the next day. So what can we do? We hopefully understand that value is one of the three components of trading, along with price and momentum. We've got to find a way to understand what the value of a stock is if we're going to be buying it when it has the potential to rise. Well, the way we can find that is through the solution that we're offering today. It's called value charts. And this can help identify value in the stock market. It's the indicator we use to identify the current value of any market on any time frame. It works on stocks, options, futures, Forex, cryptos, any symbol, and as I said, any time frame. And since it's patented, you can only get it from Basecamp Trading. And not only is it patented, but Value Charts has been analyzed and vetted by leading experts at key business schools like Wharton, University of Michigan, and UCLA. And it's been hedge fund proven, as I've mentioned, where here's what happened with that. We were incorporating Value Charts approach into a hedge fund, and it changed it from losing $62,000 a month before using Value Charts to generating $27,000 a month, which is an $89,000 a month improvement to that hedge fund by simply adding Value Charts as a filter to its trading. Now, I know if it can turn around a hedge fund in such a dramatic way, it can certainly improve anyone's trading. And that's why I call Value Charts the hedge fund fixer. So you're in the right spot. Be glad you're here because no one else can offer this tool but Basecamp Trading because it's patented. So let me tell you more about this unique and valuable hedge fund fixing tool and why it's so important. Now, Value Charts does all the calculations to determine value in the background. And it could get really complex. And as an engineer, I have to be careful when we create something to keep it simple because we want it to be very easy to use. Thankfully, Value Charts is really easy to use. In fact, I would say that you're almost ready to use it just by looking at the screen. It makes the complexity very manageable. So the concept of value is simplified down to just 3 colors on our charts, and that's red, yellow, and green. Here's the color mapping that we use. Now look on the left over here. This is Value Charts as an indicator. Okay, so look at the value charts on the left and map that to the color bands on the right. In the middle here, we have green bars, and that's considered to be fair value. So it means where value is fairly valued. Above that, we get into the yellow, and that means that the market is moderately overvalued. In other words, we're getting away from being fairly valued and starting to get overvalued. And if we get into the red up here, that means we're significantly overvalued. Similarly, if we get undervalued, down here, it turns yellow, and red means significantly undervalued. Okay, so now I haven't told you that much about this indicator, but let's see if this is simple enough to follow. If I were looking to buy a diamond, where would I want to buy it on this chart? Okay, think about that. Where would you want value charts to be depicting the value is if I wanted to buy the diamond on this chart? Anybody have a guess? Okay, the answer is going to be you want it to be significantly undervalued. Right? That way the price we're getting it at is below its fair value. This is how we want to buy our stocks so they have the greatest chance to rise in price, is we buy them when they're significantly undervalued down here. In fact, if you're following what I'm saying, you're beginning to see how value is actually more important than price. In fact, we can determine whether or not we should be buying something without even knowing the price if we use value. Now, I bet no one has ever told you that before, that you could trade the market without knowing the price. Imagine that. But perhaps you've never talked with someone who ran a hedge fund before. So let's learn more about how we can use this critical information in our own trading. So why do we use these 3 colors? Because we wanted the tool to be easy to use on day one for everybody who gets it. And these are the colors that should already make sense to you. The colors are similar to what you'd see in a traffic light, where green means go, yellow or amber means caution, and red means stop. So like a stoplight, we can drive right through the green lights, and then we watch out for when they turn yellow or even red. When it's yellow, it means caution, and red means stop. For us traders, red means stop and maybe even go the other way when we're using value charts. So value chart signals help us know when it's time to move ahead and when it's time to be cautious and perhaps stop and even reverse. Most traders, as I said, don't have these signals for value. They don't know when it's okay to proceed or when it's time to stop. And just like in driving, it's dangerous to trade without heeding these signals. How can you follow them if you can't see them? Now, how do we use this thing? Well, in its most simplified form, we want to buy markets when they're undervalued and sell the markets when they're overvalued. That is, we buy when they're on sale down here, and we sell them when they're overpriced from a value perspective. And just like when we're shopping, we don't want to buy something if it's overvalued because it's not likely to keep going up. Nor do we want to sell something that's already at a low value because it's not likely to go lower. So we use value to help us determine if the market has more room to run in whatever direction we want it to run in. If we're in a long position and we start to see red bars in value charts at the top, then we're likely to stop seeing a rise in price. And if we're short in a market, we see red bars appearing below on value charts, then we're likely to see it stop falling. So these would be great places to take action. So what does value charts look like on our charts? And I'm looking at some of the responses there. I see undervalued, undervalued, significantly undervalued. Absolutely, you guys all got it right. And Lisa's saying, admit it, you have me hooked. Good. I want you to use this tool. Okay. I do. So what does value charts look like on our charts? This is Tesla on a daily chart. Okay. When we only have price available to us on our charts, how do we know whether the current price is fairly priced or too high or too low? I'm not even showing you prices. I don't need to show you prices. Okay. How do we know on here whether price is too high or too low? It doesn't matter what the price is, really. To be honest with you, it's actually difficult to tell. Okay. Yes, you can use previous pivots and maybe guess that maybe it'll bounce here or bounce there or whatever, but there's no indication here whatsoever of value. Okay. Now, especially on the last bar here that you see way over here all by itself on the right, okay, it appears that price is starting to trend lower. And if I was using price alone, and price action is telling us that the market is likely to continue falling from here. So many traders would see this as an entry point to take it short and for the price to fall further. But before we go further, let's turn on value charts and light that up. Now we can see the whole new dimension of value. Look at the high and the low peaks on the price chart, and then look at the comparable highs and lows in value below. If you notice, value isn't necessarily aligned with the higher low price pivots. Look how we got to a high price here, and yes, we did get overvalued there, but we got even higher here, and look, we didn't get as high on value. Even higher here, and we were dropping here. And then look what happened. We actually fell. Okay? You may not have been able to determine that by looking at price alone, but value was screaming at us that, hey, watch out, we are starting to drop here. Okay? This is why value must be considered separately from price. They're not related. Okay? They're related in whether or not you get good price for the value, but value and price do not necessarily move at the same time. They often will, but where they don't, that's where they really reveal some extra special information. Okay? So most retail traders aren't trading with this knowledge of value. It's hidden from them. They aren't even considering it in their trading decisions. They're using price alone. But you know who does use it? Hedge fund traders. They have access to this type of information, and they use it in their decision making to make a much more informed decision, a value-based decision on when to get in or out of trades. Now, some people ask, what do the hedge fund traders know that I don't know? And this is a clear example of one of those things. If you had the info that they have, that you can see here, now, could you make the informed decisions that they make? Of course. That is, with value charts, you can begin to trade your own account like a hedge fund would trade it. Now, let's look at that last bar again over here, way over on the right. But this time, let's add in the knowledge of value. Remember, price was telling us that it was heading lower. But what's value charts telling us? Hopefully, you are starting to understand this already, that value charts is indicating moderately undervalued here. That means that this market is less likely to keep moving lower. So without value charts, we might have gotten into a trade expecting it to move lower. But with value charts, we can see that the market's already undervalued at that point, and taking a trade to the downside here is probably not a good idea. In fact, value is telling us that maybe it's a time to buy this stock. Maybe we should be buying Tesla here. So let's see what happens. Let me just go ahead and advance time a little bit here. And now we can see it turns out that value charts would have saved us from a potential loss. See, that was actually the low, and we took off to the upside there. In fact, we got that reversal at that point, and it was an optimum entry point for a long position. So instead of taking a loss here, when you don't have value charts, with value charts, you could have had a nice gain if you'd gotten in with value charts. Now, if you're new to using hidden value like this, it might be surprising when this happens, but it's something that you can easily get used to when you start including value in your trading decisions. Once you're trading with value, it's hard to imagine trading without it. This is the kind of information, like I say, that hedge funds have access to it, and they use, and it gives them an edge. And it's this kind of inside information that could give you the same edge in your own trading. More importantly, without it, you might start to recognize you're at a serious disadvantage. And for many of you up until today, you didn't even know that this existed. Now, let's talk about how value charts can help anticipate price movement. Because in other words, we want to know how can we use it to make better trades. So does Warren Buffett use value charts? I don't know. I don't know if he does or not. Can you use it for intraday charts? Absolutely. We do it all the time. Would we be able to access a recording of this at a later date? Yes. All right, so let's talk about how we anticipate movement with value charts. So this is the really cool part right here. I hope you pay attention to this specifically, because this helps you decide whether or not you want to act when you see a color that's non-green. So one of the ways that we can use value charts is to think of it in terms of its likelihood to stop price moving in a current direction. That is, if we're moving higher and we get significantly overvalued, red light, then there's more than a 90% chance that we're not going to move higher. 90%, that means 9 out of times when we get a red top of that at that high on value charts, it's not going to keep going higher. It might go sideways, it might reverse, but it's 90% chance it's not going to go higher. And similarly, if we're moving lower, there's a 90% chance when we get a red toe, as we call it, that we're not going to keep going lower. Okay, we might consolidate and we might even reverse and go higher. Okay, so this means that 9 out of 10 times when we get a red value charts indication, price will not continue in that direction. It's as if a stoplight just lit up and it's time to stop and maybe even reverse. Now for the yellow is also pretty high. For moderately over and undervalued colors, we have greater than a 66% chance that the price will consolidate or reverse when turning yellow. That's 2 out of 3 times that it happens. So when you get to yellow, it's significant. A lot of people just want to focus on the reds, but they're missing the yellow, and that sometimes, depending on the market, is more important. What this means is that if we see red or even yellow on value charts, it's likely we're going to pause and might even reverse. And this is how we can use hidden value to our advantage, just like we could have in that Tesla example. So here's an example of how value charts can help us with anticipating value extremes. I'm going to draw a line here, or have the PowerPoint draw a line at all the points where we got significantly undervalued. And then I'm going to show you the result on price. As you can see, every time in this example where we got significantly undervalued, we bounced back up again. Okay, not only did we just not stop moving, we actually reversed in these examples. This is a little extreme. Sometimes we just move sideways, but in this example here, they're all up. And the same thing happens if we look at it from the overvalued perspective. When we get significantly overvalued, each of these indications here are lining up from value charts to the price where we got significantly overvalued. And look what happened here. This one kind of went sideways here. Okay, this one's kind of sideways, but when you have these beautiful reversals with major reversal points, you got to just love it. Okay, so this makes it clear how important knowing value is to your trading and identifying better places to get into your trades, and when it's time to get out of your trade for maximum gains. Now at Basecamp Trading, we're all about price action trading. You know, we give all of our platinum members our Naked Trading Mastery course because we want them to get up to speed quickly on how to read charts, how to read price action, because price action is core to everything we do. We call it that course, and then the technique, we call it naked trading, not because we're trading by ourselves in a weird way. It's because it refers to reading what the charts are telling us about and what's telling us behind all the indicators. We cringe when we see somebody put up a chart and they've got 17 indicators on the chart and prices in a little tiny sliver at the top, because your most important indicator is price. Okay, you need to have momentum and value, as I mentioned before, but price is essential. You still got to see it. I said you could trade without price in value. That's true, but at some point you have to decide on a price and use it. And why not use everything you have? So we want to use all three. So we do use indicators, and those two, the momentum indicator and the value indicator, is what we use. We want to make sure we can see through those so we can utilize fundamental price action in coordination with just a few critical indicators. And value charts is one of those critical indicators, because you need something, and you need an indicator to understand where value is. So We use it in combination with price action to trade, and we look for certain setups like price level breaks, where we look at previous pivots, we look for trend lines, we look for patterns like pennants, triangles, head and shoulders. And with all of those, we also bring value into the equation. Let me show you what I mean by that. Here in this example, we're trending higher, and then we start to put in a lower high, a lower low, and we have what we call a micro downtrend. What we're anticipating here is that we're going to break through here to the upside. The question is it if the bar ends right here as we approach this line, are we actually going to break through? Without value, we can't really tell. Okay, we might bounce off of this and move lower. But if we turn value on, we can start to anticipate whether or not it's likely that we're going to see some follow through. So look down here at where value is at the time this bar closed. If you look at this, you'll notice that it's totally green. It's fairly valued, especially where the close is. The close is fairly valued, which means that there's nothing, we're not yellow, we're not red. So there's nothing stopping this from likely going through here. So we can take this trade. We don't have to worry about it stopping here and going back. There's room for this to move higher. Okay, because we saw the value of it, we can determine that it's not value limited. So let's see what happens. Oh, we jump right up and fly higher. In fact, we fly so high, we end up getting into the overvalued and even the significantly overvalued. Okay, so this would have been a great trade. We went through this pivot, we went through this pivot. This could be some of our targets. We could have partial profits. And then we notice, well, what do you think is going to happen from here? Now, some other traders might be expecting it to just run, run, run. But since we see that you're significantly overvalued in red, we say, hold on, that's that stoplight. We need to cool off here a little bit. Maybe we should just close this position right here because it's not likely, remember, a 9 out of 10 chance that it's not going to keep going higher. In fact, sometimes when you break through a level like this, you come all the way back and retest that break. And we call that a last kiss before it goes off and runs higher again. So we look for that. So I would say there's a good chance when I see a breakout here going up into the red so quickly that we might pull back. Well, let's see what happens. Look at that. Came right back to our line. No surprise. Value charts told us it was ready to come back the other way because it got extended to the upside on value. We came back and sat right at the line. But now look what happened. We're back to green. And if you look at this little closing point, we're right in the middle of the green here. So you could make a case that we're done with the overvalued. And now that we're reflecting off of here, maybe this is a last kiss where we can jump back in again. Let's see what happened. Look at that. We took off again. So this time on this break, not only did we make our first and second targets once, we were able to let it pull back and then jump in the trade again and ride it right back up again. I hope you see the power of this and how value can guide us through that entire trade. Even though we're still using price action to trigger the trade, we can use value to help us steer our way through the trade and maximize and double, in this case, our gains. Pretty cool stuff. Now that you've seen how value charts can help us identify the critical value based on or where those critical turning points are in the markets to help us trade, let's look at some of the other enhancements that we've built into the tool. This is going to make it easier to use the tool and help us get even better at our trade entries and exits. And of course, that maximizes our gains. So while we can use value charts colors to indicate when to enter and exit, we provided some extra analysis tools to help further. Okay, we've got signals here. We have VC buy and VC sells. Thanks to MetaStock's technology, we can add these in. This is the only value charts implementation that offers these signals, by the way. And we have two sets of signals. We have our buys and sells, and we also have pressure signals, how I called it. So when we pull back, you can see here that there's a start of not necessarily a buy indication, but pressure that we're going to rise. And then here we got pressure that maybe we're going to stop falling. And sure enough, we get a buy signal right here. We get in, and then here are the pressure signals to the downside, saying that maybe we should take some profits here and pull back. All of this is being done with the information that we're getting from value charts. Over here, we get a sell signal, and while it took its time before it fell, it was still pretty bearish from the point that we would have gotten in back here, and it was a nice trade. Okay. Now, what I personally like to do with these bullish pressure signals is once we get to value extremes, I want to lock in the gains. Like here, when we got up to the significantly overvalued here, but I don't want to just jump out because we could keep running. So what we can do is hold on here, maybe lock in gains on a previous pivot or a previous bar, and then see if we can get back to the green value. You know, it's easy being green. Get back to green, and then maybe it will go back up again. And that's what happened in this case. In fact, we went right back up again to significantly overvalued again before it pulled back. Okay. Now, this might sometimes feel a little bit like we're cheating compared to trading without value charts, but it might even make trading fun again if trading's been frustrating for you. You're also going to get value trend dots, which can, if you don't want to use the real estate of value charts down here, you can get the notifications up here. These are a little more restrictive than just high pivots. It's more than that. It's got a little bit more smarts built into where these get positioned, but they will be able to show you value charts conditions right on your chart, so you don't even have to have value charts running down here. Plus, you get the value trend ribbon down here at the bottom. That's tuned to be highly responsive and indicating bullish or bearish bias, and that's based on another indicator called MQ momentum. And if you notice, there's alignment between the trend statuses down here and the movement that we see on price and in value. So we can use it as a separately controlled indication to work in coordination with our value chart signals and our price action. Now, all of these work together to help us find optimal trade. And this is a real quick example here. I wanted to show you this. We got a VC sell chart. This is a weekly SPX. VC sells right here, and we ended up having a bearish indication. We pulled back. Now, these are weeks, so we had 2 weeks of pullback. You can see we got down to significantly undervalued. This is all while we were in a bearish status with our value trend. Then we kind of settled down here a little bit and bounced back up off of the significantly under and moved back up all the way until we started to get bearish pressure again. And right at that point, we got significantly overvalued. Now, even if you don't trade the SPX, you know, the SPX is kind of like an overview of what's happening in the market. You can just chart it on the SPX. You don't have to trade it if you don't want to. But by charting it, you can have a feel, like in the back of your mind, or however you want to put it, of what the overall market is doing. So we can see when we got this VC sell signal on the SPX, we can expect a couple of weeks of down moves. And then when we bottom out here, we can expect a few weeks of up moves. And we can use this as a macro filter to guide us in our trading. It's pretty cool stuff. Now, I also want to include another indicator with this package because it's so important. We use MQ momentum on all of our charts. So it includes MQ momentum. That's one of the 3 that we have. So prices, the price chart, MQ momentum is what we want to use. So we're including that. You don't have to use MACD. You can use our true strength momentum. And you also will get value, of course. And all 3 of these work together to help us manage things. Real quickly, what does momentum do? It tells us the speed and direction of the market, and the histograms tell us the power. How do we use this real quickly? Well, there's all kinds of ways we use this, but the easiest way to do it is to look for confluence or convergence between price and momentum. So for example, if we're rising in price here, as long as we're rising in price on the fast line here, and you can almost look like it's a price movement here, if they're both pointing in the same direction, then we're likely to keep going. Okay, and then when momentum starts moving lower, price will too. But we can also use it like over here, where we have a lower price, but look how momentum was moving up. So if you draw an imaginary line from this point down here, this was a lower white line here. And then here, even though price is lower, momentum was telling us, don't be fooled. We're not as bearish as we were over here. And what happened? Well, we took off to the upside. This is called a bullish divergence, and we look for these all the time in our trades. Another technique you can use is multi-time frame analysis, pretty fancy name. All it means is we use two different charts. We look at what's happening on the higher time frame and align that with what's happening on the lower time frame. Now, all these things are included here, but there's even more. You're going to get the expert commentary, which gives you text descriptions of what any chart bar that you select as. So if you have a question about what do I do with a buy signal, this will tell you. What do I do if I get a significantly undervalued, not only at the close of the bar, but also what the extreme of the bar did. Okay, so it gives you that extra guidance live in the chart. There's 8 explorations available to you, which will search for value-based conditions, not just the buy-sell signals, but also when you're looking just for the significantly over and undervalued, or what I call the extended overvalued and undervalued, which is even beyond significant. And then you can just look for where are we getting that little bit of pressure, where we're in the middle of a run and we start to get a little bit of sideways movement. So it's a good opportunity to get in on a big run that's taken a little break. And we give you a user's guide. So most people don't like to read user's guides. I know that from supporting people with things. But some people do read it, and those who do are going to get that much more out of it. So that's available to you. And I hope you can use the tool right out of the box. But if you want to read it, it's going to make you that much better at using it. And that's on top of all those other things we talked about already. And when we talk about value charts, we're just scratching the surface here. There's lots of other ways that we use value in our trading. We have names for things like value range trading and value divergences, similar to momentum divergences. So there's more that we can learn. There's not so much, we can't cover all that in an hour, but they're there if you want to learn them and expand your use. Ultimately, value charts can be adapted to fit whatever you want to do. If you just want to, if you want to make it complex by learning those other things, or just keep it simple where you get a buy signal and a sell signal and just write it out, it's all there for you. So as you can see with value charts, it can transform your trading. And I hope you can also see that if you're trading without it, you're at a serious disadvantage. Because if it ever feels like the market's chewing you up and eating you for lunch, perhaps this time you got the tools and the information that the hedge funds are using. They have these tools that help them make the best choices. Why couldn't you have those too? And now you can, because you can get it right now and get those same signals that you've seen here, like this VC sell signal that got us 12% in just first hour and a half of the morning. Or this Facebook trade that made us $21 a share over the weekend. So I told you earlier I would unlock hidden hedge fund techniques to improve your trading, and then I would show you how easy it is to use this tool like a hedge fund and expose that extra information that's behind the chart so you can get those big profits. Now you have the opportunity to transform your trading with this tool if you're ready to do so, and I hope you are. Because once you start using this, you're going to look at the markets very differently. Don't forget, it's patented. You can't get it anywhere else. And it's been vetted by key business schools. These are the big business schools across the country. Okay, so you can start trading like a hedge fund today. Remember, you're getting all 3 of these indicators along with the layouts, the explorations, expert advisors, the trade signals, the dots, user's guide, and more. And explorations. I mentioned the explorations. So here's the thing, though. You also get the 30-day money-back guarantee. And we don't offer that in all platforms. This is something we only do with MetaStock. So you can give this a try. See how it changes your trading. If it doesn't work in the 30 days, then send it back. If it does work, let me know. All right. I want to hear your success stories because, you know, I'll thank my dad and say, hey, Dad, look what we're doing. So there's the link for it if you want to jump in. Remember, you try it out risk-free and take this opportunity to trade with this hidden information like a hedge fund does. So you can teach your dad or your son or your daughter or your friends how to make money in the markets. Remember, you get all this stuff. Okay, and let me check to see if there's any other questions. Jeff, is there anything you wanted to add here?
Yeah, let's see. We did have a question from Sean. He wanted to know if MQ momentum was the same as the true strength indicator.
No, it's not. It uses the concept of true strength to do its calculations, but no, it's a separate indicator.
Sean wants to know if it works well for gap trading, I think. I think that's what he's asking.
What was it? Off of what trading?
Gap.
Gap trading.
Gap trading.
You mean what do you mean by gap trading? Do you mean like in the morning that you get a gap and then you want to see that gap fill? Is that what you mean by gap trading? There's all different kinds of gap trading.
I'll let you know if he responds.
Okay.
We have a couple of questions with regard to if it only works on MetaStock. It does work on Ensign, eSignal. Does it work on Thinkorswim?
Yeah, it works on Thinkorswim, TradeStation, TradingView, eSignal. Let's see, NinjaTrader.
Okay.
I think.
Of course.
Yep. Go ahead.
Go ahead. No. Go ahead and finish.
Yeah, all those things. Most of our stuff works on that whole slew of stuff, but none of them, but MetaStock, have all these features. So you won't have the explorations, you won't have the signals, you don't get the value dots. Some of them you have to buy a separate component to get it on the other platforms. So this is, MetaStock is our premier implementation.
All right. Thank you very much, John. I'm gonna also talk about the bundle where they can get this and Trender from yesterday. So
that would be a great deal.
Yeah, absolutely. Thank you so much. It's so good to have you in here. You do such a great job. I really appreciate it.
All right. Good luck, everybody, and take advantage. Just try it for 30 days. See if you like it, and I hope you keep it, and I hope it makes you get to your goals, get those dreams back again.
All right. Thank you much.
Bye, everybody.
Okay. Bye-bye. Let me go ahead and do this real quick. And if you were here yesterday, I'd make myself the presenter here. I do love value charts and the patented and the success that they have. We're not going to go through all these because one of the things John does is make my job so easy with kind of talking about what's included and helping you understand. But here at the show, we're going to give you a $9.95 price. That's going to include a training class that we put together. If you don't have a copy of MetaStock, you should get one, and we'll give you a free trial with this. We're going to give you the data region of your choice. We're going to give you that money back guarantee. We're going to help you get everything installed. You'll have unlimited access to our support team. And all this stuff really does make a difference and is helpful. So you can do that at 800-882-3040 if you want to talk to one of our sales guys. You can chat online with metastock.com/saleschat. If you remember from yesterday, we talked about the Trender Pro and its color coding and the ability for everything to do all of that kind of stuff. If you want to do value charts and Trender Pro at the same time, for $300 more, you can get both of these add-ons, the patented value charts and the Trender Pro 2.0 with everything they showed over both days. So I'd say that's the better value. Get both of them. We'll still give you both add-ons. We'll give you the training classes that come with it. We'll still give you that 30-day money-back guarantee and the trial and the access to support. But if you like one of these, you're going to like both of them. And they've been very, very popular. So to order those both, give us a call at 800-882-3040. Or if you have questions, you want to kind of ask some questions or maybe get some charts, feel free to reach out to our sales guys. They do a really good job. metastock.com/saleschat. Sales chat. I was looking at the chat and I saw Shaw say, "Hey Jeff." I was like, so that's why I said sales chat. metastock.com/sales chat. Sales Jeff will go nowhere. All right. Let's say thank you to Stocks and Commodities Magazine for sponsoring today's event. They've sponsored this for a decade, and we really appreciate it. If you buy MP Trender, they're going to give you 2 years of as a subscription for free. And Kelly, we're going to very, very quickly give away a prize if you're ready. Okay, so the prize that we're going to give away next is actually Mark Leibovitz, The Trader's Book of Volume. This is a $40 book. You can buy it on Amazon right now. Mark talks a lot about volume reversals, a volume analysis. He does a newsletter on trading gold and quite a few other things. But he's donated 5 books for us to give away as part of conference prizes, and we're going to give one away right now. So Kelly, you know the drill. We're going to go ahead and open up this spreadsheet. I'm going to remind you that you need to give me a number between 1 and 11,039. I'm going to key that number in, and we're going to see who it matches up to.
4,499.
Okay. Jonathan M. I haven't doxed anybody today. Are you proud of me?
I am proud of you. That's pretty good.
Jonathan M. is the winner of the Traders Book of Volume. We'll reach out to you to get some more information. If we don't need, we might need an address, confirm your prize. But if your name is Jonathan M. and you're in the U.S., you have a Yahoo address for email, you probably just want a book. That's a very, very good chance. So congratulations on that. I'll make a note of that, and we'll make sure that we follow up with you within about a week or so. So our next guest literally wrote the book on options. It's been one of the most popular books on options of all time. I think it said, I was looking at his bio, it sold 300,000 copies. The book on it is Options as a Strategic Investment, one of probably the most respected traders and options traders in the industry. Love having him on here. We're going to go ahead and bring you on here. Larry, how you doing?
I'm doing great, Jeff. How about you?
Good. It's good to see you. The conference has been going really well. I'm going to pander to the audience, but they've been very, very. They've asked some really good questions. It's been a good audience.
Great.
So anyway, let me go ahead and make you the presenter. I'll make sure we can see your screen. And we can. All right, that's it. I'm going to get out of the way.
All right, thanks. So do I have 45 minutes, Jeff? Is that it? I think we do. So let's get started. We're going to talk about the current market and what our option indicators and other technical indicators are saying about this market.
Hi, Larry. About 55 minutes.
Okay.
So. Okay.
Great. So just a little bit of background on our company. I started the company as a derivatives research firm back in 1990 after I came off a prop desk on Wall Street. And we were originally doing research, selling data, analysis, that sort of thing. But we had some very good calls in the financial crisis of 2008. So after that, at the request of some of our clients, we moved into money management. So we're currently both a CTA, which is commodities side, and RIA, which is stock side. And we manage option-oriented accounts. Most of the accounts are using our one particular strategy that we use, although we do some other strategies for specific, particularly larger accounts. And then along the way, we've developed an option education division. And so we do things like these webinars, and we also have mentoring as well. So if you're interested in that, you can follow up through our website. Meanwhile, and I will come back to this later, we're going to make the PDF of this webinar available to you for free. So you can download it yourself. You just need to go to this link, optionstrategist.com/MCM web. I haven't posted it yet. I will afterwards. I just, in case I find some mistakes in here, I usually correct them before I post it. In addition, we will be offering some discounts on a couple of our products, and especially our successful daily newsletters, as well as our home study course. So I'll come back to that later. So what indicators do we look at? I really end up looking at quite a few indicators, and as we go through the webinar, you'll see that several of them are in play right now. But the four main categories are the chart of SPX. In other words, if your indicators are, say, bullish and the market's trending downwards, then you better get new indicators, because the chart is the chart, the price is the price, and so it always pays to keep in mind what the chart of the index is showing. Then we look at put call ratios in several forms, mainly equity only put call ratios, although there's some very interesting things happening recently in both total put call ratios and CBOE equity only put call ratios. Then we also look at market breadth. We have an option oriented twist on that. And then we look at VIX, and quite a few things to have to do with VIX, including the VIX derivatives, the futures, and the options. So one overriding rule, actually two, but we'll start out with this one. that is prevalent in all of our writing, our teaching, our trading, is that oversold does not mean buy. So the market can get oversold and stay oversold for quite some time. And, it's sort of like, John Maynard Keynes said that, the market can be remain irrational for longer than you can remain solvent. That sounds like a guy who's tried to buy an oversold market to me. So we wait for confirmed buy signals. All of our indicators pretty much have rules about entry and exit and other things like that. We'll go over some of those later. The companion argument is that overbought does not mean sell either. So when you get into an overbought state, and right now we actually have one, I believe. When you get into an overbought state, the market can continue on higher, and that would be more like when the market's really roaring and it's taking off and everything's getting overbought. You really need to wait for a change of trend of some sort. So I'm not one of these people that will ever pick the bottom or exact bottom, because that's not what I do. I think that the few times you can do that are completely obliterated by the hundreds of times you tried to do that and were wrong. So we wait for a change of trend, an actual confirmed signal. We don't try to buy the falling knife or catch the falling knife, however you want to say it. So here's a long-term chart of the S&P. And the thing that stands out on this chart is those two blue trend lines. Those are drawn trend lines, surrounding lower highs and lower lows, and that's a bear market. I don't care what the percentages are. The media loves to say 20% is a bear market, blah, blah, blah. That doesn't really mean anything. What means something is the trend of the chart. This chart's trending down, and there's no other ways to state that. Maybe we're trying to find a bottom somewhere along here, but as long as those trend lines are intact, then especially the top one, then this is still a bear market. So we saw a 35% decline in a very quick 1 month bear market back in March of 20. As the market started to rally out of that, there was a very minor correction in the fall of 20. And then an even smaller correction in the fall of 21. But now this year, it looked like we were bumping up against resistance there around 4,700. We broke out to a new high, which was a complete, sucker move by the market. The market is trying to, cause you to do things that cost you money. Let's just put it that way. So in very early January, the market peaked, and then we started to head down from there. So this bear market's been in existence since then. We did drop as much as 24% by June, and then this October we went to new lows briefly, and we're down 27%. But we're still heading down. You can see that if we were to go down and, let's say, touch this bottom line again, you could be talking around something around 2,800 by the time that happened. So caution is still advised. You can trade buy signals around this, and we have been, and we will continue to do so. But by and large, we are maintaining a core bearish position in all of our newsletters and accounts as long as this downtrend line is still in effect. Now here's a 1 year chart of the S&P 500. We can talk about a couple of other things. First of all, the 200-day moving average here is running right near the trend line. This is the 200-day right there. Of course, there's the trend line. The last big rally failed right when it hit both of them. So, that's significant. I mean, bulls right now are hoping that it can at least go up and maybe challenge it again. A challenge at this point would probably occur somewhere in that neighborhood if we were able to go higher. And but would not get too excited unless that uptrend line were broken. Now, bear markets are dotted, and more than dotted, replete with oversold rallies. And the oversold rallies always look so good, especially when they start out, but then they end up costing you money unless you're very nimble. So these green numbers here are the distance of these various oversold rallies. So that one was 380 S&P points. This one was only 280. This one was 500 all the way back to the high. This big one here that we had in July was 550 points, took us all the way to the top again. And now, just recently, from that intraday low in October to what so far has been the high in late October, that was a 410-point rally. It may not seem like it, but it was. So it was a pretty big rally, although on a closing price basis, it wasn't as big because the market rebounded that day on a kind of an intraday reversal. So this chart isn't telling us anything particularly different. All these circled areas here are island reversals. There were 3 of them. 1 of them has been closed. But an island reversal occurs when the market gaps up like this, and then later, usually at a very similar price, gaps back down. What's left behind is called the island, and usually that's a very bearish formation. So you can see this one here gapped up right there, gapped back down right there, and that set off that decline. Then there was a second one that set off this decline. Then there was actually a third one right here, but that's been covered up by this latest rally, so I'm not really showing that on the chart as having any more significance, but it did drive that last leg downwards there. So those other 2 are because people that bought in that area will, if they're still long, will be glad to sell when the market gets back to there. That's what resistance is all about, really. And it's not some like magical thing. It's just people have memories, and if they've had a big loss and now they're back to even, they're thankful to get out. So those 2 areas would be resistance in any case on the way back up, regardless of the trend lines. So just to kind of summarize, this market has been bearish since early this year. The support at 3,700. Let me just back up. You can see last week when the market was actually doing pretty well coming off that October low, and then it ran into Fed Chairman Powell's little speech after the FOMC meeting. It caused 2 huge down days. Bottom right around 3,700 on 2 different days, and then went higher. So that's support 3,700. The other one, 3,500, is the October lows. On the upside, the 3,900 that we talked about just a minute ago, that's really the highs of that rally that came out from mid-October. And then if we were to rally towards the 200-day, that should be 200-day, not 20-day, 200-day moving average. That would, right now, that's a 40-90. Of course, it's declining, so the longer it takes to get there, the lower that would be. So all in all, we're still maintaining a core bearish position, and we will trade longs around it. I'll show you some of the things we are trading. So one of the things that we look at is what I call modified Bollinger Bands. Now, John Bollinger invented Bollinger Bands, and in doing so, he needed a definition of volatility. So he said that his definition of volatility was the standard deviation of closing prices of whatever the underlying is, let's say the SPX. And that sounds reasonable, and it works in those terms. But in reality, the Black-Scholes model, which was created by 2 mathematicians, Fisher Black and Myron Scholes, who were at MIT at the time, and many other mathematical approaches to the stock market, they define volatility as a standard deviation of daily percentage price changes. So it's a slightly different thing. And since we're in the option business and we're doing a lot with implied volatilities and realized volatilities, we need our volatilities to line up with Black-Scholes volatility. Otherwise, a lot of things just wouldn't make any sense. So we draw Bollinger Bands based on that definition of volatility. And so they're slightly different. And so we call them modified Bollinger Bands. So we look for the market to move outside of the +4 standard deviation band or the -4 standard deviation band. And when it moves back inside, that's a signal. So moving back in from low, that's a buy signal. Moving back in from high, that's a sell signal. The system has worked great over the years, but there were too many false signals, just whipsawed in and out. So we created what we call Mcmillan volatility bands, which is really just the same initial signal, but then we require some confirmation. So let me show you. Here's the current chart with the modified Bollinger Bands drawn on it, and right here, let's say the highest one, that's the +4 standard deviation band, and then right inside that is the +3 standard deviation band. So if we move outside the band, let's way over to the left here, right here, you can see it moves way outside the 4 and then bent back inside the 3. So that was the sell signal. And then once that happens, we wait for the market, or it doesn't, we want the market to move to the opposite band. So in this case, it moved down and hit the -4 standard deviation band right away. And so we took a profit on that sell signal. So on this chart, a red letter indicates a profit. So that was a profitable sell signal. Here, the market in January, when it started to fall quickly, went below and then back inside. So that was a buy signal. We never really got it. Actually marked at a loss for a while. Then finally went up here and touched the +4 sigma band right there, and that terminated that buy signal. That did not give us a sell signal though, and so when the market came on down without this indicator having any signal, finally in June went below and then back above. That was a buy signal. That was a good buy signal because the market rose all the way up, hit the upper band here, and then actually hit the upper band here, and then later went outside and back in and again giving us a sell signal. So it looks like this is working every time, but it's not. Here's a loser trade right there. So he came outside, went inside. That was that island reversal I talked about, and we went back outside again. So that stops out that signal for a loss. Now we've re-entered right off after the October lows, or near the October lows, and the green bay means the signal is open right now, and we're waiting for it to reach the +4 sigma band, which is up here, nearing 4,000 currently. So, we trade these with options, so there's limited loss. So if you lose on one trade, you're not, going to go broke or anything. But the signals have been pretty good over time, and this last buy signal was actually confirmed on October 4th. So we would be stopped out, by the way, if it fell back below the -4 standard deviation band. So that's the MVB signal, and I didn't show you specifically, but sometimes you'll get the old classic modified Bollinger Band sell or buy signal, but it won't follow through. So here we require the follow through. Now we actually run these Bollinger Bands or Mcmillan volatility bands on everything, every stock, every futures, every ETF, every index. And if you're interested in that kind of signal across the board on everything, you can sign up via our website, and we send you a list of new entries and exits daily. Anyway, so that's pretty much everything we're doing with the S&P chart. Let's move on to put call ratios, because this is I think an excellent contrary indicator, measure of sentiment. And put call ratios were invented by Marty Zweig back in the 1950s, when he used to get the put and call data out of Barron's every Sunday, when the put call brokers would publish their ads, and in the ad they would tell how many puts and calls they traded the previous week. Back then it was in the hundreds, now it's in the hundreds of thousands, but same concept. And he noticed that that when there was a lot of call buying, shortly thereafter the market went down, and when there's a lot of put buying, shortly thereafter the market went up. So a contrary indicator. For our purposes to predict the broad stock market, although we do look at these in terms of individual stocks and futures as well, but we use the equity only put call ratio to predict the broad stock market. And I'll show you why in a minute, but that's all stock options that trade. So really millions of contracts per day. So this is Marty's theory, and it works. Too much put buying is bullish for the market, too much call buying is bearish for the market, but quantifying what too much is a little bit more difficult. So we have done that, at least a way that satisfies us, and I'll show you how that works. So first of all, on a daily basis, we calculate the put-call ratio at the end of the day, every day. I mean, you can calculate it during the day, but we don't use that for anything. So let's say it's IBM. At the end of the day, we sum up the volume of all the puts that are traded in IBM. Separately, we sum up the volume of all the calls that are traded in IBM. We divide the two and we get the put-call ratio. So since puts are in the numerator of this fraction, heavy put buying will make the ratio go higher as the numerator increases. But when are you likely to have heavy put buying? Well, that's typically when the underlying, let's just call it stock, but it could be an index, when the underlying stock goes down. So the put call ratio moves opposite to the stock price. Similarly here, since calls are in the denominator of the fraction, when the denominator of a fraction increases, the fraction drops. So the ratio will go down when there's heavy call buying, but usually when there's heavy call buying, the stock is going up. So again, opposite to each other. And I'll show you. So we keep a moving average. I use 21 days just in case there's something to Fibonacci, but you do need to use some moving average because the numbers can jump around quite a bit from day to day. So this is the inverse symmetry. So when the stock is going down, stock here in this graph, this is a theoretical graph, of course. As the stock is going down, people are buying puts, forcing the put call ratio higher. Eventually, the put call ratio peaks and forms a local maximum. A local maximum in the put call ratio is a buy signal for the stock. So then, if things are working right, the stock goes up and people start buying calls, and call buying forces the ratio lower. So move over to the left again, the stock's still going up, people are buying calls, forcing the ratio lower. Eventually, the put call ratio forms a local minimum, and that is a sell signal for the stock. So that's the theory that you'd like to see when you're looking at a put call ratio chart. On our website, we post over 1,650 put call ratio charts every day in an area called the Strategy Zone, which is a very low cost subscription. And if you're, and we also publish a list of which ones are changing direction. We have some computer analysis programs that look at that. And so, you know, a lot of people subscribe to that just to have that information. We make specific recommendations based on put call ratios in both the Option Strategist newsletter and the Daily Strategist newsletter. But those put call ratio charts that we're showing there are just all the ones that are in the S&P and a lot of others. But when you're looking at a put call ratio chart, you should see this inverse symmetry, at least at major turning points. If you're not seeing that, then perhaps something else is going on, like arbitrage or something else that's affecting the put and call trading without having anything to do with the speculation on the stock itself. This is not a current chart, but on top is the S&P 500 index, and on the bottom is the equity-only put-call ratio of all stock options that trade. So equity only meaning all stock options. So we don't count SPY, we don't count SPX, we don't count QQQ, but it's all the stock options. We don't count futures either. So you can see the inverse symmetry that exists here most of the time, and therefore that's why we use the equity-only put-call ratio to predict the broad stock market. So here's the current chart. This is the standard put-call ratio, which just uses the volume of the options. Now, first of all, this is very high. This is as nearly as high as it got in April of 2020, which of course was a very, very high put-call ratio. I've lost my oh, here we go. So this ratio got up here to a very high level. If you want to actually know what that means, the scale on the left pertains to that. So 85 means that 85 puts were trading for every 100 calls across the entire spectrum of all stock options. That's a very high number. Usually it's more like 50 or 60, something like that. Anyway, you can see that the most recent local maximum or local minimum that we had was this local maximum right here. Remember, a local maximum in the put call ratio is a buy signal for the stock. So it got off to a great start. Now we've run into the little problem with Fed speak, but the ratio is still drifting lower, and it's actually still moving lower here. So as long as the ratio is moving lower, this indicator will remain on a buy signal. Eventually it will come down, form a local minimum like it did there in late August, and that was a very good sell signal there. You can see the other buy and sell signals marked on the chart. The track record for this is very good, but it can actually be improved when we bring computers into the situation. We can compute the weighted put call ratio or dollar weighted put call ratio. Now we're trying to measure the dollars being spent on puts versus the dollars being spent on calls. To keep it simple a little bit, what we do is at the end of the day, every day we calculate the dollar volume for each option in this manner. We take the option's final price times the volume that it traded that day. Now, in theory, you could do this trade by trade, every trade, price times volume, price times volume. That's a very expensive data set, and it's a lot of computer power to calculate that. And you know what? It didn't turn out to help. We did it for a while. Didn't turn out to give us any better signal than doing it this way at the end of the day. So at the end of the day, we make this calculation, let's say for every option on IBM, and then we sum up those dollar volumes for all the puts. Separately, we sum up those dollar volumes for all the calls, divide the two, and that's the weighted put call ratio, or the dollar weighted put call ratio. This is an extremely valuable indicator. I only know a couple other very option-oriented websites that even bother calculating this, and so we offer these charts as well on the various charts I mentioned among the 1,600 plus that are shown on our website every day. So what we're really looking at here is the dollars being spent on bearish opinion versus dollars being spent on bullish opinion. And I realize not every option trade has an opinion. There's covered rights, there's other things going on, but the speculators force the extremes. So what we're looking for here is that same sort of thing, local maximum. It's a buy signal, and so we did get the same buy signal back here in mid October. In fact, it was a kind of a little double buy signal, and we came down, and then it curled upwards, and so enough to. I put the question mark there, sell question mark, because remember I mentioned these computer analysis programs that we have that can look at these charts. The computer analysis program knows what's coming off the 21-day moving average and knows essentially what's coming on. I mean, we've been in this area for a while, so numbers coming on are probably going to be in this general area. By the way, here 220 means $220 are being spent on puts for every $100 being spent on calls. That's a lot. That's the highest since the pandemic lows of April of 2020. Anyways, this one, to me, this is a bit of a warning sign. Now, the computer analysis is saying this is still on a buy signal. It's expecting it to drop based on, the statistics. I'm saying, show me. So I want to see it drop below here again before I would actually say that's still on a buy signal. So right now, this one has removed itself from my buy list, my buy signal list, and is sort of standing aside until we see what's happening. Obviously, if it continues on up like that sell signal will be solidly in place. You can see back here, there was a local minimum, pretty much in the same spot as we saw in the previous chart. And that was a good sell signal. What's interesting to note that just a year ago in November, that was the lowest ratio in 17 years. And the other one was the standard ratio was quite low there as well. So very optimistic at that time, only $50 being spent on puts for every $100 being spent on calls. So from there to, let's say here, the market went from extreme optimism, the stock market went from extreme optimism to extreme pessimism in just a matter of 6 months. And now we're a year later and it was even more pessimistic. So sentiment can change quickly, but it's important. So just to summarize, with these, we had sell signals in place, those ones from mid-August. They've been replaced by buy signals in mid-October, and I put the important phrase here, according to the computer analyses, because right now I want to see that weighted ratio make a new low, or we're not acting on that. Now, so these equity only calculations are based on the volume on all U.S. option exchanges. There's 8 or 9, I can't remember which it is, but we get the data, we pay for the data from all exchanges, and those are the charts I'm showing you. The CBOE does its own calculations. It's still the biggest option exchange, and it does its own calculations. And in a huge surprise to me, the CBOE equity only put call ratio went above 1, meaning more puts than calls were traded. It did that twice in the last week. It did it yesterday and it did it 5 days ago. That is unusual. The last time that's happened was March of 2020, and that's an extreme oversold condition in general and leads to a buy signal. In fact, is a buy signal. So we just got a new equity only CBOE equity only put call ratio buy signal as of last night. Now I will say that these are not exact timing vehicles. The one in March of 2020 was about 7 or 8 trading days early, and markets move a lot in 7 or 8 days, especially back then, but even now. And so the fact that the stock market right now is down about 65 S&P points right now is still not dissuading me from the fact that that's a buy signal. A buy signal is a buy signal. What does sort of raise my curiosity is, where did that come from? Because we're not seeing it in the all exchange put call ratio, just in the CBOE. But there's really no way to weed that out, and I always caution technicians from say, well, in this particular case, that caused that to happen, or that'll get you in a lot of trouble. That will talk you out of some very good trades. So you have a system. It's based on, in this case, the equity only put call ratio on the CBOE, and it just gave a buy signal. That's really pretty much all you would need to know. So in one of our newsletters this morning, Daily Volume Alerts, we did mention that buy signal, and we bought a small position relative to that. And we'll see how it works out. Again, it's options, it's limited risk, but we will we'll act on these signals when they do occur, even though we still have that core bearish position. So when we act on a signal, what are we actually buying? So I'm in the business of predicting where the underlying is going, and so far the underlying in this discussion has just been the S&P 500 index, or SPY if you want. So I want to buy an option that's going to have a pretty high delta. If I'm bullish, I want to buy a call option that has a high delta, meaning the delta of an option ranges between 0 and 1. 0 meaning even though the stock moves up a point, the option doesn't budge at all. That's usually something near expiration, way out of the money. Or the most it can be is 1. The option can't move more than the stock. So that would be a deeply in the money option. But I like to have something with a fairly large delta, so that if the underlying is rising, so is my option. If I have something with too small of a delta, there's a chance I could be right on the underlying, say buy signal is right, but I lost money on my call option because it was too far out of the money. So we buy short-term in-the-money SPY options, typically when we're trading these signals that I've shown you here so far. Or if we're really going out intermediate term, say on a put-call ratio signal, then maybe an at-the-money option. But again, that still has a delta of more than a half. And so by doing so, when the market moves up, we'll make money as well. Now, if you watch these guys on TV, every trade they make in options is a spread. That's silly. No one does that in real life. There's a time to spread, and most of the time you don't want to spread. So what's the spread do? So a spread is where you buy a call at one strike, say you're bullish on the stock, and then you sell a call at a higher strike. So what you do, the sale reduces your dollar cost somewhat, but it cuts off your profit once the underlying gets above that strike. So why cut off your profit unless you really need to? Now, when would you maybe need to? That's when options are expensive. So we have a very extensive implied volatility and history of implied volatility data on our website. And in fact, every Saturday it's updated for free. So every stock, every index, every futures, every ETF, you can look up the implied and realized volatilities. So if implied volatility is high, meaning it's high, near the high end of this, let's say, range over the last year or two, then you might want to spread, because we don't have time to go into the whole thing here, but there are reasons why that is true. On the other hand, if it's not high, you don't. Now, proponents of the spread always say, well, you're risking less. That's not true. You're risking 100% whether you buy a call or you buy a bull spread. You're risking maybe more dollars, but that's well within your control. Instead of buying 4 bull spreads, buy 3 calls or something like that, whatever, make the dollars easy. But what you want to be able to do when it makes sense is to have this work for you and not this work against you. So, but even if you do spread, and these days with VIX being as high as it is, we're spreading many of our SPY trades, you can spread the strikes out as far as possible. So when we're talking about a call spread in SPY, we'll spread out the 2 strikes by 15 to 20 points. And if we're talking about a put spread, because the puts are trading at higher volatilities, we're talking maybe spreading out 30 to 50 points. In addition, even beyond that, so that gives you quite a big distance between where you cut your where you are now and where you cut your profit potential off. But in addition, we want to roll this whole spread if it gets to the short strike, because if you're long and you hit the short strike, that's the higher strike, you're cutting off your profit potential. And if you're in a put spread bearish, your short strike is the lower strike, and that would cut off your bearish potential. So here's just a quick example. Suppose SPY is 397, and on one of our buy signals we say to buy an at the money call, so 397, and sell a call with a strike 15 points higher, so that's 412. And then right away the market moves up to 412. SPY gets up to 412. So sell that spread you just bought. You can sell that for a profit and buy a new one with, again, at the money and 15 points out of the money. So you roll the whole spread up. This will not only lock in a little profit for you, or won't necessarily lock in a profit on the whole thing, but it will lock in a profit on that first spread, and then you're still alive on the second spread and still make money on the upside. I want to show you a couple of individual put call ratio charts. This is NEE, NextEra Energy. You can see when we're talking about these individual put call ratio charts, I only use the extreme local maximum, local minimum. So I didn't actually consider this to be a buy signal, even though it's a local maximum, even though in this case it worked out pretty well. But these are the buy signals here at these extremes. And so we just got another one. And then you can see also the sell signals were down at these very low extremes here, whereas not this, even though that's a local minimum, that is not a sell signal, the way that we interpret the individual charts. Here's another one that we just got into, Welltower. You can see the put call ratio is extremely high. Higher, you can see that normally a put call ratio in this thing was down here trading between 50 and 130, maybe something like that. All of a sudden it shot up here to nearly 500. Again, this is a weighted ratio. That means $500 being spent on puts for every $100 being spent on calls. Extreme pessimism, not exactly sure why, not that I really care. In any case, the stock started bumping along here, and we said, okay, well, let's just draw a little resistance line. And if it breaks out over resistance, we want to be long. So now it's broken out over resistance and we're long. There's another one, Morgan Stanley. The B is green because it's a current signal. The last chart should have been green B as well. Anyway, this one wasn't really a trend line in play unless you wanted to consider maybe this trend line or something like that. But in any case, that's another bullish chart. And a lot of the put call ratios have gone very high with this last sell-off here since mid-August. We can also do with futures. This isn't up to date in corn, but we are still long corn options right now. Now, in this particular case, the top line is a continuous chart of corn futures. The bottom line is the put call ratio based on the corn options that trade on the Chicago Board of Trade. So that gives us a signal. It doesn't mean you have to trade corn options on the Board of Trade. There's an ETF, CORN, which, while not extremely liquid, is somewhat liquid. And so you can trade CORN options rather than the corn options on the Board of Trade. And that's the case, that's for corn, of course. But that's the case with many of the futures they have an ETF, USO for oil, gold, silver, they all have their own ETFs. All right, let's move on. Market breadth is simply just how many stocks are advancing minus how many stocks are declining. You can, 1, keep a cumulative total, or 2, calculate an oscillator. So we keep an oscillator, and there are 2 actual sets of data here. One is the New York Stock Exchange advances and declines. That's what everybody uses pretty much. But there are things in there that are not stocks, and they can distort things. So we're looking for a good stocks only advanced decline. So it just had stocks, and we realized, well, we got the perfect thing, all stocks that have options on them. So we started doing this, about the time decimalization came in, right around 2000, the year 2000. But now there's over 6,000 optionable stocks, so that's a pretty big data set. So this is the oscillator based on those 6,000 optionable stocks, and the green areas are oversold areas. You can see that we don't get oversold that, or we haven't gotten oversold that often. This chart starts in 2013. For between 2013 and say the end of last year, most of the market was going up. You can see this year now there's been a lot more oversold conditions, and in fact just recently in September we were the most oversold in history using this indicator. We've popped out of there. Again, oversold does not mean buy, so we don't buy till it stops being oversold. So we had a buy signal there, and then went into overbought territory, started to decline, and today it's going to fall back right in here, and we're going to get a sell signal today on this indicator. Not all of our indicators. So this is the one overbought condition I actually had mentioned, and you can see sometimes the market in the past has got to put these big, thick red areas extremely overbought. That's typical at the beginning of a long bullish trend. A little spiky overbought like this, it quickly deteriorates to a sell. That's not probably the beginning of a long bullish trend. In any case, that indicator is turning negative as of tonight's close, unless something miraculous happens in the next hour and 15 minutes. So we had a buy signal in mid-October. Then the Fed speak kind of knocked that off. It came back again with a strong up day this week, but now that's falling back as well. So this is our shortest term indicator. It is subject to some whipsaws, but it also has a good track record. So we trade it. It put up with the annoying whipsaws, and overall, it's been a good indicator. Cumulative breadth is just where we keep a running total of advances minus declines. That isn't telling us anything now, but when the S&P is making new highs, you look for this to stop making new highs, and that actually happened in 2021. So up at in June of 2021, both S&P and this cumulative breadth were both making new highs. After that, S&P went on to many new highs. This indicator did not, and so there was a huge negative divergence for about 7 months until the market finally broke down. So this will again be useful someday, but not right now. New highs versus new lows, we keep track of this as well. Just simply stated, this went on a sell signal in April and hasn't come off it yet. One of the things that we need to see is New York Stock Exchange new highs numbering at least 100 for 2 days in a row. That hasn't even had 100 for 1 day in a row in months now. So this indicator remains bearish. So let's talk about VIX, because everybody likes to talk about VIX, even though most people don't really understand a whole lot about VIX. But two things to remember about VIX. First is the trend of VIX is important. So we have some signals based on the trend of VIX. Number two, spike peaks in VIX are buy signals. And so we have a system based on that as well. And with those two systems right there, we've actually had some very good results over the years. Not pertinent now, but sometimes when the market makes new highs, VIX drops down to like 10 or 12. That's an overbought state, but again, overbought does not mean buy. So it does not mean sell. I mean, so that would not be a buy sale down there either. We haven't really seen that since, I think, 2019. Anyway, here's the current VIX chart. So there's a bunch of stuff on here. The B's are all VIX spike peak buy signals. And we don't, when the system that we use to trade these encompasses 22 trading days. So if the signal recurs within 22 days, we note it, but we don't trade it. So here, the red is the successful buy signal. The orange is just a secondary buy signal that occurred next to the red. Same thing here, the little light B goes with that B. So we're only trading the solid signals. And right now, this one on a buy signal in mid-October, and we're running a trailing stop on that right now. Let's see what VIX is doing today. VIX is doing its basic nothing, up 72 cents with S&P down 69. Anyways, so that would be stopped out on a trailing move in VIX, and right now this is still in place. But perhaps more important is the trend of VIX. So we defined the trend of VIX as being in play when both VIX and its 20-day moving average are on the same side of the 200-day. So here's the 200-day moving average right here. And you can see as of this day right there, the 20-day went above it. VIX was already above it. That is a trend of VIX sell signal. And there was another one here a few weeks ago in mid-September. Now that lasts until one of the two drops back below. So right here you can see VIX drop back below. That canceled out the sell signal. But the 20-day, even though it came close, never went below. So this red box just indicates a period of time where there was no trend in VIX. Then VIX moved back above again right there. And so we resumed the sell signal. Similar thing happened here. VIX moved back above in late April, and that was the resumption of the sell signal. So right now we've canceled out the trend of VIX sell signal. This was the trend of VIX sell. It was canceled out when VIX moved below the 200-day back there in late October. It would be reinstated if VIX closes back above here. So we'll see. It's close. And meanwhile, a buy signal would occur if VIX, the 20-day, moves down here below the 200-day. There was a trend of VIX buy signal right there. So this indicator, the trend of VIX indicator, is not giving a signal right now, but it could move in either direction. Or as I said, the spike peak buy signal has been in effect since October 17th, and we're running a fairly, what I consider to be a fairly tight stop on that. Just as an aside, during 2021, VIX stayed above 15 all year, and this year it's been above 19 all year, way above that. So even though it hasn't gone up into the 50s, even 40s, 50s or 60s or even 90s like it did in March of 2020, it's still been stubbornly high. And what this is really telling us is that big money dictates what's happening to VIX. Big money is not necessarily smart money, but pretty much is. And it's been worried and still is. So as I said, the trend of VIX is nowhere right now. We're waiting to see if it's a sell signal, which will require VIX moving above the 200-day moving average, which is at 2660, or it could be a buy signal, but that wouldn't happen for a little while yet until the 20-day came down below the 200-day. So you can't trade VIX, but you can trade the futures. So it's bullish in a market if the term structure of the VIX future slopes upwards like this. And it's bearish for stocks if the term structure slopes downwards. So we keep a close eye on this term structure, and here's where it was last night at the close. So you can see VIX was 25.54. These futures were, edging higher. So the term structure is sloping upwards slightly. This is the premium on the futures. Your 2610 minus VIX 25.54 equals 56. So slightly trending upwards with the premium being positive to VIX. So those are all, modestly positive things. By the way, you can find the prices of the VIX futures on the CBOE futures website. The CBOE also publishes 5 volatility indices. So you're familiar, or most people are familiar, VIX, the 30-day, but there's a 9-day, there's a 3-month, a 6-month, and a 1 year. Right now, these 4 are sloping upwards. That's bullish. This one, however, is way out of line, the 9-day. Why? Because the CPI is coming out tomorrow morning. So those short-term options are very expensive right now. And this creates an oversold condition when that VIX 9-day is above VIX. And it will give a buy signal when it falls back below. So this buy signal is setting up, but it hasn't happened yet. But it will, probably not too much in the future. When VIX 9-day closes back below VIX, then that would set up a buy signal. So, it might happen, let's say, the day after the CPI or a couple of days after, something like that. Could be a well-timed buy signal. Those are very short-term. They're like 5 days. So just to summarize that, the overall construct, or what I call the term structure plus the premium, is somewhat bullish right now, but we're carefully watching the front month versus the second month. If this relationship, and these are VIX futures, if that relationship inverts, it could be bearish for stocks. So a lot of people want to know, well, why isn't VIX higher? And part of the reason is that people are not only been buying puts for a long time, so they have them in place, but they're buying put spreads too. So there's a buy and a sell taking place simultaneously. In addition, we haven't really crashed. We've just been going down, which is typical of a bear market. Crashes are typically short-term events and end, and you go back up again. Bear markets are grinding long-term affairs, which was what we seem to be in. So you can sell those out of the money puts and make some money. So big traders are selling the out of the money puts, and the price of VIX is really dependent on these out of the money puts. And if you're holding down their price, then you're holding down the price of VIX. So just to summarize pretty much everything we've talked about here, our main bearish indicators are 2 things, and the most important, of course, being the chart of the SPX. So that is that's bearish, and as long as that is the case, why am I losing my? Here we go. The chart of SPX is here. That's causing our core position. New highs, new lows, that was also bearish. We have a few bullish things, but as we saw, these could be stopped out pretty quick. The Mcmillan volatility band, that will not be stopped out, but the VIX spike peak is currently on a buy. The equity only, again, I'm saying I'm not really trusting that until the weighted falls to a new relative low. Breadth oscillators, looks like tonight we're going to move this one over to the bearish category. And the construct of is what we just looked at, modestly bullish. So altogether here, we'll still maintain a core bearish position, but we will trade these other signals around it. So I mentioned this website. I invite you to go there. You can download the PDF of this webinar. You can also buy our home study course, which is 14 webinars ranging from like an hour and a half to 3 hours each. They're fairly fresh, recorded just last year. Or you can subscribe to our 3 most profitable newsletters. You get all 3, 1 month of each for $99 total. And that's a lot of information, so you might want to take them consecutively rather than concurrently, which would be all at once, so you can absorb what's going on. We have our track records of these on our website. I will say that the daily volume alerts has been pretty strong this year. This is a $1,500 annual subscription, and just our system trades, the things I've talked to you about here today, are up over 12,000 just so far this year, and 47,000 since 2018. Again, the track record is up on the website of individual trades. We have a YouTube channel. I invite you to subscribe to that if you get a chance, and a couple of other newsletters as well. One dealing in special situations, and another dealing in selling out of the money stock puts, which is something a lot of people enjoy doing. And so just to finish up, this is the 73-74 bear market. I traded this market. It was the first serious market I traded. It's made me kind of bearish throughout my whole life, really. You know, I'm always suspicious of the market. But basically, it started in January from a new all-time high and sold off into September, had a big rally, which hurt the bears badly, and then collapsed on the oil embargo. Tried to rally. It was messing around here. The 3 I's were important at the time: inflation, interest rates, and impeachment. Impeachment was Nixon with the Watergate scandal. We don't have impeachment today, but we certainly have the other 2. And then when Nixon resigned, the market just went into a total free fall. And then, to my surprise at the time, Jerry Ford came out with his Whip Inflation Now campaign. Everybody got a button, and lo and behold, the market did bottom. I mean, it retested. It was a W bottom, but that was it. Inflation and interest rates were a problem for years after that, but the bear market ended, which would be like a year from now. So on this chart, where are we now? I'd say we're about right there. We made that new low in October. We had a rally. We pulled back from that rally. The bears have not really suffered any pain. Bear markets give pain to everybody. So I'm still thinking there's a chance that this thing rights itself maybe after the CPI numbers tomorrow and takes off to the upside, you know, and hurts the bears too. There's an old saying that nobody makes money in a bear market, bulls or bears. So we'll see. But that's just my guess. Anyway, visit that website, pick up your copy of the PDF, and if you're interested in our money management, visit this website, mcmillanasset.com. So Jeff, back to you.
I'm just typing that link in, but we do have a quick question, if it's all right. Kenneth asks, please comment on how the market makers delta hedging and the spot gamma levels influence markets. Thanks.
You broke up on me just a little bit there. The market makers do what?
Please comment on how market makers delta hedging and spot gamma influence market levels.
Well, I mean, market makers delta hedging has no effect really on. I mean, it's the delta hedging is opposite to where the market's going, so that should put an actual damper on the market. You know, like if the market makers are, you know, long a bunch of puts and the market is falling, now they're getting a big negative delta, so they'll buy some stock that will actually stabilize things. And what was the last part there?
Let me get back to it. Delta hedging and let's see, spot gamma, how those affect the markets.
Stock jamming, is that what you're saying?
Get spot gamma.
Oh, Gamma you're talking about?
Gamma. Spot Gamma.
Okay. Well, so Gamma is an option derivative. It really doesn't have anything to do with stock, but so you mean like is Gamma hedging with the stock? I see what you're saying. I mean that again, it's not a so Gamma is just how fast the delta changes. So in the market, again, let's say in that situation is moving down, the person's Gamma is very positive. The market maker, so let's say if he's long puts, so he needs to reduce that, which would be to either sell some of his puts, which is bullish, or buy some stock, which is bullish. So the hedging activities of market makers generally stabilize the market. There's just that they can speculate as well. They don't have to hedge.
Awesome. Okay. That's it. Thank you, Larry. I appreciate your coming in, spending some time with us.
Okay.
Thanks a lot.
All right. Thank you.
All right. Larry does such a good job. Let me go ahead and make me the presenter again real quick. And let's go ahead and just jump in over here. And we'll go ahead and share. Do this. We'll do this. And that should be everything I need to get everything rolling over here. Again, we appreciate Larry coming in. Great job. Great job in terms of that. We'll go ahead and say thank you to Stocks and Commodities for sponsoring the event. Again, they are awesome. Again, they've been supporting these events and the conferences and the summits and the online events we've been doing for a decade. If you do a subscription to MetaStock today, you get 5 months for free. They're going to give it to you. If you do a $300 purchase or more, they're going to give you a 2-year subscription. So we really, really appreciate that. What we're going to do right now is we're going to give away a prize. So I'm going to go ahead and show you the prize right now. I got it right here. This is a book by Dr. Adrian Matz. Adrian's speaking on Friday, if I remember correctly. And this is a book called Around the Horn. It's a really, really good hardcover book. The retail cost on it is $95. It's a few hundred pages long, full of really, really good charts. One of our favorite things here at MetaStock. And so this book is going to be given away to a lucky winner. Kelly, are you ready to pick a number?
I'm ready, Jeff.
All right. Let me see. Let me go ahead and go in here get to my spreadsheet. And I will tell you, I'm ready for a number. It can be anywhere between 1 and 11,099.
This time I think we're going to party like it's 1999.
Okay, 1999. That would be Tammy H. in South Africa with a Gmail account. So if your name is Tammy, you have a Gmail account and you live in South Africa, you could very well be the proud new owner of this book. This one right here. So congratulations. We will reach out to you within a few days. Probably within a week. Give us a week or so. We're a little bit busy right now with all of this conference that we're running, but we'll get in touch with you and kind of get information and kind of get this book sent off to you. So congratulations. Thank you for the assist, Kelly. All right, cool. I'm making notes of these. I'm not forgetting anybody here. All right, of course, we're MetaStock. I hope everybody's enjoying the conference. The book's name, Rahul, was Around the Horn, Trader's Guide to Consistently Scoring in the Markets. So we have a few more of those that we're going to be giving away, as well as some other prizes. If you are watching us on YouTube and you want to be eligible to win those prizes, go to metastock.com/traders-conference. Kelly's going to put that link into the chat for you, and just register for today's event, and you can be on our next prize drawing. So there you go. Also, of course, we're MetaStock. MetaStock's been rated #1 in its price category 29 years in a row. Helps you scan markets, test trading ideas, forecast probable price movements. Great product. Allows you to do so many things. Prices for MetaStock, the end-of-day version, start at $59 per month. If you buy 1 month, we're going to give you the second month and the third month for free, which means you could be using MetaStock for less than $20 a month until February, right? Is my math right? It is. You should do that. There is a reason it's been rated #1 so many years in a row for so long. You can do that at metastock.com/conf promo You can call us 800-882-3040. You can chat with us online at metastock.com/conf promo. So there you go. And let's go ahead. Anne-Marie Baiynd is our next speaker. Anne-Marie has been a friend of mine, a partner of MetaStock for a number of years. We have her come in, do recaps with us where we talk about what's going on in the market. She does a lot of webinars. I will say this about Anne-Marie, every time we have her in here, I always listen to the stocks that she talks about because she is really good about knowing the ins and outs of stocks. And I've gotten some pretty good pickups from her. Not that we're going to recommend that you buy or sell anything today. We can't do that. But sometimes when she says to pay attention to a stock, I always listen. So in any case, let's go ahead and bring you on here, Anne-Marie. How you doing?
I am doing very well, Jeff. I apologize. I don't know how much ambient noise you're going to hear. I'm at the airport. I'm going to visit my mom, who's a little bit under the weather, and so I want to apologize for the blaring person that will come on and go, Jeff R., you have left an important document at, yeah, so whatever. So I'm going to apologize for that.
Okay, I don't hear any noise just yet, but we'll keep it in mind. I do see some awesome charts, though. And,
yes. Go ahead. Go ahead. Yeah.
And I was just going to say, it's all you. Go ahead. It's your turn.
All right. Well, I want to say hi to everyone just very quickly. Yes, this is terrible for an old face to be under these lights. So I just want to pop in, say hi, and let you know that I'm excited to be here. I love getting to be parts of these. And there's tons of info that we catch up with. And hopefully all of it comes together for you in just the right way. And you can use it on the MetaStock platform. So there we go. Ta-ta. And so just a quick recap about me. I've been trading for almost 2 decades. I've written a couple of books. I enjoy being a trading coach. I don't get to be much of one anymore because of all the other things going on. And so here's me, right? So I just wanted to show that a little bit. And what the topic today, and of course, this is please remember that investing can put you in a space where you lose money, and you want to be very careful about that. So just letting you know that. So the topic today is going to be finding trades. This 1970s music in the background is killing me. Finding trades with risk management as your priority. And so one of the big things that we love to look at as technical traders are all those key indicators like RSIs and MACDs and all these very technical things as we go through our filtering. But what I want to share with you is that in a market like this, right? Larry just said, hey, nobody makes money in a bear market. There is some truth to that. And the reason for that is really because we don't spend the right amount of time thinking about how we want to engage, for how long we want to engage, and where the best place to go is. Now, many of us love to look for wonderful nuggets hiding in the market. When we're in a bull market, that's incredible. You can find some winners that will just rock it. When we're in a bear market, that gets incredibly difficult. So what we want to do is sort of stack the deck in our favor. And that's really what I want to share with you today. So how do we stack that? This is one of my favorite things to talk about. It's the OODA loop. I've talked about it before, but we want to observe the overall view of the market. And so when somebody comes in and says, well, this is a bear market, realize that bear markets don't go straight down. That's why they're impossible to time many times. And so we just have to look at the market and go, what's happening at this time and how long am I going to engage? And that's that orienting space. How do you look in the market and go, wait, am I in for 3 weeks, 3 months, 3 years, 30 years? And if we look at those simple things like, wait, how long do I want to sit in this space? What kind of attention can I give my position to look at it and track it? These are the sorts of things that you want to really focus on. Once you've decided that, then you put an action plan together. And in a bear market, that action plan means, what is the risk if this goes sideways? And learn that if you're investing, you don't necessarily have a stop, but if you are trading and trying to time market structure, you need to have a stop or you're going to blow up your account. And so that's very, very important. If you want to buy some things and just leave them for 30 years, then that's great. But then most of us that feel that way aren't going to buy state-of-the-art software like MetaStock, right? We're just not. So that obviously is not the way we're looking at things. We're looking at things in terms of, wait, what can I use in terms of understanding the overall view of the market, orienting my space within it, deciding what time and frame I'm going to look at, and then jump right in there and set up an execution space. So what I like to do, can you tell that I don't know how to use this? Okay, let's move down, down, down. So what we're going to do is something called the performance visual. And interestingly, your eyes are going to be the best screeners in terms of what sectors are working, what segments are working, what industries are not working, those sorts of things. And so you want to look at a general heat map, and you want to look at a week, a month, 6 months, and maybe a year. And I'll show you why momentarily. So this snapshot I just took 2 hours ago. So it's probably a little more red right now. But this was, hey, listen, this is what these charts have done for the year. So from November 9, 2021 to November 9, 2022, this is what we're looking at. So what jumps out at you? Well, what jumps out at me is energy, off the rails, bright green, healthcare, bright green, a few things in defensive, but more in terms of packaged goods, right? That's like right around here. And healthcare plans, aerospace, and defense. So if you're looking at this, the first thing that you need to write down is the list of where winners that have been working through the year are still currently working, right? As it looks right here. If you're looking for shorts, you can see here how much trouble these guys have had, right? Nike down almost 50%, and it's in the Dow, right? The Dow is very bifurcated. There are 3 or 4 things that are working in the Dow, and everybody else is in a slow burning dumpster fire. So you stick with what works. Don't go mining for things that you think are very unique and have a wonderful value proposition. Because here's the thing, you might be right, but the current market is not going to reward you at this time for your thoughts from that space. So what I know a lot of hedge fund managers do is they draw the 20 simple moving average, and they look at it on the day, and they look at it on the week. And if prices are above both of those, chances are you can buy a pullback and things will go in your favor. But what we have noticed in the market are these savage moves back and forth every single day we come into the market. And so that has a tendency to stop us out if we're moving in short-term ranges. So the question is, first, find do I feel like being bearish? Then you pick some of these red ones. Or do I feel like being bullish? You pick some of these green ones, or you go, you know what? I'm going to find a portfolio where I'm going to manage with smaller size, and I'm going to get in some of these I'm going to short, some of these I'm going to go long. Okay? So that's where we are with that from the yearly. Now, the reason that I go to the 6 month is I want to see if there's a real change between how well they've performed over the last year versus over the last 6 months. So I'm going to flip back. That's the year. That's 6 months. Now, what do we notice? I'll do it one more time. What we see is that some of these guys over the last 6 months are giving back some of their gains. Again, super green, red and green, mismatch here. Insurance, also very good. I'll tell you why I think these things are good in good Lord. Right? So we can see that banks are coming up. I think all those bounces are going to get sold. A lot of people go, hey, interest rates go up. Banks are going to do better. But see, banks aren't going to do better because interest rates are going up necessarily, because what's happening to banks is a measure of illiquidity, because those of us with money are saying, hey, listen, if I can go take my money out of the system and put it in a money market fund or a closed CD that gives me 5-6% and I can sleep at night and be happy, that's not money they can touch. Of course, we have to tell the folks at Alameda and FTX in the crypto space that they're not supposed to touch those kinds of monies, but that's a whole other story. That's the reason crypto is having such a tough time in the space, because it's just not, it just does not have enough borders to take care of it. So that being said, we can see the banks lifting. I don't think this is long term, but that's just me. But what we can see is some profit slipping out of here, and these guys are still bright green. These guys are still bright green. Aerospace and defense, industrials, still green. And so if you're looking for bullish things, let your eyes tell you what's been working. I want to tell you, I talk to a lot of hedge fund managers and portfolio managers because I've been around for so long, and they will make a bet at the beginning of the year about what should happen. And if they're underwater, they're going to go directly to a chart like this and go, all right, let me see what's working. I got to figure out a support space where I can get involved. And that's exactly what they'll do. So now let's go to a month. Take a look at what happened in the last month, right? Between September and October, really a ton of these money just flew right back into the market. So interestingly, you might go, why? Why does a 6 month chart versus a 1 month chart look so very different? And it's people moving into the market during what they think are the best months of the market. November, December, January, February, March, maybe even April, are supposed to be, statistically speaking, the highest returns that you can get from the market space, okay? And so what people have been doing is saying, oh, I'm just coming back in, right? And so they're going to be buying many of their dips. Now, in the last 2 days, today and yesterday. The whole market is sort of shell-shocked by what's happening in the crypto world. You might go, oh, I think it's election-based. No, it's moving way too fast for that. And these 0 days to expiration options that hedge funds and big desks like Goldman and JP Morgan and all of these big guys are selling these options or even buying them for a little bit of alpha, depending on which way the market's running. And at the end of the day, they're going to sell them all back. So for those of us in the option space, you know that this is happening because your option interest, open interest, will be something like 15,000, but the volume on the day will be like 200,000. And then the very next day, your open interest is still 15,000. And so open interest measures what's on the books. But if you come in during the day and leave during the day, it never really hits the books. And so that's really what they're doing. And SPX options expire every single day. So we're normally in a really bullish space, but everybody's very nervous about what's happened in the crypto space. And they're concerned that a lot of big money has moved in to the crypto world on the sneak, and people are sitting over leveraged in certain spaces. And so that's really what they're worried about for right now. It should settle out in a little bit, but if it doesn't, we're going to see another fade. Okay, so this was today. I think I maybe snapped this at about 11-ish, and it's probably a lot more red than that. But we can still see that these guys are still holding on. People are going where in the same places every single time. So let me talk about why. As we look at our current government structure, no matter who takes the Senate, no matter who takes the House, not trying to be political here, I'm saying everybody wants something, and big government spending is simply not going to stop. So you're going to look at where government is going to put their money. And they're going to put their money in aerospace and defense, because what we have going on around the pond. To make those things in aerospace and defense, we're going to have industrials. We have healthcare and healthcare plans, and then energy and basic materials, which are, I mean, if we want to go to net green, there's not nearly enough of this stuff hanging around. Okay, so the takeaway is use something simple to get you in a space of visual good fortune, as it were. All right, so now let's jump straight. I picked a few of these, so I'm going to jump straight to the MetaStock platform, and this is our SPY. And you know what? I'm going to put it on a weekly so we can see what's going on here, right? And it seems to me, pardon all my lines here, it seems to me that what we've done is stop making lows, okay? Why is that the wrong number? That's very interesting. That is the wrong number. Maybe 11, 222. Oh, this is the Dow. Duh. No, I know, but I'm looking at the Dow. I thought I was looking at SPY. Bonehead. Yeah, thank you. Thank you. All right, so as we look at the Dow, now here's something very important. A lot of people go, oh my gosh, we're going to crash. Listen, we're going to have a slow bleed, but we're still the cleanest shirt in the dirty laundry. And foreign divestment is going to continue to increase. Why? Because they've got nowhere. I have a German friend. We just talked to her. She was here a month ago, and she was talking about everybody just, they can't put their money in anything to get return. And so what they're doing is exchanging their money for dollars, which is going to keep the dollar going up because people are going to exchange for dollars, and they're going to invest in the market. And the place they go to get an investment is in the Dow. That's just where they go. It's the easiest place, and it's got the biggest companies with the widest exposure. And so what we've noticed is we have these big runs up and then sharp run down. Here we have another run up. So the question is this going to be a space where we turn around and come back down, right? I don't have any idea. But what I do see is when we come into these low areas, traders are buying them, all right? And so that's the one thing we have to think about. If we want to buy, we want to wait for a dip. And so here's one of the giant powerhouses. I got to make sure I'm doing this right. That's not it. How about name? Thank you. Cigna. Beautiful. All right. So one of the first ones we're going to look at is Cigna. Now this one has been, I mean, look at that, right? If you think about something that has been an absolute beast, it's this one. So notice the ideal places to pick this chart up. So here's my 20, right? This is my 20 moving average exponential. This is the daily chart. I'm clearly above it. Jeff, if you would interrupt me anytime you see fit to answer questions, that's fine. I don't know which way you want to do it. If you want to do it at the end or whatever, I just see a hand up there, so I don't know what to do then. All right, so we have, I have a 6 here and I have a 20, okay? And the goal is to look at slope and trend. Now, slope, you could say, hey, that's got positive slope or negative slope, and that gives you relative trend, but the steepness is really what you're looking for. Is it in undulating, rolling hill kind of thing? If that's like it,
is 3:30.
sorry. If you're looking for something like that, then you know, hey, if it's just moving like a nice little rolling hill event, you're going to have to wait until there's a pullback. When it starts breaking away and every day closes higher than the next day, you know you've got a shot to upside pressure, right? And so what this chart is doing right now is that it stopped moving up every single day. Like, see this breakaway here? They had an earnings event right around here, actually, and it bounced fairly high, and this is a resistance area, and it's not really getting past that. So my thought is the following. This chart is very likely to come in and kiss its 20. Now, how did I even get here to the first place? Yes, you could do scans of X, Y, or Z. Some of us are so good at scanning, it's incredible. I am not. I'm a terrible person at scanning. I just am not good at it. But if you do scan and you find things that you like, physically fitting your structures, go take a look at the visual performance. And if the visual performance is not giving you the direction that you want to trade, put it to the side and wait until it does, because it's much better to buy a stock in strength rather than wait for a turn because you think you're buying it on the cheap. Listen, cheap stocks get cheaper and expensive stocks will get more expensive. Now, that's if they're worth it, right? And that's a whole other thing. But this one, I suspect we've got ourselves a really nice buy zone if it can come in to the 315 area. Now, it might not. It might actually just come in to 320, but that will define a fair bit of risk for you. So keep an eye on that. That, you know, what is this? And I think this is an SMI. Yes. So I have a 3.5 SMI here, and I noticed that although I'm moving higher in price, I don't have as much momentum. And so that also tells me, listen, don't buy the breakout. Wait for it to come back into the heavy congestion where everybody's looking at their machines and they're going, holy cow, I got to buy this right here because everybody is sitting looking at this. Okay, let's take a look at a weekly chart very quickly.
Are designated as smoke-free. Thank you for your cooperation.
So here's the thing that I'm talking about. Remember when I said decide how long you want to hold something? How long are you going to engage in a stock? And really, that has to do with how much do you like to study your charts and how much do you like to be involved. Some of us like to trade intraday and we'll move in and out. Listen, the best thing you can ever do is if you look at a weekly chart and it opens up and gaps up, and in the first hour of that week, it does not touch the close of the prior week, you usually have yourself a runner. And you can use a Fibonacci to do that, but that's a really big thing. So you can run a scan that goes, tell me what's open and higher than the prior week. And of course, when things are going great, you're going to see a lot of those. But the key thing is you got to go back and go, wait, is this going to handle it when the markets are down XYZ like today, right? Is it going to be able to handle that? And most of the time, if it's not sitting in these groups, healthcare plans, healthcare, industrials, aerospace and defense, and energy, that answer is going to be no. And you're going to get stopped out of that position. But I love Cigna. It's really strong. It's been strong for a long time. And when it closes this week, if it closes this week under 325, I suspect it gives us that fade into the 315 area. All right, so here is another. Everybody knows energy is in great shape. You want to look at pharma again and notice, here we go. This thing has lots of pockets of, oh my goodness, what's going on here, right? But what you can see is when it breaks out, it runs. And it runs down as well, it runs up. So here's a wonderful thing about Lilly. Let me see if I can get a box. Okay, here we go. So the great thing about this chart is that it bases in these regions every time it has a turn. It's very unique in that space. This is the one reason that I picked it up. It's got all these little rectangles, right? The smallest one is like 3-4 days, but most of them are 6-7 days. And as soon as they break out, you know you've got yourself another run. Well, look at what's happening right now. It's got itself, it's still grinding to the north, but look at what's happening up at the top there. Every time they head to the top, they bump into sellers. So the price action looks good, but you don't want to buy the breakout. You want to look down here near the base, right? It touched the 20. This was the last best time for it to come in and get a good trade off of that 20. And notice, oh gosh, I love the market. Notice you can see this box here of sideways motion. It's actually a little smaller than that because this is the real breakout ledge, right? But this gap gets filled by these guys, comes into the 20, and you're off to the races. So it's probably going to have itself another little pullback like that. And that's going to be a great entry point. All right. So what about if you wait, you're patient, because that's going to be your superpower. If you're patient and you get in and it doesn't hold the price. So let's say you get in, I don't know. Let's say you get in somewhere here. You buy this 20. It pulls in, it gaps up, it comes in, you buy this 20. And you go, you know what? I am going to trade this until it gets into my old resistance area, or I think it's going to break out, right? We're always hopeful that we're going to have, you know, the mother lode, and it doesn't. This edge that determines where we get in on that first place, it's going to be the thing that tells you get out of Dodge. Most of us go, yeah, but what if I stop out? And then it runs right back up. With these kinds of things, if you're looking at that 20 and you've got your system set up, you're going to know, hey, that's been in a channel and it's going to fade and fall out. And you know, you don't know if it's just going to fall 10% or 30% because we're in a bear market, right? So let's say, okay, I know we're in a bear market. I could show you the simple things, right? If for very bullish action, oil, and that's because we're underinvested, but it still has some really savage dips. Like today, pretty savage dip. The big thing to say is, okay, if everybody's taking profit, where are they likely to stop? That's going to be, you know what? Right there at that 20. It happens to come in to the last pullback in the region. Yeah, they're going to move it there and they're going to go, you know, let's try and get it there. But if it doesn't, you're all done. Remember, the striving for perfection will destroy your ability for good practice. Many of us think with all the work that we put into the market that we're never going to have a bad trade. Listen, this is a probability game. And when you're working with probabilities, there are going to be things that go, nope, that's not going to work this time. Doesn't mean it won't work the next time, but you know what you're looking for. So don't look for perfection. It will destroy your progress, right? The seeking of perfection will destroy progress because you'll stop making the right moves to go, okay, I see what happened. Could I have made that stop a little lower? Could I have made that stop a little higher? But everything else is right, and then you move forward. Okay? So let's take a look at some things that are doing pretty badly. Well, I don't know. We could look at something like Tesla or whatever, but you know that that's doing badly, right? If we look at Tesla, it's looking pretty dreadful. Right? Some of us don't like to short. But clearly, if you're looking, listen, a lot of us go, you know what? I'm buying this on a cheap. I just talked to a guy yesterday that said, you know, $190 looks really good for this stock. And I pulled up a weekly chart and I said, I don't think so. I think it's going all the way down to here. And so here it comes. Right down in this edge, and here we are at 180. Now, if you or I or someone else looks at patterns and we go, holy cow, is that a head and shoulders pattern? It could be a nightmare head and shoulders pattern, frankly. But here's the thing. If you go, you know, this is a pretty good place because last time, it was February of 21, the last time this chart was here. And so I'm going to give it a go. I'm going to try and take a long. If it can't get up over 180, you've got to get out. And guess what? If it loses, let's say you're at 179 and some change right now, this edge right here at the last buy setup that I have, what is this number? 168, $9, right? So You could make it half that and look at it because it's a weekly chart, right? Or you could let it fall back and see if it lifts up over the edge. And you could try it long there. But here's the thing. This area where everybody bought, if they buy here and it gets up to this 200 marker, this 198, they're going to run for the hills. So why? Because they're thinking, listen, this thing should have held 200 and it's not. So I got to get out of here. And it's going to bring a whole new fresh set of sellers. So you want to be really careful if you're trying to pick a bottom. If you're trying to go short, that's going to be a great region to say, hey, I'm going to try and short the 200. All right. So a company that I love them, but they just have a mess going on with their symbol. They have a mess going on with their supply, right? Because this is an Italian company, and Italians are craftsmen. They do not know how to manufacture bulk-wise, and they've been destroyed. Their supply chain has been absolutely destroyed because of everything going on, right? And so these guys are sitting also at a support zone, but the gap down tells me that they're going to be hopeful buyers. People like me who really love the leadership here, they're just been dealt a terrible hand of cards. Plus, you know, energy costs so much for them to keep their manufacturing sites open, and they're trying to bring it all in-house, and it's just a mess. These guys, I have no idea where they're going to end up, but I suspect they're going to have a bit of trouble. So where is the space? You know, people are going to try and buy it here, right? Because it's been September, and then it tested here. So this is it. If it holds the week here, it's going to try and fill this gap up. You want to look for the short somewhere around 85 until it stops making a new low. Otherwise, this chart is just going to continue to fade because I don't think they've got, you know, too many fantastic opportunities to turn themselves around under the squeeze. And they make incredible equipment. You know, maybe they get bought. I don't know, but they make incredible diagnostic equipment for the medical industry. All right, what else? Let's look at housing. Last one, and then we'll take a few questions. And John Denver in the back, do you hear him? Wow. Okay, so here is XHB. Everybody's thinking, hey, listen, housing's going to have to turn. Yes, it is. I just don't think it's going to turn now. The great thing that's going on with this particular stock is that it's caught in a range. And so if you're an options guy or gal, this range here, I've been playing for a couple months, okay? I'm selling the top and buying it back on the bottom. Or when it gets into the middle like here, where it is right here, I sell the 60, actually 57 and 60, I'll sell that spread, I'll sell that call spread, and then down here, I'll sell the put spread, and it'll give me an iron condor, and that really has been keeping me on the right side of the trade during this noise. My thought is people are going to be hopeful like they were here, because everybody thinks Fed Powell is going to have a pivot, and I don't think that's going to happen. And so they're going to have hope and hope and hope and then crash. And so it's going to go down and test these lower levels, and that's what's going to happen. So let's open up chatter, Jeff. What I would like to do is offer a couple of slots for a month in my trading and study room, where we do options and futures and all those sorts of things and break down things like that. So you can pick your two numbers and we will get 2 happy individuals, and we will get them set up for a month in our room at the Trading Book.
The mute button struggle is real. Let's do it. Yeah, let me go ahead. I'll let you pick them out. How about? Let's go ahead and open them. I've got a prize list right here.
All right.
We're amazed that we haven't heard any final boarding calls or really any announcements or how well it's going.
Oh, you know what? I am in the back of the airport. I was like, where is I'm way in the back, like this is a small airport, but I'm way in the back, and I'm like, I'm crossing my fingers that because things will start heating up at about 5 o'clock. So anyways, yeah.
So let's talk about this prize. It's you do a group, right?
Yes. Mm-hmm. Okay. And every day we break down what the SPY and the Qs are doing, what the broad futures markets are doing, and then we talk about the setups because sometimes we run options with the 0 DTEs, and then we you're free to ask questions about anything and get charts on anything, and yeah, it's just a great way to learn a little bit more about how somebody else works in the market.
Perfect. That sounds really cool. The first winner is Jeffrey G. In Salt Lake City, Utah.
Yay!
Yeah.
I think that's a good sound.
And the second winner is Kelly C. in Salt Lake City, Utah. No, I'm just kidding. Okay.
Wait. I'm so slow. I just got that.
All right.
Got that.
Let's get a number between 1 and, let's see. Oh, I have a pop-up note here that's hiding the number 1 and 11,039.
Oh, I have to do that?
Yeah, you're gonna pick out your own winners.
Okay, 9, 6, 7, 8.
9, 6, 7, 8. Okay, and that would be Harry K. in India with a Gmail account. We're trying not to say full names because, yeah, we were doing that for a little bit, and then we felt like we were doxing people on the internet. So, okay, and let's get ready. I'm going to just make a note of that so that I know who it is, and I had to come to this part of the video and boy, watch it. Let's have you pick out another number.
1109.
Okay, and that is Bjorn J in Sweden.
Nice. Sweden is on my bucket list, actually.
So I will give you both of these winners, and then you can reach out to them.
Thank you very much. We'll get them all set up and send them the links and get them in the live room. That's great.
Okay. And I've got them saved forever. We didn't get a lot of questions, but if you do have questions for Anne-Marie, let me know. There's a lot of stocks that, can we look at a stock real quick?
Oh my gosh, of course, of course.
I haven't looked at Roku for the longest time, but I remember that was like a really good one.
Yes.
It kind of hasn't been for a minute.
Oh, they just had, people just got so excited about this one, and then, it falls into the class of the meme trades. And whoops, I think I got the ticker the wrong one. Symbol ROKU.
I haven't looked at this forever. It could be at 0 for all I know.
Yeah, well, you know what? I just did all right, open chart. Yeah. I just did a bunch of people starting to look by here. Oh my word.
Oh, it's working its way down there for sure.
Yeah. So let's take a look at, the big problem with these guys is that they lost, what did they lose? They lost a relationship with somebody, and then somebody came in. All the new smart televisions have almost made them obsolete. I don't want to say
Mhm.
obsolete, but so I think that that's what's really hurting them. Now they have tried to get a few things in play, but these guys are interesting for the following reason. All right, so here is a low event somewhere around 30, and that happened in 2018. And then it was just meteoric, and look at that double top. Oh,
Yeah,
that
that's the
is
biggest double top ever.
epic. I know, what an epic double top. Wow. And the price there, of course, very overheated. Just, this is your typical COVID stock right here. And now they've got this area where, here's the thing, they look like they're trying to base, but I hate to be someone that goes, I think these guys go to zero, but I fundamentally speaking, I think they have a lot of roadblocks.
For sure.
And so my thought would be, I wouldn't touch this one. Well, I might touch it with Bill Gates money, but only because I would hope it would go down. But he needs to stop buying all the farmland. Okay, so I would say no go there. I tell you what we did look at together that I still love, and that's lithium.
Oh yeah.
LIT, yeah.
Either.
Right, now that one got super overheated. As a matter of fact, we talked about it way back here, right?
Mm-hmm.
And it was just running really hot, and then the floor fell out of it, and now it's moving up again. So my suspicion with this one is that it does head higher. The problem is with all of these motions, the problem is, how do I manage things between the ebb and flow? Because remember, when a chart is doing well and price action has a really negative space along some other stocks, people are going to get margin calls and they're going to have to sell their winners. So here is the big thing with this one. I would wait again for a fade. It's got a weekly trigger that's already gone off, so we know that that's doing okay, but the 20 is still flat to down, and so it's got a lot of weakness. Do I think the lithium industry has a lot of upside? Yes, but it's also its ability to bring lithium, the ability for lithium to get to the market is hampered by a lot of ESG movement that is suggesting, wait a second, we don't really want to use diesel, but diesel's the only thing that can break up all these minerals and elements out of the ground. And so there's a little bit of a conflict in there that they're going to have to sort out before lithium can move to the north. But it does have a lot of room. It's just overheated, and now it's really starting. We've had 6 months holding a floor of 64. And so my thought is, if it comes back and tests 64, because this moving average is downward, I expect it to do that. It might come in and test 66. But if it does, I think that's going to be a great place to enter with very minimal risk. I really like that one a lot, to be honest. I do. The next one that's also, another one that's really good, that is having a lot of, it's having a tough go. It's GDX, that's Golf Delta X-ray. And it's been really it's been destroyed. But over the last 3 months, it's sitting in, my favorite thing to look at is these channels, right? So it's been sitting in this channel for a bit. Hello. And it's attempting to break out. So this is the first breakout. Now, two things can happen in this breakout. It can break out and come all the way back down, or it can pull back into the breakout level and continue. I would say, you know, it's been so damaged in terms of all of this move down. I would still anticipate that it's sideways because the 20 is still sideways. And so the pullback action into the areas near 24 or so are going to make that one pretty good, because those are the gold miners, and those guys are going to start, I believe those guys are going to start merging. We're going to have some mergers that are going to be super interesting in the grand scheme of things.
Now, I have one more thing for you. Just a comment that just came in, and I couldn't agree more with this comment. Thank you for being here today. Your positive generating spirit is captivating me back into the market. That's from Lisa.
Oh, that's so nice.
Yeah, right?
Thanks very much. That's so kind. I love the market.
Yeah, we can tell. I don't think I could have come up with a better compliment. You're always
That's
great to have.
kind.
It's always good to have you. Very kind. Thank you.
It's always good to be here. Thank you very much. I appreciate that. I appreciate that.
I'm going to say to you, Anne Marie, happy travels. Be safe.
Thank you.
And I hope everything goes well. Let me know.
Thank you. I will. Thank you, everybody. Good luck. And
All right.
I'll talk to you soon.
Thank you, Anne Marie.
Bye-bye.
Bye.
Bye.
All right. Okay, let me make me the presenter again real quick. Presenter. Okay, show my screen. All right. Move my big picture of me out of the way. Some of you may have noticed Anne Marie was having some charts that were MetaStock, and she was using her add-on, the Target Rich Trades. And with Target Rich Trades, it does a really, really good job of outlining support areas on a chart, like here, resistance, giving you sell zones. And one of the things, here we had a good sell zone. Here you had a buy zone that didn't really work out, but there was your stop loss just a couple of days later. One of the things that I think Anne Marie did a really, really good job of in her add-on, and just in general, is just the market commentary that she has. So we're looking right now at a chart of Costco. I was looking at some charts I haven't looked at in a minute. And what I wanted to do is just show you kind of like what the expert commentary would say to you if you're going to go and look at it. So here we've got the expert advisor commentary. It's looking at this day. I'm just going to come back into this where it said this sell zone. So we did just establish a resistance area according to the add-on right here. And right here, we would have got a sell area, zone area. And so really, one of the things Anne Marie did a really, really good job with, it was her commentary. I like good commentaries in MetaStock, but right here it's telling you that the current trend is bearish. You can see that on the chart. Telling you where the last region of resistance and support sit at, telling you that it's a sell zone and it's defined by as a short signal, red resistance diamond, and then followed by this. She goes into a lot of detail. If you look to take on this, you should put a stop right here. She talks about the slope and looking at kind of the direction of the chart, the overall location of where this is to regard to other symbols, and a lot of really, really good detail that kind of goes, and a lot of really big thought that she put into the add-on. And it's a really good add-on. We kind of go in and just kind of talk a little bit about it. So the add-on name is Target Rich Trades. It's by Anne Marie. It does real-time signals, of course. You're going to get setups, you're going to get triggers and exits, you're going to get that commentary, break it down. It's going to have the scanning, so you can go in and scan for the new opportunities, and has a system testing, of course, and a comprehensive user manual. So with Anne Marie's Target Rich Trades, again, it's only $500. It's a one-time cost. Here at the conference, we're going to do a conference special where you can get it for $399. If you don't have a copy of MetaStock yet, we'll give you a free trial to MetaStock. It will give you the white glove installation. We'll give you a training class that comes as part of it that helps you understand how to run it. And Marie and I did that class, as well as unlimited tech support with our support team. If you have any questions, if you need any help, They do a really, really good job. So you can get that at metastock.com/salespchat. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/conf-promo, conference promo, but shortened a little bit, conf promo, to take advantage of this as a webinar offer. Chuck says, please pass on our good wishes for her mother. I will, for sure. And I'll be definitely following up with her because I hope everything goes well with that. So thank you, Chuck. Appreciate that. I think it's time for Stocks and Commodities. Thanks, Stocks and Commodities, for supporting today's event. We really appreciate it. They've been sponsoring our events for almost a decade now, and they do a great job with us. Again, if you bought Anne-Marie's Target Rich Trades, they're going to give you 2 years of their magazine for free. If you just subscribe to MetaStock on our buy one, get 2 free trial, we're going to go ahead and give you a 5. Actually, they're going to go ahead. I want to be very specific. We don't pay for these prizes. They're offering it as part of the sponsorship. They're going to give you 5 months of a subscription as part of that. So again, 17,000 articles, 1.3 million subscribers. They've been making the magazine since 1982. Great partner of ours. We really appreciate all the work that they've done with us. Kelly, I know we just gave 2 prizes away, but I'm feeling like giving away a 3rd. What do you think?
You know, I'm in. I think you should do it.
Okay, let's look at, let's see what we've got. Okay, it's been a minute, but I'm going to give away another Melissa Armos market review. Melissa, you remember she spoke yesterday, right?
Yeah, she spoke to us about gaps.
Yeah, she's going to do this particular prize is worth $50. It's a weekly newsletter. It's her weekly market review newsletter. Basically, she does a market review and sends a video link. Comes out on Monday. It includes economic reports for the week. It looks at where the market is gapping. It looks at stocks that she's liking right now. And it's all basically you'll get 1 month free access of that as part of the prize. So let's go ahead and pick a prize winner. I've got my spreadsheet ready. Do you have a number for me?
No, I'm thinking, okay, let's go with 8,692.
Okay. And that would be Jose S. in the Philippines with a Gmail account. Everybody has a Gmail account, it seems like, this day. All right. So, Jose, congratulations. Anne-Marie, or not Anne-Marie. Oh, my gosh. Melissa Armo will reach out to you with regard to that prize and getting set up for that. So good, congratulations on winning it. And thank you for the assist, Kelly. Appreciate it. All right. Okay. Very cool. And of course, for MetaStock, you can get an extended trial. We've been talking about how awesome our software is all week now. We can help you scan the markets, test trading ideas, do forecasting with our patented probability statistical forecast based. Scott showed it off on Monday. You can get real-time alerts, commentary, signals. It's a great software program. It starts at $59 a month, and if you buy a month, we'll give you the 2nd and 3rd month for free. You can find out more about that and all of the offers we're doing at metastock.com/conf-promo. Or you can, if you have questions, let us know. 800-882-3040 or metastock.com/salespchat. So there you go. Our next guest is Dan Passarelli. I've known Dan also for a number of years. He's spoken at quite a number of our conferences now. I think this is maybe 2 or 3. He's got a red knockout and a green knockout that he's going to show you. I always have really liked Dan. He does a really, really good job. And I'll say that I really like his presentation style. So we'll go ahead and kind of get him in here. Dan, how are you doing today?
Hey, what's up, man? I'm doing great. How are you?
I'm good, thanks. We can hear you. And I just sent this screen over to you. We're having a great conference. There's been a lot of good questions, a lot of really good, it's been great. Very happy with how it's going.
All right. Yeah, that sounds really fantastic, man. Oh, shall I share my screen or my webcam rather?
Yeah. Do you know how to? If you want to, you can. All right. Sure. Yeah. We encourage audio. I mean, if I get to look at you for an hour, that's even better.
Oh, geez. Yeah, you might want to. This might be a good time for a coffee break, Jeff.
All right, I'm going to get Dan. We're excited to have you. Thank you for joining us. I love every time you share your screen. I'm like, oh, I love the green branding on your walls. It's all yours. I'll get out of your way.
All right. Thank you, my friend. So, hi, I'm Dan Passarelli. How you feeling today? I am very excited to share with you a new trading system that I developed. Before I get started, I need to point out options are not for everyone, and you should read characteristics and risks of standardized options before trading. And you can get a copy of that by calling, by emailing investor services at theocc.com. All right. Now I'd like to make sure you can hear me and I can see your questions and that you can find the questions box so that you can participate and get the most out of this. So please go to that questions box on the GoToWebinar control panel and tell me, what would it mean to you if you could massively increase your win rate? How about that? What would it mean to you if you could massively increase your win rate? Hey, Randall, how are you, my friend? Let's see here. Juliana says, awesome. Great. Venu says, that would be great. Excellent. Steven says, more money. Yeah. Randall says, I can hear you. Awesome. Good. I love it. I love when you guys participate here. It makes me feel like, like we're all together in a big room here. This is great. Ed says more vacations. I like hearing that too, man. I'm a vacation sort of fellow myself. Now listen, I'm just going to jump right in here if you don't mind. Think of your usual trade size. Maybe it's a 5 lot, maybe it's a 50 lot, or maybe a 1 lot. I don't know. But if you knew that a trade was going to be a winner, right? Crystal ball scenario, would you trade just your normal trading size or would you trade bigger? What do you say? Bigger, of course, right? The more confidence you have, the bigger you can trade, and that's how you make more money. So look here. On July 27th, 300 put credit spreads traded in Tesla. 2 days later at expiration, the person who made that trade could have locked in a $73,500 winner. Now that is a nice day. That's a big trade, right? That's a lot of confidence in this trade. So who is making these sorts of trades? It's Wall Street traders, the professionals, the guys people are always saying, you're taking my money. These are the people we love to hate. The professional traders that trade for big institutions like Goldman Sachs, who made $21.64 billion last year. How is that remotely possible? $21 billion. These institutional traders are the same people who made billions of dollars leading up to the 2008 financial crisis that left a lot of people out of work and out of their homes. When you're in Chicago or New York and you see that 27-year-old pull up to the valet at the steakhouse in the shiny new Ferrari, guess what they do for a living? And then there's those high frequency traders whose firms pay $10 million to build microwave towers so their order gets to the exchange before yours by 3 milliseconds, and you are left out in the cold. How can we compete? But one thing that is undeniable is that they're smart. You don't get to that level without having figured some stuff out. We still don't have to like them or trust them. We can disparage them every chance we get, but they make money because they know how to do it. The bad guys. Are these institutional traders our friends? Yes. Yes, actually they are. Why? From this day forward, these traders are going to help us with our trading every day on a daily basis. Imagine that for a minute. There is a way to have institutional traders share the trades they're making with us real time. They do all the work, we'd see their trades, and we'd trade those trades right along with them. This is my promise to you. I'm going to share with you a way to trade high probability trades so you can boost your win rate by up to 53% more than your current win rate. by actually seeing the trades professional traders are trading real time without them even knowing. Sounds great, right? And at the end of this presentation, I'll share how you can take the next start getting these results right now. Hit that questions box for me again. Is that a fair deal? Do you like that? You like that deal? Hit that questions box. Give me a big old yes and let me know that you are liking this. Let's see. Elaine says yes. Venu says yes. Steven says yes. Giuliano says yes, all caps with a couple of exclamation points. All right, you guys are lively. I like it. Okay, also, be sure to stay till the end of this presentation. The most important things that I will share come later. And to keep the focus, I'm going to hold all your questions. If you have a question, write it down. I will get to it later. So let's keep it positive and let's have some fun. I'm Dan Passarelli. I traded on the floor of the Chicago Board Options Exchange for many years, wrote 2 of the most popular books on option trading. I've worked with every major options broker and exchange in the US and abroad, and I get to be on TV a lot, which is kind of fun. But this is also a slide of who I am and what I do, and these are the important things, right? The most important thing to me is my family. My kids, my wife, Kathleen, who many of you know, she's been part of the Market Taker team for a few years now. Previously, she was what you might call a proofreader, and now she proofreads our articles as well. She catches our mistakes. She's the person who makes authors look smart because anyone can make a mistake. In addition to Kathleen, there's our 2 adult children, and one of the things we like to do together is travel. We enjoy new cities, learning about new cultures, nature, food, and wine. We've been all over the world together. We are also a musical family. We enjoy listening to music, playing it as well. And these are the things that are important to me, and trading helps me be able to do them. Oh my goodness, I've got the hiccups. 1 second here. Okay. So now let's talk about you. I know some of you are just starting out, some are already doing pretty well, and some of you have been struggling for a while. Whatever your success level is now, you believe you can always do better, right? Maybe that means having a little more freedom to take time off and play golf, or actually taking that 3 to 5 day vacation to a dream beach home at an Airbnb with friends and family, or maybe being able to give more to your family members, put them through college, right? Listen, here at Market Taker, I will never preach about how trading can get you that brand new Ferrari. That is just not us. But what if you can learn a life skill trading that allows you to go purchase a fun convertible for nice summer days, right? All this is possible. And I know, Mustangs or Corvettes or whatever are not for everyone. Many people like practical cars, the simple workhorses. Even the folks who I know who have a fun sporty car, they also have a practical one too. Something to drive the kids and all their equipment to soccer practice in. Something to get you from here to there that's reliable, that will get you 200,000 miles over there, that you can consistently use over and over again through rain, sleet, or snow, no matter what. Now, maybe you love flashy stuff and maybe it's not your thing. But either way, life is easier when you have one thing that you can rely on. The one vehicle that provides consistency you can count on. What I'm going to share with you today is exactly designed with consistency and reliability in mind. This is not a get-rich-quick scheme. And we're not trying to do it slow either, don't get me wrong. Maybe we can call this a consistent wealth-building activity. It's about drastically increasing your win rate with high probability trades to produce consistent profits over and over, so you have that one part of your overall trading strategy that you can rely on no matter what. Consistency is not guessing. It's measurable. It's using probability to increase your odds of winning and produce a positive return over and over. And in order to do that, we've got to put multiple criteria on the side of every trade. And one of those things is time. Now, first, we've all heard the phrase time is money, right? But in fact, one of those things is more valuable. I'd say anyway, right? What would you say? I know what you'd say. People always say the same thing. It is time, because you know what? Money is not the hard part. You can always make more money, but you can never get your time back. And this is what I love about this, right? You're here today listening to these great speakers, and you're committed. You're committed. You invested your time in being here today. You took the first step. And Warren Buffett says the best investment you can make is an investment in yourself. You've already invested your most valuable asset. You've invested in your time in yourself. Keep moving forward and reap those returns. Now, speaking of which, let's talk option trading. In option trading, time literally is money, or at least becomes money. The reason is because options provide more ways of making money, and one of the most important of which is time decay. As time passes, options lose their value, which helps certain traders who know how to put time decay to use. Time passing creates money. Now, that last bullet point might seem kind of weird, that time passing creates money, because a lot of traders just buy options. But I like to say, hey, if you can't beat them, join them. Put time on your side. Instead of buying options and being at a disadvantage, many traders sell them. In fact, selling options is actually more popular than buying them, because it's a way to make money by time passing. Now, one thing about selling options is that if I just sell an option, I could end up with a small profit potential, but much bigger risk. So we want to be strategic, right? There are two limited risk, very strategic option strategies that are at the heart of all option trading. So much I call them the mother strategies of option trading. The mother strategies of option trading are credit spreads and time spreads. If you can master these two strategies, you will have all option trading mastered. And the reason is because nearly every option strategy is made up of one or both of those strategies. It's important to get credit spreads and time spreads. Right now, I will share the inner workings of credit spreads and walk you along the path to putting them to use. So there's two types of credit spreads: call credit spreads and put credit spreads. A call credit spread is when a trader sells a call and then buys a higher strike call in the same expiration. A put credit spread is when a trader sells a put and then buys a lower strike put in the same expiration. Boom, there. I taught you almost everything you need to know so far. Now, an important takeaway, though, is that because they're both call and put credit spreads, this methodology of trading works in both up and down markets. To be clear, these are not directional trades per se, not bullish or bearish trades. These are what many traders call line in the sand trades. They're forgiving. As long as the stock stays on this side of the line, it wins. So let's go through an example so you can see what I mean. Let's say a trader studying this stock and thinks it's not likely to rise above a certain point. Maybe there's resistance at $54 a share. Well, the trader can position him or herself to make money as long as this stock doesn't go above $54 a share for the next 10 days by selling the 54 calls that have 10 days to expiration, and at the same time, as part of the same trade, buying the 55 calls in the same expiration. So they sell the 54 calls at 49, buy the 55 calls at 28. This trader collected a net of 21 cents. 21 cents of option premium is $21 of money. This is a 10 contract trade, so that's actually collecting $210. As long as the stock stays below $54 a share for the next 10 days, this trader can make up to $210 on this 10 lot and do so with limited risk because we're protected by the 55 strike call. So think of it this way. The short option is where one makes or loses money. If the stock's below it through expiration, you get the max profit. If it goes above it, you can start losing. And the long option is the protection. It's what limits the losses. This is a probability curve. The horizontal axis is the stock price, and the vertical axis is the probability of the stock being at that price. Now, what I have here is a bell curve. Most finance professors who love to get technical and use fancy terms will say that stock prices are log normally distributed. So this graphic being a bell curve is not technically exactly correct, but hey man, it's close enough for an artist's rendition. Now to make it simple, here's what this shows. The middle is where the stock price currently is. The higher part of the curve here says that smaller moves are more probable than bigger moves. If we look at, the past 30 days or whatever, or if we're forecasting for the future, if here is today's stock price, most future prices would fall here close to where today's stock price is. But a number would have closing prices farther away from where the stock is now. Now, another huge implication that this has is that finance professors assume that the stock has about a 50-50 chance of heading higher or lower. There's a slight interest rate component there, giving a small bias to the stock going up, but this is basically how finance professors think about it, 50-50. Now, that said, we are going to talk about how we can change those odds more in your favor later in this presentation. Because in this case, the stock was at 52.61 when the trade was put on, and we sold the 54 strike calls, we have a head start in making money. So let's go back to that professor math. If the stock was at 52.61 and there's about a 50% chance of it being lower at expiration, well, look, that 50% chance of occurrences would be winners. And then for the other 50% of the time, when it goes up, some of that time the trade will be a winner too. In fact, a high probability of that. Only if it's trading too far above the strike at expiration does the trade lose. And that's why credit spreads are naturally high probability trades. And that has huge implications. First, the objective is not to do this once, to make one trade. It's to make these trades that have a much better chance of winning over and over again every day. More wins compounded over time can grow your account exponentially. And that's great if you have a small account and want to grow it into a bigger account. And even if you have a big account and want to grow it yet bigger. Now, I have a question for you. What if you only had 30 minutes a day to trade? There are some trading styles that would be impossible with that time constraint. Day trading, gamma scalping, momentum trades on short time frames. These are all impossible to trade for people with busy schedules. But credit spreads, they make money as time passes. They're not urgent like momentum trades or day trades. They're ideal for traders with busy schedules or for traders who have the time but like to, well, frankly, spend it better. With our trades, we have to look at more than just the win rate, though. We need to talk about risk. Every trade is a balance of probability of success versus risk reward. So let's look at that Citigroup trade again. If the trader sold this credit spread and collected $210 and held it all the way until expiration, and the stock ended up below $50 at expiration, the option would expire and the $210 would be the final profit as shown by this blue line right here. If the stock rises above 54, the trade might still be a winner. The credit from selling the spread was 21 cents, so the actual break even is $54.21. So below 54.21, the trade wins, and above there is where the trade loses. And we will talk more about losses in just a second. Now, first, as you can see here, the stock is currently at $52.61. There's about a 50% chance of the stock going down. And if it does, and it's lower at expiration, that leads to the maximum profit. Then there's a 50% chance of it going up. And some of that 50% would also lead to maximum profit up until we get to $54 a share. That's when the trade starts getting worse. So your odds of success are overwhelmingly in your favor. But I want to be very clear about something. You do stand to lose more than you stand to win like this. While the maximum win is 21 cents of option premium or $210 of money on this 10 lot, the maximum loss is 79 cents. We calculate the max loss by taking the difference between the two strike prices, so 55 minus 54, minus the credit. So that's $1 minus 21 cents is 79 cents. In this case, the risk is more than 3 times the profit. So like I said, there's a balance between probability of success and risk reward. So we need an edge above and beyond just probability of winning. And this is what is different about our approach to trading credit spreads. We get that edge, so the odds are overwhelmingly in your favor above and beyond the simple approach that everyone else uses. What if we could find a bunch of credit spreads that are high probability to start with, and then we take all of them and see which meet certain criteria that would make them an even higher probability of winning, above and beyond the simple professor math. And then we take only the trades with the best probability versus risk reward of those. That would be powerful, wouldn't it? Now, let's talk about this guy again, the professional trader. I used to be this guy, or at least a guy like him. That was before I chose to work with you to beat guys like him. In fact, I know this sort of guy so well, I actually have a picture of him from when he was a kid. You ready? You want to see it? Yeah, that is probably him, right? They take your lunch money, eat your lunch, make you do their homework, and now they dominate the financial markets. Are they mean? Absolutely. Some of these guys will take and take and take. Do they cheat? I don't know. Maybe they do. But you know what? Like I said before, they're smart. You cannot be a professional trader, not for very long anyway, without having figured some stuff out. Say what you will about them, and you're probably right, but they know how to make money. So I have a question for you. What if you knew what the professional traders were doing? They'd find the good trades, do all the research, they'd trade them, and you would know exactly what they were doing the moment they do it, without them even knowing. That's kind of like having the bully do your homework for you. Now, wouldn't that be great? But one thing we know is that sometimes even the smartest people make mistakes. After the bully does our homework, we're going to proofread it to make sure it's right. This whole system is predicated on them being right. But you know what? They're not always right. But do you know what is always right? Methodology. Our methodology proofreads what they're doing. So we not only have trades from super smart people, but we're only taking the best of them. This is what I call the genius method. After seeing what professional traders are trading, we verify the technical setups using support and resistance, that we can sell options that are overpriced, that there are no planned announcements that can cause the stock to lose. And this is how we gain an unfair advantage. We see what the professional traders are doing right there on our computer, so we're getting all their unfair advantages, plus we screen them out with our time-tested methodology to take only the best of the best. Now, before I get into how to see the trades the institutions are making, let's first look at what this looks like in real life. On August 2nd at 2:05 and 40 seconds in the afternoon, a big institutional trader sold 850 of the August 22nd, 120, 124 call credit spreads at 45 cents. So that means the trader sold short 850 of the 121 strike calls, and at the same time, as part of the same trade, bought 850 of the 124 strike calls. That's call credit spread. Same expiration, two different strikes. Because the 121 calls are a lower call strike, they had more premium. Thus, the trader took in a credit when the trade was made. In this case, it was 45 cents per contract. 45 cents of option premium is $45 of actual money per contract. That's times 850 contracts. This is a pretty big trade. After about 2.5 weeks, expiration came along, and this trader could have made $38,250 at that time. What if you were alerted about this trade the second it happened? Well, a small trader following along and trading just 5 contracts could have made $225. Now, $225, it might not look like a lot compared to $38,250. But imagine doing this many times over and over again. This is what leads to this being a wealth building activity, even and especially for smaller traders. And bigger traders, they might consider trading somewhat bigger trades. A 10-lot trader could have added $450 to his or her account. A 20-lot trader could have brought in $900. And by the way, if credit spreads or even options in general are new to you and you're not 100% sure yet on everything we're talking about, in just a few minutes, I'm going to share how to make all of this really super simple to follow along with. So let's look at another example. In Apple on June 29th at 10:51 and 17 seconds in the morning, 500 of the August 5th, 150, 160 put credit spreads traded at $1.20. So this trader sold 500 of the 160 puts and at the same time bought 500 of the 150 puts. This trader took in a total credit of $1.20 per contract. So this is a put credit spread. Its advantage is it's a not very bearish trade. As long as the stock stays above 160 at expiration, which in this case just a week later, this trader would make $60,000 profit. Now imagine you see this trade the millisecond it happens. A trader trading just a 1 lot could have added $120 to his or her account. A trader who typically trades 5 lots could have brought in $600. 10-lot traders could have made $1,200 following along, and that would be $2,400 profit on a 20-lot. In Tesla, on September 19th at 11:26 and 16 seconds in the morning, a big trader traded 255 September 23rd, 315, 335 credit spreads, call credit spreads at $3.60. And that's a big trade. Then about 50 seconds later, at 11:27 and 5 seconds, the trader sold another 255 credit spreads at $3.57. Now, again, these are not super time-sensitive trades like day trading or anything. The price often doesn't change all that much in a day a lot of the time. Remember, you make money mostly by time passing. If you miss the first trade here, even miss the second one, and happen to notice it an hour later, it's still possible to participate in the trade. If this trader held the position until expiration and the stock stayed below $315, at expiration, he or she would have made $182,835. Pretty great trading day, huh? And that was in just 4 days. Even a small trader following along, trading just a one lot, could have added $357 to his or her account. A 5-lot trader could have made $1,785 in profit. 10-lot traders could have brought in $3,570. 20-lot traders could have made $7,140. Now, what I just shared with you, these are just a couple examples to have you get a feel for how this works. I have dozens of examples of how all this works that I'll be sharing in even greater detail in a bootcamp video class. In just a few minutes, I'll share how you can get access to the video recording of that half-day bootcamp that we recorded for you. By now, we've covered quite a bit. Have you found today helpful? Do you think today was time well spent? Do you think that you can use what you have learned today to grow your portfolio and provide you and your family with a higher quality of life? In fact, go and hit that questions box on the GoToWebinar control panel. I want you to answer these last questions right here. Would you like to get results even faster? Yes. Hit that questions box for me. Do you want to get consistent daily results? Yes. Give me a yes. Is it okay if I show you a way to go even deeper, to get consistent results even faster? Mary says yes. Steven says yes. Venu says yes. Juliana says yes. Rao says yes. Nathan says yes. David says yes. Aaron says yes. You guys are awesome. All right. Manu says yes, exclamation. Yeah, man, that's what I'm talking about. Now, look, like any professional athlete or anybody who is ever great at anything, really, for that matter, has to get up 2 hours before everyone else to get in their practice, right? And traders do that too. But I don't want to get up at 4 a.m. to get all the trade data I need from all the CEOs and then do all the research, model out the trades, and so on and so on. Like, the one thing that I know is that the big institutional traders are already doing all that. Why double up efforts? So I discovered a way to get institutional traders trades sent to us real time. If you're like me, you get a lot of messages, and some of them are important. Look, if you didn't open Jeff's email or text that he sent you about this training, you could have missed one of the best trading opportunities I've ever shared. But you get some noise too. What if you could just get the most important messages and skim them over on your lunch hour or break and get all the information you need all in one place without the noise? You just see what's important, what I like to call purposeful notifications. Wouldn't that be great? And that is what I'm going to share with you right now. Credit Spread Genius is officially here. Every day, you'll get real-time alerts when traders are trading a large volume of credit spreads to open a new position. You will be the first to spot these trades so you can participate in the best trades in the market using my proprietary trade triggers to see exactly when the trade is happening real time. Then follow a simple checklist to proofread it, and it's all extremely simple. I'm sharing this now so you can start getting the results that you deserve. Like this one on October 18th in Nike. A trader could have followed the institutional traders and traded a 5-lot of the October 91-95 call credit spread and could have made $420 holding it till expiration. A 10-lot would have made $840. In Apple, on September 30th, the trader could have traded a 5-lot of the October 120-130 put credit spreads at $1.32 and brought in up to $660 on just a 5-lot. The 10-lot could have made $1,320. Now, let's skip ahead. In FedEx on October 7th, a trader could have done the October 160-175 call credit spread and made up to $1,025 on just a 5-lot. That's $2,050 for 10-lot traders. Meet Chris from Mobile, Alabama. So Chris was one of the first people to use Credit Spread Genius. Chris says, as a busy professional, I like the credit spread alerts because they save me time researching trades. The nature of credit spreads also means that these alerts are not as time sensitive. I can check the alerts in between patients or at lunch and then quickly formulate a plan to execute the trade. So let's first talk about who this system is not for. So just to be clear, this is not for people looking for a get-rich-quick scheme. It's not that kind of strategy. This is about having a system that drives consistent overall profits. This is also not for people who love spending hours and hours going through thousands and thousands of charts to hopefully find a halfway decent trade. This is designed to save you money. Your time is valuable. These trades can literally be made within a couple of minutes because all the information pops up for you on a browser window. This is also not for wishy-washy procrastinators, overthinkers, wishy-washy people who see a good investment but can't make a decision to save their lives. Don't make good traders. But I know that that's not you, because you have invested the time in yourself being here today. So let me tell you who this is for. This is for you. If you want a true edge over the market, this is for you. If you want your trading to be easier and less time consuming, this is for you. If you have a busy schedule and can't look at the market all day long, this is for you. If you can follow a few simple steps, and this is for you. If you are willing to invest in yourself. I want to invite you to join us and start using the Credit Spread Genius system right away. So first, you're going to get the Credit Spread Genius scanner. So every day you'll get real-time alerts when the big institutions are trading high probability credit spreads. This simple scanner searches the universe for over 5,000 stocks for the setup and makes it possible to find trades you would never have access to without it. This is my easy-to-use alert system that instantly alerts you to big institutional credit spread trades. You'll be following the smart money, so you never have to guess yourself in the market again. You get password access to real-time trade triggers directly from the Chicago Board Options Exchange. I have pulled some strings for you. I've negotiated a contract with the Chicago Board Options Exchange for you to get professional trade data you cannot get from any other source. You can't get it from any other source. I, as a professional in this field, I pay for the data because not only is it expensive, it's about $7,000 a month for professionals, what I pay, but it's not available to non-professionals at any price until now. And the best part is it's all legal. When you sign up, you will sign up as yourself a non-professional trader and get access to those signals through this deal that I made with the exchange on your behalf. This is both powerful and simple. Now, the closest thing to what I'm sharing with you today is called an alert system. This is what one person who used Credit Spread Genius had to say about his experience. I've used other alert systems before. Mostly those were alerting naked long calls or puts, mostly way out of the money, and seem like a lottery ticket. I never gained any ground with those. This credit spread alert seems different somehow, like it tells more of what the big dogs are thinking. So yes, what I've created is different. You see, most alert systems simply don't work. Even the few credit spread scanners that are out there, they boast high probability, but they are only doing the simple professor math. They don't have a true high probability once you weigh it against the risk reward. They don't have a true edge. So I've created a true high probability trading system with a real edge that doesn't require constant attention. Along with the training to screen and set up and manage the trades, I've created something that actually works. So I talked to my friends at the CBOE how to get this data. They built an algorithm just for me that scans the market every millisecond for trades the smart money is making, and then pushes them out to our traders in a password protected browser window. No one else on the planet has this technology. These alerts are truly different. You can't get these from scanning with your brokerage technology. You literally cannot get them anywhere else. But the other important part of this is the proofreading process and the training on how to manage the trades. So I have created some bonuses for you. Now, let me ask you, when the plumber comes by for 30 minutes to fix a busted pipe, you're not paying him for his 30 minutes, are you? You're paying him for his 30 years of experience. So I decided to save you years of time and put everything you need to know from my nearly 30 years of experience into a few super short, quick, easy videos to get you up and running so you can start using Credit Spread Genius right away. This video training course reveals step by step exactly how and why the Credit Spread Genius system works. Because every step is laid out for you, trading the Credit Spread Genius system removes the emotion from your trading, making it easier to get the results that you want. So what that means is first you're going to get the trade triggers, and we're going to get you up and running fast with the accelerator video course. The bottom line is we know this can work for you because we're going to make sure you have all the training you need to make it work. Today, you will also get access to the archive of the Credit Spread Genius Half-Day Bootcamp. You're going to get a complete half-day's training video on every single aspect of trading credit spreads to maximize your chance of success. In the bootcamp, I'll share how to easily confirm the technical setup to put more probability of winning on your side, how to read options data to identify high probability credit spreads, how to use volatility analysis and skew in your credit spread analysis, how to maximize your exits to even further boost your win rate, and how to make all this really simple. Even if you've never traded an option before, you'll understand a simple approach to spread trading so you can trade with a high probability of success right along with professional traders. The bootcamp is recorded for your convenience or just to review. It covers everything you need to know to truly master the system. The Credit Spread Genius Bootcamp is a $3,750 value. So what that means is first you're going to get the trade triggers. You're going to get up and running fast with the accelerator videos. And then you're going to have this completely mastered when you go through the bootcamp. That's a total value of $7,750. Now, this is a bonus I'm super excited to share with you today when you move forward with the Credit Spread Genius package. This is the MTM Spreadsheet Trade Tracker. This is my personal spreadsheet for making sure that I follow every step on my trades. I put it into a template that now you can use too. Its formulas are designed to easily calculate all the trade criteria you need to analyze, trade, and manage your credit spreads, as well as other MTM proprietary trade setups. I've made it so simple to track your trades, it's like cheating. This is a $500 value, and it's yours today as part of your Credit Spread Genius Traders package. This amazing value is not just because of the months of work I've put into it based on my 30 years of experience. Not only that, but if you can manage your trades more effectively, make an extra couple hundred on your winners, lose a couple hundred less on your losers, and boost your win rate, this simple framework has the power to massively increase your bottom line. So what that means is you're going to get the trade triggers, you're going to get the accelerator video course, you're going to get that boot camp, and you're going to get my spreadsheet trade tracker. Total value, $8,250. But do you know what the best part of this is? It's the working leverage. Here's what I mean by that. Oh, and by the way, I forgot to say, Credit Spread Genius works on all platforms. It's just a simple browser window. Trade on any platform of your choice. So typically more leverage means more risk. In this case, less work means more return. It's that kind of leverage. You're leveraging your time, your most precious asset. Look, so I've spent months building this. I've done 50% of the work for you. Now the trades just pop up on your browser windows. Institutional traders, they do 48% of the work for you. You just do 2% of the work and you get to keep 100% of the profits that you earn. Buy now. You can see why the credit spread genius trading system is a steal, even at $8,250. If all this did for you was identify high probability trades to take your trading from where it is now to boosting your win rate so you can be consistent and not have the huge swings that all too many traders experience, wouldn't it be worth it just for that? But today, this is not $8,250. Because you have made the investment of being here live on this training and for being one of my action takers, you are the elite and you deserve to be rewarded. You're better than millions of other traders out there, better than millions of other traders. And I want you to have the results that you deserve. Get started today for a small, easy investment of only $497, but you have to take massive action by going to markettaker.com/MS as in MetaStock 123 go. That's market as in stock market, taker as in take what is rightfully yours, 2 T's in a row, markettaker.com/MS 123 go. A lot of times I'll say, hey, this is limited to the first 20 people or something. In fact, my marketing guy says I should limit this to 20 people, but I don't think that's necessary. You're smart. I'm not going to do that. I want as many people to have this as possible. And why would I give such a huge discount? Because every year we at Market Takers strive to create 1,000 success stories, and we want to vet out the people who are most likely to be successful, people who see value and attack, right? People who see a good trade and aren't afraid to make it, because it doesn't do me any good if you sign up and join Credit Spread Genius, become one of our genius traders, and are too afraid to make a trade. We're looking for the people who are ready and they are willing to invest in themselves and therefore can easily make trades that they see have great value. And I'll tell you what, this is the best thing that I ever created. This will help me help you make it as easy for me as possible to have 1,000 success stories this year. And I was not kidding. These trades come directly from the Chicago Board Options Exchange. In fact, as soon as you go to markettaker.com/MS, you're first taken to the CBOE subscriber agreement from the exchange. Again, that's because of the deal that I worked out with the exchange so that I pay for the data. And because you are a non-professional, only through me can you get this data. So they require everyone to complete this form first. This should be what you're seeing right now. And if you are not, go to markettaker.com/MS right now and type in the questions box or chat box. As soon as you do, type in there, I am in. All right, go to markettaker.com/MS. Now, as a reminder, when you join up today, first you're going to get these Credit Spread Genius trade triggers. They pop up just on a simple browser window. Very easy. You'll also get up and running fast with the Accelerator video course, couple short videos, and you're ready to trade. Also, you're going to have this truly mastered once you go through the half-day bootcamp video, and you're going to make sure you don't miss a single step because you're going to go through the Spreadsheet Trade Tracker to make sure you're hitting every mark. Now, this is one bonus that's not on these slides. In order for me to make you successful, I need to put you in a community of traders that is going through the same struggles that you are. And some traders who have gone through those struggles and have already come out on the other side and are now massively successful. And so today, when you join, you are going to also get access to the MTM community chat room. You're going to be around a community of traders who are making the total, credit spread genius trades every day. And when I make them, I post my trades live real time in the chat room. So you can see which ones I'm taking, when I'm getting in and when I'm getting out, and what my plan is, and get all your questions answered. Now, another question I get is, Dan, I can see how this is a great way to grow my account. And I have a small account. In fact, it's so small that I might have a hard time coming up with the $497. But I want to start using this right now to grow my account. Is there a way I can finance this? And that answer is yes. You can use PayPal and PayPal credits. We have a deal with PayPal to offer you both PayPal as a payment option plus PayPal credit. So you can lock in Credit Spread Genius right now when you check out using PayPal and choose PayPal credit. And all you have to do is go to markettaker.com/MS. Now, do you mind if I over deliver? When you join right now during this training, you will also get as an extra bonus a 30-minute strategy session. I am going to put you on the phone for 30 minutes with a member of our Trader Success team. You will talk about your trading, look at your goals, overcome what's holding you back, and together develop a plan to get to the next level. This is a $500 value. And for those of you who join right now during this training, you will get all that. You're going to get the trade triggers, the accelerator video course, the boot camp, the trade tracker, and access to the chat room and you're going to get a strategy call with our Trader Success team. This is a $9,047 bonus. You're getting about 95% off. 1, 2, 3, go to markettaker.com. I think I might have time for a couple quick questions. What if I can't install it properly? And by the way, if you have a question that I can answer to help you make the decision to come and join us and become one of our next genius traders, hit that questions box and drop it in there and I will answer it. What if I can't install it properly? I struggle with technology sometimes too. There's nothing to install. Simply type your password into a browser window and there it is. It displays your trade triggers live real time down to the millisecond. Is it time consuming? No, I know you're busy. Many traders have a busy schedule. I've designed it so Credit Spread Genius you can trade the system in just a few minutes per trade. What if I can't figure it out? First of all, you get both short videos in the accelerator course for reference, plus the half-day boot camp video sharing everything you need to master credit spreads. Plus, I and my other coaches are in the chat room all day long answering your questions. What if I have a small account? Well, you want to grow it to a bigger account, don't you? Consistency is the most important criterion. Now, there's one more question that I often get also, and that is, hey, Dan, obviously this is an incredible deal. It's 95% off, but this says per quarter. What happens after that first quarter? So look, like you, I invest in myself too. I speculate I've probably spent over $100,000 in trainings just like this. I mean, not on option trading. I've been doing that 30 years. I've got that. I'm still learning, but I don't take courses from people on it. But I take courses on ways to improve myself, ways to develop better classes so you can learn faster, right? And so when I'm online watching a training like this and I get an incredible deal like this, and it's for, the first quarter, I figure, after that first quarter, then it goes full price, right? Then it's $3,000 a quarter. And I stand behind $3,000. That's an incredible price. You can see what this can do, right? But I don't believe in that. Not for me and not for you. So after the first quarter, you can renew at another $497 every quarter after for life, potentially saving you thousands and thousands of dollars. Now, when I say for life, there's no long-term contracts. You're not locked into anything. You can cancel anytime. In fact, in 87 days, we send you an email that says, would you like to cancel? And if you do, there's no questions asked. But if you can make the kind of money we're talking about here, we would love to have you join and go for it and commit to this first quarter and commit to being the best trader that you can be. Any final questions? Ed says, what's typical typical expiration? Anywhere between a couple of days and maybe 2 months. That's it. Okay.
Okay. And I was just checking YouTube. Tavanda says, thank you for your time, patience, wealth of information, knowledge, experience, expertise, passion, dedication, content, dialogue. She covered all the adjectives there. Thank you, Tavanda.
Yeah. Thank you.
All right. Very good. I think that's it. That's what we've got. You can visit markettaker.com/ms to take advantage of that. Thank you, Dan. I appreciate it.
Thank you so much for having me, Jeff, and welcome to all our new Genius members.
All right. We'll talk to you soon. Thanks, Dan.
Bye.
All right. Let me go ahead and get changed over here. Looks like I need to brighten it up a little bit for the next time. Let me go ahead and change also the screen just for a minute. Show my screen. All right. It's made. Let me just try and get that out of the way for a second. All right, very cool. Let me go ahead and get over to the slideshow. Okay, thanks again, Dan. We appreciate that. I'm going to say thank you for CMT for sponsoring today's event. CMT, as you've probably heard maybe a few times today, is a very well-respected, well-reputed organization. They're a nonprofit. They've specialized in doing accreditation for money management professionals. Their courses include, as you can see, risk management, quantitative systems development, portfolio management, and applied behavior finance. We've had a number of the speakers are CMT associates and CMT designated, have a CMT designation after their name. If you want to find out more about the CMT organization, there's two things you can do. One is you can go to the cmtassociation.org and they'll have a lot of information there. Two is you can come back tomorrow and we're going to have Tyler Wood talking about CMT, technical trading, association, what it does for you. He does a really good job. We're going to go ahead and we'll have him speaking tomorrow. So there you go. We are going to do another prize drawing. So let's go ahead and do that. Let's see. I'm going to go ahead and pull the list of prizes here. And all right. Is it Bobby or Kelly that's going to help me with this one?
You've got Bobby here.
Oh, Bobby. Okay, well, welcome. It's good to have you here. I think we can train you pretty well on the prize. The first thing that we usually do is decide what prize we're going to give away. And so this next lucky winner, do you know Oscar Carboni? He was here yesterday.
Oh, yes, I do.
Yeah, he had quite a, he's always a very, Greg, our marketing guy, one of them, calls him a force of nature. But he does an Omni recommendations that's $199 per month. It includes access to him, his community of traders, a live access to a message board, access to the stocks that they're looking at, the Omni indicator they use, all that kind of stuff. So it's normally $200 a month. And the only thing I need from you, Bobby, is I need you to pick out a number from me or for me. And it can be anywhere between 1 and let's see. Oh, hold on. I had to do this so I can get the total number again. 11,039.
Okay. Yeah, that sounds like a good prize. Let's go with 111.
Okay. 0111. Okay. Yep, that word. That's Christopher M. I have not doxed anybody today. I've been very careful about not giving full names. Anyway, Christopher M. Lives in the USA. He has an iCloud account, and I'm going to give him access. He just won a prize. Congratulations, Chris. It's great to have you as a winner. I'm going to make a little bit of a note of that. Thank you very much for the assist.
Of course.
Bobby,
Congrats, Chris.
All right. Let's see. Dinesh wants to know what boot camp means. Okay, so I've been to boot camp. I know exactly what it means. Your mic's still on, just so you know. Oh, there we go. Boot camp, it just means, so boot camp, in America, you go to boot camp if you join the army. And what they do is they spend like 2 months yelling at you. And like you get no sleep, and it's exhausting. And usually, like, what they mean when they say boot camp, when you're talking about a training environment, is something to take you from no knowledge to a lot of knowledge. That's really what it means. So, but the root of that is in boot camp. So, and boot camp, if you've seen like some army movies where they're yelling at people, that's usually a boot camp scenario. So there you go. All right, of course, we're MetaStock. I hope you're enjoying today. You can buy a month of MetaStock, and we'll give you a second and third for free. Again, it's been rated #1 for 29 years in a row. You can get access to that special offer at metastock.com/conf promo. If you have any questions at all about anything, give us a call, 800-882-3040. And you can also visit us online at metastock.com/saleschat. So if you're watching us on YouTube, you want to be eligible to win the prizes, go to metastock.com/conf promo. I'll put that link in the YouTube description as soon as we get this gentleman going. Steve Primo. I love Steve. Steve Steve is a very, very good instructor. He always, when he says something, I understand it. It's very clear to me. He says it in a way that makes a lot of sense. And I think that's a talent that is very, very good. When Steve teaches me something, I always understand it, and we always bring him in, and he always does a good job. And I'm sure he's about to do another really, really good job for us. Steve, how you doing?
Hey, Jeff, doing fine. Can you hear me?
Yeah. I'm going to go ahead and make you an organizer so you can see the questions, and then I'm going to make you the presenter so you can share your screen.
Okay.
Yeah. There we go. And I'll let you know as soon as we can see that screen. I can see it. It says 3 exit strategies that will change the way you trade. Steve, I'm going to get right out of your way. It's your turn.
Okay. Thank you very much, Jeff. And thanks to everyone for attending today. Thanks for that kind introduction. Yes, my name is Stephen Primo. And today I want to talk to you about 3 exit strategies that I truly believe will change the way you trade. The reason why I'm focusing on exits in this particular presentation is far too many traders, especially the beginning traders, focus too much on your entry. I mean, think about it. You're always thinking about, where am I going to get in? Okay, where do I buy? Tell me if this is a good buy. Should I get in or not? And that's fine. Knowing where to enter is extremely important. But oftentimes we focus too much on that, and then we just kind of leave it up to a whim of the market to see, well, we'll find out later where we're going to exit. Maybe if I have a good profit, I'll have a feel, and then I'll determine then. But many times, if you wait or if you exit discretionarily, you'll miss a really nice move, or you'll hold on too long, and then what was a profit will turn into a loss. For example, let's look at this older chart here. You're going to become really familiar with this chart because it's going to be the main chart I'm going to be sharing with you today, because it really doesn't matter if this is recent or not. This is all about just teaching you these techniques today. But as we look at FANG, we see here that, well, okay, kind of like not really doing anything, going up, then going back down, then back up again. But let's just say one of your strategies generated a buy signal. In fact, this is actually one of our strategies that we teach our students. Okay, and so you're saying to yourself, I'll buy this. It looks pretty good. And in the coming weeks, you've got a really nice profit on your hands. You're feeling really great about yourself. You think, hey, this is really easy. Boy, all I have to do is take these signals, and I'll just retire in a couple of years, and life is easy. Okay, well, perhaps one day you have some business to do, or you walk away from your computer, and then you come back and see that this happens, okay? So now what you had as a nice profit has actually turned into a loss. And this is happening so many times to so many traders. I know it happened to me when I first started trading. And it's one of the worst feelings in the world, I'm sure you can agree, to know you had a profit in your hands and then you completely gave it away. And now it's actually a loss. So at this point, you start hiding your account statements from your significant other, and you've turned into a long-term investor, which you thought was going to be a nice quick trade. Now you're holding on, hoping for it to just come back so you can break even. Well, what if I would have told you that you could have exited right here and potentially made 25 points in just a couple of weeks? Well, this is actually one of the methods that I'll be teaching you today. This is actually one of the 3 exit strategies that will, in my opinion, change the way you trade. And you'll be able to start applying these strategies as early as tomorrow, okay? So this plans to be a great educational presentation. Thanks once again for attending. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist. If you're not familiar with what a specialist is, if you ever Google those old pictures of the trading floors where the guys are yelling and screaming and there's lots of paper all over the floor and people are around in a big circle making weird hand signals, those are the floor traders and the specialists. Those traders behind those large wooden podiums were the specialists. And basically their job was to make markets in roughly about 50 or 60 stocks. So in the old days, when I first started, let's say you as a customer wanted to buy 100 shares of IBM. Well, you would call up your stockbroker on the phone, right? There was no electronic trading then. You'd call up your stockbroker. He would take your order over the phone. Then he would call up the floor trader for his particular brokerage firm. The floor trader would take the order down, write it on a piece of paper, buy 100 shares of IBM at the market, and then he'd walk over to me because I made markets in IBM at that time. And he'd say, I have 100 shares of IBM to buy. And I'd make him a market. And he'd either take it or not, or go somewhere else. And so that's what a specialist did. I traded and made markets during the crash of '87 and the bull market that followed. So I've traded straight up markets, straight down markets, sideways markets. And on top of that, I've traded just about every system, every method you can think of. Even if you think it's brand new, it's most likely been around before. It's just been renamed and rebranded. So in my 45 years of trading, I know what works in terms of consistency, and I know what doesn't work. So that's why about 13 years ago, I teamed up with Pro Trader Strategies, my sister site, and we formulated Specialist Trading, where our only goal is just to simply teach traders how to trade. Because if there's one thing I've learned in my 45 years, what most traders do is they take themselves out of the game. They, especially in the beginning when they're learning how to trade, they rely on someone or something else to tell them what to do. All right, they go to a signal service or they listen to some guy on TV and they say, hey, this guy likes this, or my brother-in-law down the street likes this stock, so I guess I should buy it. And that is a recipe for a disaster. And most traders start out this way. And that's why most traders fail. It's been estimated upwards of 80%. So what we do is teach you all the things I've accumulated in my 45 years that have high levels of consistency. And then we teach you so that you can ultimately make your own trading decision. Once again, if there's only one thing I've learned in my 45 years is that the only traders who are still trading that started with me on the floor are the ones that make their own trading decisions. They don't go to chat rooms. They don't go watch guys on TV. They don't even wait for earnings or wait for economic numbers to come out. They have a plan in place that has worked over time, and they simply implement it correctly. So that's what we're trying to instill in all of our students around the world. And I'm happy to say we have students in over 115 countries around the world and in every state in the United States. Now, before we begin, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using these 3 exit methods, but please remember that we can in no way guarantee that any of the results you're about to see will be repeated in the future. And also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, please feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different information, different signals or signs that our strategies or methods have generated. Lots of free education. I also post bits of financial wisdom. So great information on a daily basis. Please feel free to follow us on Twitter. Now, remember, we are, as I stated in the beginning, first and foremost, an educational company. You'll never hear me say what I think the market's going to do or what I think the best stock is or what the best time frame is to trade, because once again, those are all decisions you as a trader need to make. I mean, think of it. Let's say you were being defended by a lawyer, and right there while you're in trial, your lawyer turns to you and says, how do you think I should defend you? What do you think I should do here in court? All right. Or let's say in the middle of brain surgery, the surgeon turns to one of the nurses and says, how do you think I should operate today? What do you think I should do? Or worst case scenario, let's say you're in an airplane and once you've taken off, the pilot comes off over the intercom and says, hey, how do you think I should fly this today? How do you think I should land it? All right. I mean, that's absurd, right? Any of those instances. But traders do this on a daily basis. They're constantly asking someone, what do you think of the market? Or they're going somewhere for someone to tell them what the market's going to do. Now that's, once again, a recipe for disaster, because when you do that, you're basically telling the markets, I don't know. I don't know what to do. I'm not experienced enough. I'm not educated enough. So why don't you decide for me? And that's really a recipe for disaster. And that's why, once again, why 80% of all traders fail. So as you can see here, my goal is not to force feed you signals. It's not to tell you what market to trade. It's simply to teach you how to trade with the specialist edge. Now, when I was struggling my first couple of years on the floor, and my mentors taught me these things, they really helped sustain me. And I think they're at the cornerstone of my being able to trade now for 45 years. So hopefully I can instill that in you and all the students we have, okay? Now, before we begin, just a few things. I like to take the questions at the end. So if you have a question, kindly write it down. I promise I'll get to it at the very end of today's presentation, okay? Okay, so let's begin. And we're going to start out by what I call today's theme, because this is what we're really focusing on, exits, right? Having an exit strategy can avoid unnecessary pain. How many times have you been trading, you have 3 or 4, maybe even 5 winners in a row, you feel great, and everything feels amazing, you think like trading is so easy, and then you have one trade where you give everything back, right? Well, that's not a proper exit strategy. Your exit strategy should get you out with some type of a profit, or at least have you breaking even or unchanged. This is the reason why we say having some type of method or exit strategy can avoid unnecessary pain. Unfortunately, most traders, as we said in the beginning, don't have an exit strategy. They go in focusing on how to enter, where to get in, what the perfect price is. But then once they're in the trade, they say, well, I'll figure it out as I go along. And that really is the wrong way to trade. So let's get into it. Let's start off with exit strategy number 1. And this is what we call previous high, previous low. What this means is, and if you look at a chart, any chart, most times prices, I'd say over 70 to 80% of the time, they will go back to test a previous high or a previous low. It almost acts like a magnet. So if a price is rallying, regardless of what time frame, regardless of market, once it starts a counter trend and go the opposite way, oftentimes it will come back to a previous short-term low. Or if a price is selling off, regardless of what time frame, regardless of what market, oftentimes price will rally back up to a previous high. So this can actually help us. This is an advantage while using it as an exit strategy. So let's look at our old friend here, FANG. Now, obviously we've been going up, but let's say you're a candlestick trader, okay? And you say to yourself, okay, well, guess what? I see this formation here. This is a bearish engulfing pattern. That's a very negative pattern, all right? You should sell or at least not buy here, because most likely price will come down. Let's say you sold on the close of that bar, but you're not really aware of where to get out or where to cover. As we look here, this was the most recent previous low right here, this area, okay? So this is most likely where price is going to go to. It's going to gravitate to that area. Now, is it going to stop there? It could. It doesn't necessarily have to, but we know that most likely that's where it's going to go. So you could use this as an exit. If you were short, guess what? In the coming days, we came right down to that level. And remember, once again, this is no guarantee that it's going to hold there. It could continue going lower, or it may even bounce and go back up, as it did right here. But this is a great way to have an initial exit. Let's say you had maybe two lots. Well, you could cover one at the previous low and let the other one ride and move your stop to unchanged. It's a very simple way to trade. Let's go back to that buy signal that was generated by one of our strategies, okay? All right, so we have a buy right here. Let's say we bought on the close and we're long right at this level here. Now, we don't have any idea where to get out. We're all excited about this, but we don't have an idea. Well, this is the most recent high, short-term high. So as we see here, you could draw a line and place a limit to exit the trade right here at the high. Now, it's up to you. It doesn't have to be right there. It could be a couple of ticks above, a couple of ticks below. And this is what we teach our students. Remember, you're in charge here. You make the decision. This is not a system. This is not something where I trade this way, so you've got to trade this way. I'm just teaching you high probability ways to exit. But if you want to sell it a little bit higher, that's fine, a little bit lower, or right on the high, it's entirely up to you. All we know is that price is going to gravitate up to this area. So let's watch the trade unfold. As we see here, the next day it went up, And then, wow, we're getting really close to our exit level. So we have a limit right here at the high of this bar. And it gapped up. So we exited right here. So we're feeling really good about ourselves. In just less than a week, we have a really nice profit. We're feeling happy. We feel, hey, I got a great trade. Now, let me share with you a pitfall that most of our new traders fall into, because they'll exit and they'll say, hey, Steve, that was a nice quick trade. Got out at the most recent high. And then look what happens. It continues to go higher. All right. Remember, there is no guarantee it's going to stop there. It just means that it's going to gravitate towards that. Well, remember, you could sell half of your position and let the rest ride and just track it as it goes up. Or you could sell all of it. But looking back in hindsight, if you had sold your entire position right here, sure, it would have hurt for about another week as it made new highs. But then look what happened ultimately. A month later, would you be saying to yourself, wow, why did I have to exit right here? No, you'd be saying, gosh, thank goodness I exited right there. Even though I did get out at the top, thank goodness I got out, because that trade would have now been a loss. So let's review exit number one. Remember, if we're going to be selling or going short, we just do the opposite. Let's say you're long. Well, you're going to exit at the most recent short-term high. Remember, you can place a limit order to exit at that high number, a little bit above, a little bit below. Experiment with it, paper trade, see what works best for you. Let's say you're short. Well, you'll exit at the most recent short-term low, okay? Remember, it doesn't have to be at that number. It could be somewhere around there. It's what you feel comfortable with. Just know that that's most likely where price is going to gravitate to. Now, a lot of people say, well, Steve, what about if I have options? This is what we always teach our option traders. If you have a lot of option traders, remember, all of our techniques are based off the chart, off of price. We're not going to base them off of the price of the option or how much time I have left in the option. We're basing them off of what the actual thing you're betting on is doing. So let's say you were long and it gets up to the most recent short-term high. Well, if you were long the stock, you would have exited the stock. But since you're long the option, let's say you have some calls, you'll exit the calls then. And someone would say, yeah, but Steve, I have a loss because of the premium. I haven't made any money. Doesn't matter. Remember, everything we're doing here is based off of the price action, not the option price action, okay? All right, let's go on to exit strategy number 2. And this is extremely simple strategy, but very, very powerful. This is what we call our 5-period simple moving average. So how does this work? Well, back to FANG again. Let's look at that buy signal we had, all right? The minute you get into a position, whether long or short, in this instance, it's going to be a long position, you simply apply to your chart the 5-period simple moving average, okay? And once you apply that, what you want to do is see where price is in relation to that 5-period simple moving average. We're not interested in seeing what it did before. We're only interested in going forward. Because what we want to see is that price continues to close above that 5-period moving average. That price is doing better than its average, okay? So let's track the trade, all right? We bought it and the close, let's say right here. Here's the 5-period moving average. And so this is what's called a continuation type of stop method, where you're just following, it's tracking the trade. It's more dynamic than anything else. Well, the next day we closed a little bit lower, but we still closed above the 5-period simple moving average. So we're still in the trade. The next day, now we get a nice big bounce and we're completely above the 5-period moving average. So we're not going to even consider selling this yet. Now we've really gone way above. We're still above the 5-period moving average, so we're still holding on to our position. This stock just keeps taking off and taking off. We have a great buy signal here, but we're still holding on. And we have an open and then a lower close. Now, most traders will say, well, I'm getting out here. That's a reversal. Remember, you're free to do whatever you want, but as long as it's your decision, not someone else's. If you wanted to exit there, well, that's a nice trade. You can't argue with a profit. But according to this rule, the 5-period simple moving average, we are still closing above, so we should still hold on to our long position. The next trade kind of just goes sideways a bit. We're still above. Now look what happened here. Here's where students have difficulty. They say, well, Steve, I sold here because we touched the 5-period moving average. Remember, this rule says in this particular strategy that we must close below the 5-period simple moving average. So for all intents and purposes, you can see price be lower on the day, but if it closes above, you're still holding the position. Remember, we have to see where price closes on that bar. Now, if we were trading a 5-minute bar or a weekly bar, it would be the same process. You want to see where price closes, not intra-bar. So we're still long, even though we had price intersect here intra-bar. And we continue to go a little higher. We're still touching it, but we're still closing above. Still intersecting, but we're still closing above. And now we really take off. Now we're saying to ourselves, wow, I'm glad I didn't sell. We've really got some nice profits here. But then as we go up one more day, look what happens. We start to sell off. We still close above, but on this bar, we close below. Okay? So this is where we have a decision to make, because we actually have two choices. If you're an aggressive trader, if you're more aggressive and like to get in and out quickly and don't want to wait around and don't want to finesse the trade, well, then you would simply exit on the close and say, we closed below, I'm out. Okay? Say thank you. You bought here, you captured most of this run, and now you're out here. All right? But let's say you want to finesse it. Let's say you are a little bit more conservative trader. You won't exit, but what you'll do is you'll draw a line or place a stop order just 1 or 2 ticks below the low of that bar. Okay? You want to place it below the low of the bar, not right on the low, but just a little bit below it. And that way, if price starts to go back up again, well, you didn't exit. You didn't get out too early. But if price goes down and trades just below the low of this bar, well, then you're out. Okay? A little bit more conservative. It's not, designed to get you out at the top. But if price turned around and reversed and went back up, it helped you stay in the trade a lot longer. So let's see what happened on the next day. Well, guess what? It would have paid to be more aggressive on this, but that's okay. We gapped open to the downside, went lower, and then closed a little lower. But we would have exited on the opening because we had an order to sell right below here. So we exited right in the opening. We didn't get the top. Once again, most new traders, most beginners would say, hey, Steve, yeah, but gosh, I missed the exact high. Remember, we're never going to get the exact high. We're never going to get the exact low. It happens very rarely. And when you do, you should just say thank you. But, look what you captured. You went in long here and you got out here. Okay. So looking in hindsight, once again, wouldn't you be happy looking at it 2-3 weeks later saying, wow, even though I didn't get the top, I'm so glad I exited here because I missed all this downward movement, right? So in order to trade this, if you're going short, you would just do the opposite. You want to see where price is below the 5-period moving average. You simply reverse the rules, okay? So if you're short and price starts to go lower, it will be below the 5-period moving average. And then once price closes above that 5-period moving average, well, then you can either get out, cover your short, or exit the trade, or you can play it more conservatively and place a stop buy limit just above the high of that bar, okay? So let's review exit method number 2. If you're long, you want to exit on the first price bar, regardless of time frame, regardless of market, but the first price bar that closes below the 5-period simple moving average. And you have a choice here. You can either trade aggressively and it says, well, it's going to close there in 2 minutes. I'm going to sell at the market. Or you can say, I will be a more conservative trader. I'll exit more conservatively. I will exit when it trades just below the low of this bar, okay? Let's say you're short. Well, you're going to exit on the first price bar that closes above the 5-period simple moving average, all right? So you have two choices once again. If it closes, if you're lucky enough to be in front of your computer a couple of minutes before the close, you see, well, yeah, we're going to close above this 5-period moving average. Sell at the market and just get out and say, thank you, I got a nice profit. Or you can be more conservative and say, well, I'll exit when it trades 1 or 2 ticks above the high of this bar, okay? So that was exit number 2. Now, in my opinion, let's go to exit number 3, which is, once again, my opinion, this is my favorite. I use this more often than anything. It's extremely simple to apply. And a lot of our students, I'd say the majority of our students, like to use this particular technique as well. This is something I learned on the floor. It's very common now, but it seems to work rather well. And this is what we call range extensions, okay? So what exactly do we mean by that? Well, let's look at our old friend here again, FANG. Remember, once again, this is just for educational purposes, but you can apply this matter if you had a trade this last week. It makes no difference. But whenever you have all the requirements of your strategy or your system, regardless of what's based on, could be based on fundamental news, it could be based on technical analysis, could be based on the full moon. It makes no difference. But when all the requirements are met, when everything comes into play and that bar closes, that's what's called the setup bar. Now, as you can see above the arrow, this is our setup bar. This is where all the rules were met. This is where it's time to buy because all the requirements were met. And when it closed, that was generating a buy signal. So what you want to do, once again, it makes no difference what strategy or system you're trading. Could be one of mine, could be one of yours, could be someone else's. Makes no difference. But every strategy, every system will have a setup bar. So what you want to do is measure the range of that setup bar. That's from the extreme high to the extreme low. Now, a lot of students have trouble. They say, well, Steve, I thought the range was from the open to close. I don't know how that myth got started. The range is always the extreme high or the high of the candle wick to the extreme low or the low of the candle wick. That's your range from top to bottom. So what you want to do is measure that, okay? In terms of points, in terms of pips, it makes no difference. And that's what's called your 100% range, okay? Let's say it's 5 points. I don't know exactly what this was, but let's just say for all intents and purposes. Okay, so that's your range. So what you want to do is simply add that to the top, the very top of this setup bar. And that will give you your 200% exit level, okay? You see how that works? Now, if you want to have another level, now you add that same amount of points to this level right here, and that will give you your 300. If you want to have another level, you add that same amount, and that will give you 400, and so on until you get to 500. Or basically, you'll have 4 exit levels. Now, we always tell our students, you should have no more than 4, because we have noticed over the years, even though this is not systematic, we haven't gone through 10 years of data and tested it and back tested it. No, this is just something, because we're not a systematic company. We're an educational company. We really don't believe in systematic behavior. So we just look at things that have high levels of consistency. And we have found over time that when you finally get to that 4th and final top level here, most likely the trend changes. So let's go into detail exactly to help you figure out what these exit levels are for each individual trade. So if you went long right here on the close, if you're the type of trader that likes to get in and out quickly, you don't want to hold a lot of money overnight, you want to move on to the next trade, you get bored hanging on to something. If you're that type of trader, well, then you would exit here at 200, maybe 300. Let's say you're a swing trader. Let's say you want to hold on more, maybe a week or two. You're more of a swing type trader. You like to track it. Then you would apply it to the 300 level or even the 400. Let's say that you've done your research. Let's say you really think this is going to take off. It's really going to move and have a big move, and you want to be there to grasp as much as you can. Well, then you would exit at 500% or the 4th and final level. But remember, once again, we always teach our students that you should be out of it entirely right here, especially in the beginning, okay? So let's say you fall into that last category and you say, I think this is going to take off. So you want to exit right here. You place a limit to sell right at this level, and look what happened. In a couple of weeks, you made 25 points. And we got right up to that level, okay? Just almost, missed it by a half a point or so. And then look what happened after that. You see this happening over and over again. It doesn't always click right by the exact top as this did, but you'll see it happen often, not the more than less. And it's really a really simple process. And as I said, you can use this going long or short. Let's say you went short on this bar. Let's just say you went short on this bar right here. Okay, well, you would simply just add and subtract the amount of points. And in this case, you would subtract the amount of points. It is 2, 3, and then 4. Okay, so it's very, very simple to apply. You just have to measure the range of the setup bar. The main thing is you have to know what your setup bar is. And the easiest way to find that out is when all the rules and requirements have been met. When everything comes together and the bar closes and you said, I have a buy signal or I have a sell signal, that's your setup bar. So simply measure the range and then either add the different levels, range extensions if you're long, or subtract if you're short. So let's review that really quickly. For longs, measure the range of the setup bar and then add it to the bar's high. And continue to do this when you get the 4 levels. These are the range extension exit levels. For shorts, measure the range of the setup bar once again from top to bottom and then subtract it from the bar's low. These are the range extension exit levels, okay? So we just taught you 3 exit strategies that I think you could agree will change the way you trade. If you've been having trouble lately, or if you've seen your profits turn into losses, you can apply any one of these to your trading strategy, to your trading system. And I greatly feel it will increase your odds for consistency. Remember, it doesn't matter if it's one of my strategies, doesn't matter if it's one of yours or someone else's, but these are really high probability exit methods that will reduce the amount of pain that you may be experiencing once you're in a trade, okay? Now, I teach this to a lot of my students who are especially beginning, and here's what they often say. This is great, Steve, but I was kind of sold that $10,000 system and it never works. It just, every trade is a loss and the risk is too much. And so I don't really have a strategy to trade, okay? So if you're not happy with the strategy, you don't like the performance, and you say, well, Steve, this is not gonna help me at all because none of my trades are winners, we have a great offer for all of you attending. This is a great attendee discount. Some years ago, I was asked to be the head speaker at a conference in Denver, and I spoke for 3 hours. And I talked about many more high probability edges for trading, not just exiting, but also entering, stop placement, and just different ways to find the trend. And we recorded this and we made it into a video seminar. We call this the Secrets of a Stock Exchange Specialist video seminar. It's 3 hours of trading techniques plus a full strategy. I mean, think of it. I just taught you how to exit, but if you don't have a strategy that you feel confident with, we're also going to give you one of our best strategies in terms of pullback trading, okay? This is strategy number 1. Now, let me share with you what strategy number 1 is. This is a pullback method that's designed to buy at lower levels and to sell at higher ones. So in other words, what a pullback method does is it determines what the overall trend is. And if the overall trend is up, it looks for sell-offs to buy at these lower levels, okay? Now, if the overall trend is down, it looks for little bounces and rallies, and all the requirements come together for you to sell at higher levels. Let me share with you some examples, some recent strategy number 1 signals, okay? All right, here's a chart in mRNA, Moderna. Obviously, it's been going up, right? Most traders would say, hey, yeah, we're in an uptrend. But let's say you belong to that chat room, or let's say you listen to that guy on TV and he says, well, you know what? This proprietary indicator that I've back tested for 20 years says we are tremendously overbought. So you've got to sell, right? Or don't even think about buying this because you're going to lose money. It's gone up way too quickly. All the numbers are too high, and so you've got to sell it. So let's say you get out of your position. You say, thank you, I've got a nice little profit. And for the next 2 or 3 days, he's actually right. The stock is actually coming down. You feel good about yourself. And you say, well, it's good. I'm going to stay away from this. But here's what strategy number 1 did. Generated a buy signal right here at the low and continued to go even higher, okay? Here's another example in Amazon, okay? Most traders would say, yeah, we're in an uptrend here. Sure. But strategy number 1 generated what we call a cluster of sell signals. Now, in our course, we teach you about cluster trading. We also teach you how to trade it and maybe decide for you which are the most beneficial of all these signals to take, because we know not everyone is going to take 5 or 6 signals, okay? Now, this was not screaming, as we see that we're in an uptrend. Strategy number 1 was screaming, you have to sell. And as we see coming into this past week, Amazon fell out of bed. This works on other markets, makes no difference what market or what time frame. Here's the Canadian dollar. Again, the Canadian dollar is not really doing much in August here, but then it came down coming into September. So most traders would say, wow, look at this number of downward days here. This is obviously in a downtrend. But remember, strategy number 1 is designed to buy at lower levels within an overall uptrend. So where most traders thought you were in a downtrend, the requirements were met here that we were in an overall uptrend, and it generated a buy signal right here. And coming into mid-October last month, it just took off. You see the Canadian dollar went straight up. We all see Tesla's been in the news lately. Well, we had double signals generated to go short at the beginning of last month, and we see how coming in, by the way, this is a daily chart, we see it coming in, how it was just going straight down. as we see on Apple. Now, this is a 10-minute chart. We know we have a lot of intraday traders. So just because we're changing the time frame doesn't mean that we have to change the rules. Apple is coming lower on a 10-minute time frame. That's, I believe, with the 7th. Well, look at my calendar here. That was just Monday. So Apple was coming lower. 2 buy signals were generated on a 10-minute chart. And look what happened coming into the next day on November 8th. Okay. And if you're an investor, we can also apply this to a monthly chart. Here's a monthly chart of ORLY, O'Reilly. Once again, price was going up and it looked like it's heading lower. Here's a negative pattern here. Here's a bearish engulfing pattern. You got to get out, right? Not really, because 2 buy signals were generated here. And look how the stock took off coming into November. So a year from today, you will have wished you became a member of this course, especially when you learn the great discount we're going to offer you. So if you're having difficulty with your trading, with your exits, if you're having difficulty with your strategy, you don't feel comfortable trading it, if you're just having difficulty learning how to trade, or at least knowing things that, you know, that can elevate your trading, you have to become a member of our Secrets of a Stock Exchange Specialist training sessions, okay? More high probability trading edges. We tell you which indicators to use and most especially which ones not to use. We go into the difference between a system versus a strategy. I teach you what, in my opinion, the #1 chart is and how to be on the right side of the markets. And plus the complete rules to strategy #1. You're going to learn all the entries, all the exits, and all the stop placement. You can apply this to any market, any time frame. And on top of that, you'll get educational correspondence. If for any time you don't understand something or you need a little help, you'll have my private email address. You can contact me whenever you'd like, okay? So my sister site, Pro Trader Strategies, on their website, they advertise this course for close to $1,000. Why? Because it's jam-packed with over 45 years of education, of things that I've accumulated in my trading years, all right? But we have a great discount in our association with MetaStock today. We're going to slash the price down to $37. $37. It's unbelievable how inexpensive this is. You can't even go out to lunch for 2 people for less than $50 these days. But for $37, you're going to get 45 years worth of tips and techniques and methods that I've accumulated along the way. Here's the main thing. This is for a limited time only. Okay. Don't sit on this and say, well, gosh, I'm not really sure if I want this. I think you can afford $37. Most of you may have lost that in today's market, way more than that. Okay. So this is a great way to turn your trading around, a great way to start 2023 in the right direction. We only have about a month and a half left in this year. Most traders are nowhere near where they thought they'd be when they made promises to themselves in January 2022. Start out 2023 in the right direction. Start it out strong. Take advantage of this, okay? Here's how to do that. Contact Pro Trader Strategies. Once again, they're in charge of all the discounts, of all the tech support. They're in charge of all the pricing. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to take your order over the phone or answer any question that you may have. Now, that link you see at the very bottom below the phone number is the link that will take you to the info page. It'll also, you can sign up on the link as well, but I don't believe it's live, but I think you're probably, I don't know if Jeff's going to post that link on the chat box or something, but that's something you can copy and paste if they don't. But I would highly recommend. I'm sorry, what, Jeff?
I'll put it up there.
Thank you. I appreciate it. Yeah. And remember, if you want to call Pro Trader Strategies and place an order over the phone, and you just want more information, there's no obligation. They'd be happy to either take your order or answer any question that you may have. Okay. Now, speaking of questions, I promised I would answer any questions. If you do, now's the time to ask. Let me see here if I can open up. I'm not sure if this is a question to me, but the question is I see here is how does he find his setup bars? Can he repeat this just please? Well, the setup bars were from a strategy that we teach our students. This is not something I was talking about today. Today I was just talking about exits. So it really doesn't matter. I wanted to focus on exit trading, but if you're looking for a strategy, well, great. Guess what? It's in this $37 offer, and you'll be able to find the setup bars. We'll teach you how to identify the setup bars in that course, okay? Someone's asking, what is the simple moving average based on, the high and low or the close? Most standard moving averages are based on the close. And so the way we use it is that way, the standard foundation of but you're free to experiment. This is what I always tell my students. Remember, since our philosophy is you're in charge, as long as you don't alter everything and start using indicators or processes that we don't even touch on, but you still keep the basic foundation in place by using a 5-period moving average, you can experiment with a exponential moving average or weighted moving average. You can feel free to experiment with the moving average based on the opening. It's up to you. Remember, we want you to be in charge of your trading. We don't want you to blindly just start taking someone else's word for it, okay? So the basic foundation is the simple moving average of 5-period based on the close, but feel free to experiment, okay? I think someone's asking about the actual expo. Yeah, I believe, Jeff, these are all being recorded, right? All of these classes?
Correct.
Oh.
In fact, we don't charge for them. They're available for free. The only thing we ask you to do is like and subscribe when you go to watch them on YouTube.
Great, there you go. Can't think of a better thing than that, okay? Question, isn't the 8 EMA, that's exponential moving average, better than the 5 SMA? Remember, there is no right or wrong answer because this is not systematic. In order for that to know if one was better than the other, we'd have to go through every trade in every time frame, in every market, and we have to compare them. And as I stated, we're not a systematic company, so feel free to experiment. In my experience, the 5 works just fine. But if you feel comfortable with the 8, that's fine, because the basis, again, is you're using the same premise of a moving average to determine your exits. And that's basically what we're teaching. That's just one of the exit strategies. If you feel more comfortable with an 8-period exponential moving average, then by all means, go ahead. Okay. One of the main things we teach all of our students, especially whatever course they're taking, and doesn't matter if they've been trading for 20 years or 20 minutes, is that you have to paper trade. You have to find out what works best for you. So we have our students take our courses and our classes and say, hey, Steve, this works great. I found the perfect time frame. It works fantastic on an hour time frame. And then I'll have another student who takes the exact same course and says, Steve, this works great on a weekly bar. It's the best time frame. Tell all your students. And so the point is there's no one right or wrong answer because everyone's different. Everyone has different risk parameters. Everyone has a different way to trade. Some traders like 100 trades a day. Some like 1 trade a week. So you have to find your own way. And this is what I found is the holy grail, okay? It looks like 347.50 and not 37. No, it is 37. If you call up and they say, well, no, it's 347. No, you can, it's $37, okay? Because this is a special offer we have with MetaStock today.
Is a coupon code required by any chance?
No,
I'm kidding.
all you just need is to contact Pro Trader Strategies and they'll take the order.
Oh, okay. All right. Okay. So let's, I'll put in the information for that as well. Thanks, Steve.
Okay. Someone is asking if I can go over exit number 3 slide again. I have a number of slides behind that, so I don't want to backtrack. I can just tell you that this is being recorded, as Jeff said, so you can watch the recording and stop it at your own leisure and watch over and over again. And all I can say is that this is probably, amongst our students, we have thousands and thousands of students. This is probably the most popular, and myself, it's the most popular exit strategy I use as well, okay? Okay.
We did have this question in GoTo as well as in YouTube, and you might have answered it. So if you did, I apologize. But
okay, sure.
They wanted to know if the 5-day moving average was based on the close or the high-low average.
Yeah, that was. I think someone asked that here too. It's based on the close, but feel free to experiment. Okay, feel free to experiment if it's something that you feel like. Well, I'd rather use a 10-period simple moving average on the opening. Well, all I would really suggest is that before you jump in and blindly start trading, go back and test it on your last 5 or 10 trades. You may find that even with a 5-period or an 8-period or 10 or 20 or exponential, it doesn't really work that well for your style of trading. So you may want to move and use one of these other exit methods. Okay? It all depends on your style of trading, what market you're trading, what time frame. But that's what we're trying to instill. We want to put the power in your hands. You know, if I were trading the way or teaching the way most other teachers are, they'd say, no, you've got to use the 5-period simple moving average based on the close. That's it. You know, but we don't believe in that. We want you to experiment and do the research on your own and see if that works. Okay. What is the link for online access to? Well, I think Jeff just posted. It should be posted. Yeah, I see it is posted on there. The link is the very bottom of this screen, but Jeff has posted it on the question and answer box. And remember, there's absolutely no obligation. I know even $37 is not a lot, but there's still no obligation if you still have more questions. It was the exit number 3 review slide. Yeah. Yeah, that's the review slide. Once again, it'll be recorded, and you can go back and look at that at your own leisure. Let's see. I trade 1 minute intraday. Is your program applicable? Remember, this is not a program. This is just a course, an educational course. But yes, you can use our methods on any market, on any time frame. Here's the only caveat, though, and that's not just with our education. It's with anyone. Any trader worth their salt knows that the smaller the time frame, the more noise and whipsaw you're going to get. So it doesn't matter if it's one of my methods or it could be someone else's. So the smaller you go, there's a lot of noise. So just know that that will come into play. That's why a lot of traders like to look at hourly or maybe weekly charts, because there's less noise there, okay? But if you have some strong trending intraday markets, as we've seen lately, oh yes, you'll see some really nice setups. Okay. Yeah, I know that people are saying that that's 347. That's a typo. It should be 37. And it doesn't matter because you'll be able to call them up and it will be 37 because we've already said it here on the presentation. I think that's it for questions, Jeff.
All right. Well, thank you very much. I'm actually it's a lot of questions. I'm going to type that email address one more time so people can take advantage of that. And it's a great offer.
It is a great offer. Once again, disregard the 347 offer. It's $37. Okay, it's our secrets offer. Okay, it's just a typo. And in closing, I just hope that you learned something a little bit. Remember, we're an educational company first. We're not the type of company that we tell you what we think the market's going to do or what the time frame you should be trading. Those are things we feel that you have to decide. The good news is we provide you with education to help you do that. But in 45 years, as I said earlier, the only traders I know that are still trading are the ones that make their own trading decisions. So we're trying to get you to that level so you can ultimately take charge of your own trading destiny, okay? I just want to say thanks to the CMT for having this presentation. Most especially thanks to Jeff Gibby and everyone at MetaStock for giving me the opportunity to speak again, okay? Thanks again, you guys.
Steve. Appreciate it. Great to have you, as always.
Thank you.
All right. Go ahead and do this. And we'll just do the changeover stuff again. Let me go ahead and make myself the presenter. I'll show my screen. And I'll do this too. All right. Very cool. We are going to say thank you to Stocks and Commodities Magazine also for helping us sponsor the event, helping us with getting people here. Being great partners of ours over the last decade. They've helped us literally do all of our events that we do online, all of our multi-person events for the last decade. So we really appreciate Stocks and Commodities Magazine. It's a great magazine. And you should take advantage of the MetaStock offers just so you can get the task subscription for free. Let's go ahead and go here. And of course, we're MetaStock. We've been talking about MetaStock today. We've shown off some of our most awesome add-ons all week. Scanning, testing, forecasting price movement with our patented forecaster, system testing. We're going to talk a lot more about that tomorrow as well. But what we're offering as part of the conference today is our MetaStock software program. It's been rated #1 in its price category for 29 years in a row. And you can get a buy 1 month, get a second and third month for free. The price on that for all 3 months is $69 if you're here in the US. That's about $23 a month, and you'll be running it all the way into February. If you can believe that's only 3 months away, right? So you can sign up for that. Go to metastock.com/conf-promo. You can give us a call at 800-882-3040. And you can also do that online at metastock.com/saleschat. Before we go to our last speaker, we're going to give away another prize because, well, the holidays are coming and I'm feeling like doing a prize. How you doing, Bobby? I can hear you
doing
coming in
good.
already. All right, very cool. Let's decide on the prize first. Let me go to my list, my grab bag of goodies.
A real meta clause today.
Whoa. Okay. You know what? I think it's. I think we're going to give another copy of Ken Calhoun's Trade the Open. So with this one, this is his Trade the Open service. It's normally $247, but in it you're going to learn how to day trade and swing trade. You can get daily trade ideas with price entries and exits. You're going to get coaching seminar Q&A format. You can ask questions. It happens regularly. You can watch them with live trade setups Monday through Friday, and you'll see exactly how to trade. So that's Ken Calhoun. He's actually speaking on Friday. He does a really good job. And let's figure out who a winner is for that. 1 second here.
Okay.
And we'll make that 3. Okay. And then, do you want to have a guess in terms of how many prizes we've given away already, Bobby?
Ooh.
I want you to guess.
Already.
Kelly would know.
Yeah,
Kelly would
knows.
know.
Been sitting here the whole time. I'm gonna say 10.
Ooh, I mean, if you're playing with Price is Right rules, we're okay. 22 prizes.
Oh.
Ho,
Wow.
ho, ho.
It's considerable.
All right, let's go ahead and figure out who the winner is then. What is the number you want to give me? It can be anywhere between 1 and 11,039.
Okay, let's go with 2020.
2020, which is the amount of vision. I wish I had it. Walter W. with a yahoo.es because he's in Chile. So Walter, you are the winner of that prize. We'll reach out. We'll have Ken actually reach out to you to help you get that prize in just a few days. So, well, give us a couple of days. There's a lot of stuff going on with the conference. You should hear from him within 8 or 9 days. All right, thank you, Bobby. Appreciate it.
My pleasure.
All right. Go ahead and do this. Our next presenter is John Seville, and I'm going to go ahead and make him an organizer first. I'm going to talk a little bit about him. We've had John come actually into a number of events with us. I've helped him do a lot of programming over the years into MetaStock and answered some questions. And even today, we were exchanging some formulas back and forth. So he's really, really smart. The name of the corporation he works for is Acorn. And I always like the way I remember we had a conversation, I think it was in California at the time. So this would have been 12, 13, 14 years ago. But he was talking about, we like to take people from seeds, from acorn seeds, and make them into oaks. And that's why I call it Acorn Corp. And that kind of stuck with me over the years. I always remember that story for whatever reason. But in any case, he's a fantastic presenter. And he's how we're going to close out tonight on a nice, big, strong note. So, John, how are you doing today?
I am great. Can you hear me loud and clear?
Yes. I see SpongeBob in the background. Is that new? I don't remember that.
It is new. My friend's an up-and-coming artist here in Calgary, so he painted it for me, actually. So I told him it's going to be thousands of people are going to see it, mate.
That's cool. I can see your #1 breakout strategy. I can see you look nice and ready to go. I'll get out of your way. Take us home, John.
Terrific. How's everyone doing? And thanks so much for the introduction, Jeffrey. It's been a great day. I've been sitting in here all day listening to some of the speakers as I was watching the market and so forth. And it sounds like you had a good day. So we're going to finish it out strong. We're going to talk about our #1 breakout strategy. It's a pleasure to be back here for the MetaStock Summit. And we'll start out with a quick disclaimer. This is for educational purposes only, not a recommendation to buy or sell any of the securities discussed. Acorn Wealth and Smart Money Trading is not a registered financial advisor in any jurisdictional province. Any stocks discussed today may be being held by myself or Acorn Wealth or the employees and contractors of Acorn Wealth. That is, but again, not necessarily suitable for you. Always speak to a financial advisor before taking any action. Past discussed do not guarantee future results, and we may share some stories from some of our students. Again, they're real stories, real students. We don't verify their bank statements though or anything like that. So, what a mouthful. But if everyone understands that and is ready to kick off, put a 1 in the chat box. By the way, if there's any Acorn members in the room, throw me a quick shout out. Great to see you. I don't see the YouTube chat, but welcome to the whole YouTube community as well. For those of you that are new, if there's anyone new, again, throw a quick shout out in the chat box. We've been here for quite a while. We've been working with MetaStock for, it almost seems like since day one. I remember Jeffrey saying when we first got introduced together, he said, Johnny, hey, anything you want to do in MetaStock, you know, we got you. We can even, I remember Jeffrey telling me once, we can even overlay how many times the market goes up when the New York Yankees win a game or things like that. It's a powerful tool. And thanks to that, we are here to present our #1 favorite and most powerful breakout strategy, especially in these market conditions. But we've been at this since 2007. We've trained roughly around 6,000 students. And some of our major calls that we're best known for are some of the big market meltdowns and rallies that we nailed weeks, sometimes even months beforehand. October 2018 was one of our big public webinars. We called the crash in October 2018. January of 2020, we did 43 live webinars saying that we saw a 2008-like crash coming because of the pattern. The pattern in 2020 was exactly the same as the 2007 crash. That's when the pattern started to break. January of 2022, we were back again. Maybe some of you have been part of some of these presentations. We were there on MetaStock as well, talking about the 2022 crash in January. December, we started warning about it. January, we were out. We were talking about the insider selling, the same pattern again that we saw in 2020 and 2008. And it's not just some of those big crashes that we've been on top of. It's also the bottoms. If you're on our mailing list, you would have received this invite on the 6th of April 2020 saying we think the bottom's in, because we started to see bullish divergence in the high yield bond market, and we started to see billions of dollars of insider buying 5 days off the absolute lowest the market ever got. And to me, that's what's really important. What's really important is following the smart money. I'm just a dummy, right? Consider me the dumbest guy in the room. I'm not trying to outsmart the smart money. I'm not trying to recreate the wheel. I'm quite humble enough to say, hey, there's a lot of smarter people out there than me, and that have an unfair advantage as well. And so why not follow the smart money in terms of some of these major market moves? And they've been right. Even in the July 2022 bottom, which wasn't the bottom, but it was a powerful tradable bottom. And we saw insiders buying in mass ahead of that 18% rally that we had, which was a fantastic trading opportunity. So anyway, these are the types of things. I don't want to sit here and talk about our accolades all day. So I'll just give you one last one, because this is why we were alerted. We were recommended as the Stock Educator of the Year award in 2022 this year from Traders World magazine, and that was from our students, from online reputation, from peers in our industry. We were vetted for several months and came out as a winner, and I'm very proud of that because we worked very hard for it. And that's a little bit about us. So within that context, let's dive on into what the market's doing now. So I'll get to the #1 breakout strategy we're using for the market in the moment. But who would like to take a look at what's happening in the market right now by the patterns? Put a 23 in the chat box if you'd like to dive into the live markets. It's going to take a few minutes, but I think it's worthwhile. Okay, great. So live markets. Let's take a look. Let's just jump over to MetaStock, and here we go. Should have that popping up on the screen. All right. Let's take a look at what the S&P 500 is doing. I've got the E-minis up because the E-mini gives us more data to see what the patterns are doing. Patterns are the #1 most powerful leading indicator in the market. All of the bright, shiny objects in the world don't, in my opinion, are nowhere near as important as price action. Because what are indicators? Indicators analyze price, time, volume. That's all. There's only 3 things technically in a chart you can analyze: price, time, and volume. And you can see price, time, and volume in a chart. And patterns are therefore one of the most important things. It took me a long time to realize that. But let's take a look at the power of the patterns in the market now. And I'm sorry if I'm too high energy. I got off the Peloton bike about a half hour ago, and I got my charge going. I'm blood's pumping. A funny story about the Peloton in a moment, actually. But let's take a look at the S&P. So if you take a look at the S&P 500, right? and how it dove down throughout this period, the pattern that the S&P was in, sorry, I'm doing this wrong, one moment. Here we go. So the pattern that the S&P was in was a downward channel. Okay. So if you take a look at the downward channel on the S&P 500, a downward channel is bullish. And when it breaks to the upside, what you do is you simply measure from the bottom of the downward channel to the top. That's probably a little bit too aggressive, but you get the point. It's a little bit over. But that gives you the price action rules of where the S&P is headed. Why does this work so well? Because as JP Morgan estimated, 85 to 95% of all of the volume in the market comes from algorithms and high frequency trading. Algorithms don't guess. They don't have bad days and good days. They don't argue with their spouses. They follow rules, patterns. So what is the pattern in play? What is the market maker's playbook here? Well, take a look at where that pattern therefore said we were going to, and that was the target. That actually, I've simplified the chart for today's purposes, but that was actually also exactly where the 200-day moving average was as well. That's where we dumped all of our longs. So for anyone who, any one of you who follows us or members of ours in our alerts, on August 17th, we published a public statement as well as to our members that we were selling almost all of our longs at that point. Now, if we had a broken high, if we had a broken the 200-day, I would have bought them all back, but we didn't. We rolled over, and what pattern evolved from there? Okay, what pattern evolved from there? Well, let's just take that line out of the equation. Let's just focus now on the new system, because the channel's done. Channel's over. The power, the probability, the foresight that gave us, that's now over. Now we're looking at what the new pattern is. And so if you can have a look here, who can see the head and shoulder that then developed on the chart? Throw one in the chat box if you can see that. G'day, Rahul, Lisa, Neil, Michael, Bill, right on. Throw one in the chat box if you can see that little head and shoulder there. That was going into the Fed announcement. So as the market rallied into the news, retail traders got sucked into thinking the market was reacting bullishly to the Fed data. I think I heard one of the speakers earlier saying that they don't even listen to the news and so forth. I totally agree, because what we can interpret from the news has already been interpreted for us by the powers that be that represent 90% of the volume. And what algorithm, what pattern was in play here? A head and shoulder. So as we rallied into that Fed announcement, it actually formed a perfect shorting opportunity, which told us the S&P was headed to there, and it did. What comes next? Well, what comes next is we then formed another head and shoulder pattern. Okay, the small head and shoulder was actually the head of the bigger head and shoulder. And so when we rallied up to that right shoulder, again, another Fed announcement, we talked about with our students, we said, prepare for this to reverse sharply. And we actually drew this out. We drew this journey out on what date it was? August 30th, I think it was. Anyway, somewhere around there. And if you look at the measurement of the head and shoulder, that shows you the target of where that's going. Where did we go to? Right there, not close to it, exactly. And so when we reach that level, this is where now that bearish head and shoulder is over. So now the new pattern begins. And see, can everyone see here that that these are pretty darn excellent reversal points and accurate market reading? Notice I haven't used any fundamentals. I haven't used any bright, shiny objects. All I'm doing is using my knowledge of patterns, which is what I spent the first 10 years of my career studying. I'm reading, I'm listening to what the chart is telling me. It's telling me what probability is saying is going to happen next based on millions of times it's happened before. Does that make sense to everyone? Who would agree that this is one of the most important things to understand? Put a 5 in the chat box if you agree with that. And if this is making sense. I hope I'm not going too fast. So where now? Well, that bearish head and shoulder is over, right? So we can take, that explains that means the bearishness, that pattern is done, right? Okay, well, what next? Let's just remove these lines. I'll get them out of the way here for you. All right. So what next? Well, if we take a look at the price action right now on the S&P 500, you may see that there's some head and shoulder-ish action happening right now. Okay? And my concern, we're not out of the woods yet. There is still potentially a bullish case to make, but it's looking less and less likely. Let me just show you why. So what can actually could be appearing here is, and I'm going to just change the axis so it's really clean to see. I think there's a good argument that we're seeing the same thing that we saw before in August. I think there's a real potential here that we're actually going to actually, we've got a head and shoulder here, right? Possibly. So if we break down below that support, we've got a target of around there. So if that head and shoulder, smaller head and shoulder plays out, we've now broken back inside this channel, and that tells us that we're dealing with a much more likely something like this. And we're seeing what the data is providing. We're saying if we break down below this level and volume kicks in, we've likely got a smaller head and shoulder. That smaller head and shoulder takes us back inside the channel, so we've broken support. That means we were likely to free fall down to here. That would therefore play into the picture of the head and shoulder bounce, and that would bring us to a 3,000 target on the S&P, which, by the way, if you followed JP Morgan, that's where Jamie Dimon was exactly where he expected the S&P to go about 3 weeks ago. It's also where the 100-month moving average is, 150-month moving average. So there's a lot of reasons why 3,000 could be the target on the market. So this is to me how we gain confidence, control, and how we get excited about the markets. I don't ultimately care if the market goes up or down. I'll go long or short, right? But what I need is I need to have rules that allow me to make decisions without having to recreate the wheel every day. I need decisions that allow me to be empowered, so I feel like I'm in command of the things that I need to make those decisions. Where am I getting in? Where am I getting out? If I am long, at what point, if the market breaks here, would I exit all of those longs and go to cash or start picking up shorts? Having that data allows me to make decisions with confidence and to have structure, to have rules, there's an important word, a system. You have to have a system. You have to be systematic. Who would agree with that, right? 100%. How can you create consistency if you don't have a consistent set of rules? How can you make consistent profits if you aren't consistently finding your opportunities the same way? How can you have consistent risk management if you don't have a set of rules as to how you manage when you get in and get out? Or maybe when you just sit on the sidelines and wait for the next high probability trade scenario to come around. 200% says Rahul. Right on. I agree, right? And so so we had an amazing October. We had a lot of really fantastic longs in October. And as we went into the beginning of the month, I sold 80% of them, went 80% to cash, 75% I think actually is more accurate. Moved my stop losses well above my entry signal on what I held left, and had targets that if it rallied to here, take the rest of the profit out. And if it drops back down, get out and protect the rest of my capital and the profit that I've still got in those positions. And so a lot of those remaining positions have now stopped out, and I've gone now into an SDS short. I have an inverse ETF. I bought puts on the high yield bonds, as hedges, and if the market does drop, they'll do extremely well. These are some of the things we're going to be talking about. If you decide to join us today and in our alerts going into the weekend, it's going to be a very important week next week. But what I want to, but whether you join us today or not, what I want you to take away from today is that you don't need to be a lamb. You don't need to look at this market and be a victim and think that the market is against you. It's not. Your emotions are against you. The news is against you. The market is just the market. And the market is following rules that you can be on the right side of if you listen to them and get rid of those things that are against you. The news, the noise, the emotions. The things that we're most drawn to are often our worst enemy. Again, who agrees with that? Right? And so we need to get away from being a victim, and because it's just a switch to a different side of things, to go from emotions and bright shiny objects in the news and saying, oh, who won this state? Which senator's got this? Okay, oh, we'll go long, we'll go short. While politics is the top talk of the town today, and will be maybe for the next few days, what I'm far more interested in from my trading perspective is what are those patterns doing? And that is where the difference is between being a lion and being a lamb, being in control or being a victim. And I mean, think about $0 oil. The number one strategy we're taught in terms of making money in investments is buy low, sell high. Doesn't get cheaper than free. In fact, it did. It went to negative prices. Who missed $0 oil? A lot of people. And if you did, don't beat yourself up, but think about why. You know, a lot of people saw $0 oil and like, how the hell can oil be free? Wait, they're paying me to buy oil? That's crazy. And it's like you become a deer stuck in the headlights and you freeze and don't do anything. And now look at oil. How much would you pay to turn the clock back and to when oil was $0? Who here, is there any limit of money that would be worth taking that time travel back to when $0 oil was there? I mean, how much would it be worth? $1 million? But how many people missed it? Because people didn't know what to do about it. There wasn't a system that said, here's how we anticipate what could happen next. And so for us, the way that we systematically approached that setup was to say, okay, well, what's the biggest risk with a $0 oil situation? Well, the biggest risk is that some companies are going to be diamonds in the rough. So other companies could go bankrupt at these levels. Now, I'm not an oil expert, right? Don't want to be. But who is? Well, you know what? Let's search for stocks that have massive insider buying and very strong patterns where this happened after oil crashed. Before doesn't matter. What about after? Who's putting millions of dollars of money in their stock after oil crashed? And we ran that scan and we found that these types of setups where insiders had been loading up, we had a really beautiful momentum pattern. And off the thing when we alerted that at 92 cents, it went up about 470%. I don't want to focus on the insiders today. We look at insiders in everything that we do, from the market all the way through to stock setups. That's not what the purpose of today's talk is. But I just wanted to say that, you know, we had a set of tools ready to go so that we could capture the ideas that had the most fundamental strength, the most insulation from that bearish oil move. Because what billion-dollar oil tycoon's going to load up on his stock if he knows they're about to go bankrupt or likely to go bankrupt? No one, right? And so this is the kind of thing, again, that earned us this reward, is these types of things over these last 15 years. In fact, Acorn turned 15 years old on Sunday. We're celebrating our 15-year birthday at the moment. So I love this stuff. But it's not about me, it's about you. It doesn't matter what I do with my portfolio and my stocks. It doesn't matter how good our strategies are if you can't do it for yourself. Because what Johnny does is irrelevant. It's what you do. It's your story that matters. You're not here to hear my story. You're here to do better for you, right? And that's why my student stories matter far more to me than anything I can do or profits I can make. It's whether that translates to our students. And Vasali, and this is back in January when we called that market drop. Thank you for the weekly updates and for the training on the smart money indicators and how to use technical analysis in the decision-making process and managing our investments. I would have drowned if I was not the member of Acorn Wealth Group with impulsive investment decisions. So again, this all comes back to rules. I can't predict the future any more than anyone else can. I can't see who's going to win the midterm elections. I can't see, whether there's going to be another disease down the road, or whether whether the bottom is in and we're about to go up 500%. What I do have is rules, though, that tell me what the highest probability things to do next. And rules are important to me because my passion, why I got into trading years ago, was because I wanted to travel. And what appealed to me about trading is that you can do it from anywhere, and maybe anywhere is from your sofa, watching the next series of Mosquito Coast or Handmaid's Tale, whatever. Maybe for me it's traveling to third world countries. I love living in places like Colombia and Guatemala and things like that, learning new languages. That's, to me, is exciting. But I can't do that if I have to be glued to the screen. And if I want to get away from the screen, I can't do that unless I have rules to say, here's where to get in. Here's where is highest probability to get out. And as it goes up, this is where my stop loss should move to. This is where my stop loss should move to. That's where systems become invaluable, if not critical. And just a quick question for everybody. How many people here would like to simplify what they're doing? How many people feel like they have 20 different puzzle pieces to 20 different puzzles, and they just want to bring it all back into one system that works, one set of rules you can really master? If that's you, again, throw a 5 in the chat box or whatever your favorite number is, because that is what our teaching resonates most with. It's for those of you that don't want to necessarily have to spend all the time in the day staring at the screen. And that's where algorithms and patterns come into play. And so I'm going to talk to you about this system, this pattern that I find is absolutely invaluable in this kind of market condition, because it's in my longs and my shorts. It's something that we are focusing on a lot in the current. I'm not going to say noisy markets, because the patterns have been almost perfect. It's just they're fast moving, and you got to have a way to bring order to that chaos. And so that's where patterns come into play. And so let me just fast forward a little bit to that, because there's a lot to talk about. And I find I want to respect Jeffrey, because I think last time I was on a few weeks ago, I ended up going 10 minutes over. So I'm like, I'm just going to cut out all the stuff in the middle. We're going to get straight to it. We're going to talk about the number one, the highest probability breakout pattern. Now, this system, because it's not just a pattern, it's a system, is something that some of you may have come across in your trading already. And that pattern is a flag. Flags are absolutely awesome. They are. So I mentioned that I studied patterns for 10 years. There's 143 patterns that I studied, and I guess what you need to realize is that all patterns are not created equal. Kind of like a George Orwell Animal Farm, little school book trivia. All patterns are not created equal. Some are much better than others, and flags rank one of the highest probability breakout patterns in any market condition, bull flags and bear flags. I knew this early on, but the problem for me was I couldn't find them. So even though I knew that they were probably, if I had my choice, the only pattern I would trade, I didn't have a way of effectively finding them efficiently. And so for the first 5 years of Acorn, in fact, we didn't even teach flags, because to me, if you can't find it efficiently, if you have to wander through Wall Street looking at the entire S&P 500 until you find a perfect flag, not just a flag, but a perfect flag, it's not feasible to do. It's not worth the time for whatever those extra results might be. But that changed drastically when we actually finally discovered a way to scan for it about 5 years into Acorn, so about 10 years ago since now. And what a flag, to dive right on into what a perfect flag is, I'll show you, I'm going to show you all alerts that we publish to our members, and many of these ones that I am in or have been in myself. So IMRA is a great example to start off with. IMRA is just shows you exactly why these are so appealing. So here, this is what a flag looks like. I'll go into some of the aspects of why flags are so good for this market, in any market, especially now. But first, let me just show you so you can visualize what this is. So this is a flag. A flag starts with a period of consolidation. Often that will be a downward channel. It can be a pennant. It could just be, you know, a flat channel. Any of these kinds of consolidation systems. So typically you'll see that consolidate for a reasonable period of time, and then breaks out of that consolidation and off it goes. And that breakout, what we're looking for is essentially a straight up move. The kinds of flags I'm interested in is when that straight up move is 15, 20, 30, 40%. And goes straight up until it stops. That is your flagpole. Then what happens is you consolidate, and you consolidate in a pennant, you consolidate in a channel, you consolidate in a falling wedge. These are all bullish patterns that would be appropriate to trade. If it's a bearish flag, just as an example, if it went straight up and created an upward channel, wouldn't touch it with a 10-foot pole, not even a flagpole, because that's a bearish flag. You've got to really be, small differences make big differences. Small hinges move big doors. And so understanding the science of this and really mastering this strategy is what I spend a great deal of time doing. And so anyway, this is essentially what you're seeing here is a beautiful flag followed by a downward channel. Does everyone see that? Put a 1 in the chat box if that's clear as day. I can take my webcam off if I'm getting in the way. All right, can everyone see that? Okay, so the target then, if you find the perfect flag, that amount of movement is well, it's not roughly, that's exactly where we measure the target to. And so the move can be very powerful, very fast, and it gives us a very tight stop loss for a very decent reward, right? So, and that's the first leg, and then after that, and in fact, exactly what we did with this one, it hit the first target, and then after it pulled back and showed its new support and rallied, then we alerted to move the stop signal up underneath that low, which allows you to now let it run. So now in the case of this stock, you've made about, what, 30, 40% profit on that first move up. I think it's about 35 on the first move up. You don't get greedy. Well, at least what we teach is don't get greedy. Yes, it could go up much more, as this one did, but a bird in hand's worth 2 in the bush. Why not sell 30% or whatever's right for you? All right, it pulls back and then starts to break, and now you can move the stop loss well above your entry signal that not only protects your capital, but it also protects the profit you've made. And so now what we call this is house money trading. We're now playing with the house's money. We're playing with profits that we've made, and we protected our capital. Now, it's important to mention that, of course, a stop loss doesn't guarantee an exit price. It can gap down. It can. You might, if it rushes through the stop loss, you might not get triggered at that exact price, right? You've obviously. It's important to be aware of those things, but it's a pretty damn good way to do it, right? It's a really good risk management tool. It's what we use. So we're now playing with the house's money, and so as the stock continues to rally, the anxiety of being in that trade, knowing you've got to win, right? Unless it gaps down and misses that stop, you've got a win no matter what. How much better would you feel if all of your trades, or the majority of your trades, you were able to structure them like that, where you could take enough profit quickly, right, within usually those first few days, that you've now got a house money trade where whether it stops out or goes higher, you're happy with it? How good would it feel about if you felt that about all your positions today? That's why I love flags. Now, we also, as I mentioned, we look at insiders a lot. And so when we find a flag with big insider buying, which in this case it did, we had, the insider director bought for the first time. He then bought again and added another 144%, and then bought again and added another 195%. Stock pulled back to the same support area. Then a 10% owner bought 4 times between $1.11 and $1.40. And then after it flagged, after it rallied, another 10% owner bought $1.86 million. So, absolutely awesome. That's what more can we ask? Because now we've got technicals and we've got fundamentals. Fundamentals as illustrated by what the insiders know. I won't go into that in depth tonight. I want to focus on this, but it's a piece to the puzzle that we certainly look at. And there's the alert. And this is where execution comes in, because a good idea is nothing without good execution. And so IMRA, here was the alert which we put in our portal. Every alert that we do also comes with its own video. So you can click on that video. It goes directly to me analyzing the pattern, breaking down everything from the insiders to the price action to the targets to the stop losses, and explaining why we like it so much. And of course, it is up to you to make your own decision. We're not financial advisors. We can't tell you what's right for you. And again, reminder, past returns does not guarantee future results. But this is exactly the kind of thing we're looking for. And there it was, October 12th, direction long, downward channel, entry signal 256, target of the pattern, first target of the pattern 343, second target momentum, which means let it run and just keep moving your stop loss up until eventually it stops out. You can see at the time of this screenshot, the stop was now at 293, which is well above the entry signal. And as you can see, we also then provide updates on the technicals almost every single day. So once we find an idea, we stick with it. Like, we really have a commitment to excellence, and we work very hard for you, our clients. So there you go. That's IMRA. Off she went. Oh, that was the original alert. So that was the update. That was the original one. So you can just see how those ideas build. Anyway, and as you can see, IMRA just really took off. It all went all the way up to that first target. It then continued and continued, and in fact, it actually flagged one last time here, going into last week, hitting a target of $5, and to us now, this is considered over. It may continue to go higher, but I mean, the juice is really, the really high probability moves really happened. It's gone up 84% in its first 8 days. That's pretty damn good. Good enough for me. So that's what a flag is. Now, is that clear so far? I'm going to go back to show you some more flags, but I want to take a step back into why these are so powerful in uncertain markets, in any market, but especially in an uncertain market. So if everyone's clear on everything I've said so far, and I've explained it clearly enough, again, if you could just give me a yes in the chat box. I hate to make any assumptions about anyone's knowledge, and I don't like to leave anyone behind. So let's take a sip of water here. All right, amazingly good. Thank you. All right. So here's the reasons why it's the #1 breakout strategy. Number one, it is the highest rank. Just remember, this isn't just a pattern, it's a strategy, right? A pattern is the first piece. So number one, it is the highest ranked breakout pattern that I'm aware of. I've studied it before I even knew what a price to earnings ratio was. I'd studied 143 patterns. To me, again, I think one of the speakers earlier today said that. He said, the most important thing is understanding price and volume. So before I understood the fundamentals, I wanted to understand what moved the market. And if 90% of the volume in the market's coming from algorithms, I want to know why they're making decisions, where they're buying, where they're selling, what would, that's why I study patterns so diligently. And it's the best pattern for breakouts, bullish and bearish. Second, it's high probability. So when you say it's #1 ranked, what does that mean? Well, that rank comes from a few factors. Number one, and I call this the 3 Ps. So every pattern I analyzed, I would rank it on a 3P basis. The first one is probability. So flags are one of the highest probability patterns. Depending on the market conditions, we expect them to perform anywhere between 70 as much as 85%, sometimes even more, but let's not talk about the extremes, right? They're a very high probability system. The second thing is profitability. The type of move we're expecting in a successful flag isn't 3% or 5%. You know, we're looking for 20, 30, 40%. So if it does succeed, if it goes big. So it's a high probability and a high potential profitability. So now we've got 2 Ps. But what about the third? Predictability. Can we find it? And this is why I didn't trade flags for the first about 5 years. After I realized how good they were, I still didn't trade them because I couldn't find a perfect flag easily. Just to give you an idea, we have actually, sorry, I'm jumping around a little. Let me come back to that. So finding it is important. Can we find enough of them easily enough every week that we can build an entire trading portfolio around just this one pattern if we wanted to? When I first started out, the answer was no. But as I mentioned, about 5 years later, I was training a student in Vancouver who was an incredible coder. I mean, amazing. Not quite as good as Jeff and the team, but at MetaStock. But he was amazing. And so he said, "John, have you thought about doing it this way?" And we sat there for 3 hours in our office in Vancouver, which was our head office at the time. And sure enough, we cracked the code. And ever since that day, flags became one of our flagship products. And something that I look at and search for every single day. So now we have the 3 Ps: probability, profitability, and predictability. Now it's a valid strategy. If you don't have all 3, then you're on a 2-legged stool. You need all 3. Now we have this rocking and rolling. Let me tell you why it's so exciting in uncertain times or volatile times. Well, short time frame. They are fast. They will either succeed or fail, typically within the first 5 days, or succeed enough to at least move the stop loss above the entry price so that you're in a house money trading position. So why is that valuable? Well, what do you guys hate the most about a trade? The beginning, right? The beginning of a trade where you've got your original capital at risk. Once I'm already up 20 or 30%, am I stressing that much over that anymore? No, not me anyway, because I've got my stop loss in there protecting the position. I've got my target ready to sell if it rallies to the whatever that target might be. Once I'm up 20, 30% and I'm playing with profits, I'm feeling pretty damn good. But those first few days where you're waiting for the stock to prove whether you were right or wrong, that's the worst part of the trade. Put a 1 in the chat box if you'd agree with that. So what if you could shorten that time? This is what flags do, right? So short time frame allows us to reduce that anxiety level. And also, in a market of ever-changing headlines, right? In a market of ever-changing headlines, why is this also valuable? Well, because if we're worried about what the Fed's going to say next week, if we're worried about what the news is going to be, at the end of the month for whatever reason, CPI numbers, et cetera, well, what a short time frame for that first leg of the trade to happen in is invaluable, because it gives us less market exposure, less time exposed to market events and headlines in order for that trade to get to that first level where we can lock in some profits and protect our capital. Does that make sense, everybody? Okay, good. And then for those of you who are maybe more advanced or trade options, think about the benefit of a short time frame trade. The biggest enemy to an option trader, and I should say in context, if you're buying or selling options, your biggest enemy is time, isn't it? right? So if you have a strategy that shortens that time, once again, can be very beneficial to an options trader. And so this is why when we look at systems, we're looking at all of these things, not just one, not just, so many times people say, what's the win to loss ratio? You know what? I ran across a company that I got sucked into, that I lost money on buying their thing. And they're like, oh, we have a 95% win rate. I'm like, wow, great. And then I realized that the 5% that they never sell any of their losers. That's how they have a 95% win rate. But their ideas almost all lost. So you got to think about the full picture, and that's why I went crazy trying to learn to trade, because I went through all of it, all the bells and whistles, all the software programs. There's probably not a software or indicator out there that I didn't spend money on. Some better than others, some absolutely worthless. And that is what drove me to start Acorn 15 years ago. Was I'm like, why is it so hard to find someone that's actually going to teach me what to do? Can't be that hard. And it was. So here we are. And a big piece of this is, of course, the set and forget part of it. I live half the year in Australia. So when I'm in Australia, the markets are open when I'm sleeping. So the rules are absolutely important for me, because I might have 20 or 30 positions open, and I literally can't watch the market unless I don't want to sleep anymore. So rules, I find this strategy is very appealing for those people that also don't want to spend all day watching the market, or can't, or have a day job, or just simply have better things to do with their time, right? To me, trading is meant to give you more time. Warren Buffett said, if you don't make money when you sleep, you will work until you die. So when I went to develop my trading strategy, I'm looking for a strategy that allows me to make money in my sleep. You know, Warren Buffett's a stock market god. He's a legend, right? I listen to that advice, right? Even though he didn't say it personally, I'm listening to that. And so when you start to look at these ideas like Kaba was a beautiful flag setup, right? Broke out from a downward channel, hit the channel target. Then it pulled back and bounced off that channel support once more, flagged again. So we actually alerted this. In fact, those of you that were in the last MetaStock Summit 3 weeks ago, it was just a one-day event, I showed this exact chart to you. I said, here's one of my favorite flags, right? We alerted it to our students. The president and CEO had bought a big position, CFO had bought, director had bought, and you got a flag formation. Now, when we look for a flag, it's not just the flagpole and the consolidation. We have a scan looks for very unusual activity. So it's looking for a stock that looks nothing like the market. We're looking for stocks that are salmon swimming upstream. So even in markets going down, we still expect the stock to be able to perform. So when you start to, when you get into this, if you decide to join us today, I really hope you do, the scan actually looks for very special characteristics, that it's not like the market, that it's got, it looks at average true range, it looks at extreme movements, it looks at volume accumulation, it looks at abnormal activity, and all of that is happening behind the scenes when we click a button. So out of the 8,000 stocks in the US market that I scan every day, there's maybe 2 or 3 a day that meet all the criteria we're looking for. And out of those 2 or 3, generally one that I really like the most. And so that's why I didn't trade them for so long, because out of 8,000 stocks, there's maybe at most 3 out of 8,000 that meet all of the criteria that need to be there if I'm going to buy it. And hopefully you too. You should demand excellence. So the CABA, last time I was here, I said one of my favorite longs. We alerted it at 183, target was 238, and bang, we took it. I traded it myself. We hit the target, I'm out. We did have a higher target of 273, but because we saw the head and shoulder rolling over on the S&P, we shared with our community that we were going to, well, at least what I was going to do is be conservative and exit on the first targets rather than expecting more. And that was already, what's it, 17, so 50-cent movement, 25%, 30%. And that was in a period of 4 days. KLXE, another example of a flag. It's the gift that keeps on giving. This one was also one we've shared. And here you're going to see, we didn't have this available yet, or we hadn't released it yet when I was last on the show a few weeks ago. But here you'll actually see the new indicator, the flag indicator. So here again is KLXE, and I want to take you through and see if you can see the flag, right? So look at the screen. You can see that we have a downward channel. Hey, I'll take myself off the screen again. Let's just focus on this. There's the downward channel, right? There's no flag yet. Channel breaks out, and bang. That's where this was first alerted by the scan. So every time you see an arrow, that's where it would have appeared on your MetaStock scan or Wealth Chart scan or Think or Swim scan. We have it in those 3 platforms so far. Oh, and Incredible Charts as well. And there you go. You got a flag. That was the earliest entry. But then if you missed it, so it flagged up to its first target, then it was alerted twice more, back-to-back days, and flagged again. And this created, so we didn't get it early. We saw it after it had created this monster flag. So what I want to ask you is if you can spot, does it seem clear, based on what I've shown you earlier, that is a valid flag pattern? Give me a yes or a no in the chat box. I want to see it. Make sure everyone's here and following along. Can you see the flag there? Can you understand? And can you do you think that if you spotted this after seeing enough of them, you'd see the flag too? Great. So what do? Well, we enter on the breakout, and where do we expect to go? That much. That much. Whatever that is. We measure that, right? So we did, and we alerted it as a flag at an entry of 10.07, target 11.93, target 2, 12.83. Stop loss, well, this is well above the entry signal now because of when the screenshot was taken. But bang, off that went. Now, this, I want to remind you, this was going up in a bad market, in a crashing market. If you look at this setup, would you have any idea that the market was going straight down in that period? No, because it's a salmon swimming upstream. And this is where pattern meets strategy. Our scan doesn't look for just the pattern. It looks for very special qualities that it's outperforming its normal price movement, that it has this special, what's the word? I'm not French. Je ne sais pas? Am I saying that right? Probably not. I'll stick to patterns here. So yeah, 50% move in the first 7 days, and it's still going. Even in the bearish market, it rallied 8% yesterday. And what have we done? We just kept moving the stop higher and higher and higher. So if it stops out tomorrow, no problem. It's a great win. If it goes higher, great. It's a great win. And that's where you can see the continual updates on all of these setups. I'm running out of time, so I'm going to fast forward a little bit. But look, so many examples. IMVT was another one, right? Beautiful flag on the scan. 1, 2, 3, 4 days in a row. Bang, 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 bang. Flagged, broke out, right? Straight up to its target. Alerted at 976. Target was 1243 and 1393. Set and forget. We determined that before we even have a single dollar in the stock, and that was a 27% move over 10 days. Option traders should be salivating, right? But I prefer stock, and I take bigger positions. If you're trading a smaller account, maybe you prefer options. But I just want to get the point across that these all look the same. Over and over and over again, we are looking to find the same thing. For those of you that trade more larger stocks, does it work for them? Absolutely. And here's some examples on that. LEGN, flag at 44. Boom, straight up to 50, right? There you go. You can see that there in wealth in MetaStock. Beautiful downward channel. Looks so clean, so crisp. I love the MetaStock platform, and you can see that nice little chart, nice little flag. There's the alerts straight from the new indicator that you'll get access to, and then off it went. 10% in 4 days, still going, and was up today in a downward market. That's flags. That's salmon swimming upstream. Lockheed Martin, downward channel, broke out of the oscillation, and off it went. That chart. Here you go. I'll finish on this one because I can see the questions coming in. How do we get in? Yes, I'll show you how you get involved. So Lockheed Martin, though, I'll finish on that because that's a major much more larger cap. So you can just see that even on these large cap setups, it still works beautifully well. 1 second here. I may have lost that one. Okay, you get the point though. Lockheed Martin was a beautiful flag, rallied very aggressively.
Sure. Click on the red arrow in the
straight up to 485. You can see it on the chart, the current price. It went straight up to that level, which was the channel and flag target. So that's flags, and that is why it's the #1 favorite strategy in all market conditions. And not just that, but it's something that that there are very clear-cut rules that we can then set and forget. So there's a lot of reasons why it's the #1 strategy. So to show you what we've put together for you, a very special program for this MetaStock event today. We're celebrating our 15-year birthday. There's a lot of things happening which we're really happy about right now. We've just been awarded the FinTech Traders World Magazine Award for Best Stock Market Educator. And so we'd love you to be a part of this. So if you take a look at what you're going to get, it covers everything that you're going to need here. Firstly, the scanner. The powerful smart money flag scanner. It's of course available in MetaStock for us to search for bull flags and bear flags. It's powerful. It's easy. You click a button and that recipe that took me 5 years to figure out goes to work and finds them. And there's only about I think on average about 7 or 8 that come up every day. And of those 7 or 8, about 2 or 3 that will really fit the criteria that we teach you that we're looking for. So that flag scanner is available in MetaStock, Wealth Charts, Think or Swim, Incredible Charts. And if you don't have any of those platforms, we're happy to help you set it up in whatever program you use. We are developing it in the other ones like TradeStation and so forth. But no matter what program you have, you'll be able to run the scanner because we are able to set you up with a free scanner that runs the flag scan. If you don't have any of these programs, and that will get you going while the other ones are in process and so forth. But if you have one of those 4, you're off to the races right away. Next, the indicator, right? So here it is in Wealth Charts. You can see the green dots. Every time it comes up in the scan, you're going to see a green dot, right? Bang, that was IMRA. There it is. Looks beautiful, doesn't it? Right there in MetaStock. Bang, 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 bang. Alert, alert. Every day you'd be saying flag, flag, flag. Listen, flag. Listen. It's flag. Beautiful. And so that's that indicator and that scan you're going to have lifetime access to. Okay. Plus, what we're providing for you is the why behind the what. So you'll have the way to find it. You'll have the tools. You'll have the scan. You'll have the indicator. But we're also then going to take you through a 4-module course where we show you how to trade them. You know, what are the good ones and which are the ones to ignore? That's important. So you're going to get all of that, and that's 4 modules, about an hour or so long each. So it's a 4-hour course that is excellent. How to set your entry, how to set your target, the best market conditions to use a bull flag and a bear flag, and the types of flags to trade and the types of flags to outright avoid. Right, it's the devil is in the details. It's important. So we're going to give you that, and 4 hours is nothing compared to the 5 years it took me to figure that out. So everyone has 4 hours if your trading means enough to you, which it should. So that's the why behind the what. And a really special bonus is I hadn't taught flags since 2017. But because it's so prevalent in all of our alerts, I did actually teach the class live and did a special masterclass on this just last week, October 31st and November 2nd. So this is the first time I've taught the course live in 5 years. So you're going to get this as a bonus. This was a lot more money than what I'm going to give this to you for today to join the live class. So the value is immense because you're getting all the value really of that live class, because it just happened last week where we taught the class and we actually picked out our favorite longs and shorts for the weeks and months ahead to be looking at. So really opportune. And that was all set up, and you're going to get access to those recordings. And then finally, you're going to also get support. a coach is so very important to have the support in case you want to get fast tracked, set up your indicator, run the scan, practice identifying the support and resistance. That's all going to be there for you, and that's something that we also include. So the value of this is it's almost $5,000. Oh, sorry, $59.94 because you're going to be getting the on-demand course and access to the bonus masterclass that I've just done. So all of that's included. You've got lifetime access to the powerful flag scanner. You've got lifetime access to the new flags indicator. You've got the Finding Flags on-demand course, which is $19.97 in value. You've got a dedicated one-on-one fast-track implementation coach, which is with you for 3 months. That's $2,000 in value. You're the same person, WhatsApp, text, phone call, screen sharing, anything you need, we're here for you. We really mean it when we say we're committed to excellence. And so the price on this for this package was $14.97 if you want to be part of the live lesson that we just did last week. And so we were going to offer it for the same price tonight. But we did want to do something special for the event, and I mean Jeffrey and I have been working together for years and years and years. So we're actually not only doing it for $14.97, we're not going to do it for $9.97, which was the price we offered this to our VIP members, people who'd been with us or part of our community for many years. That was our internal promotional pricing that we offered it at. We're going to go one step further, and we're going to be giving you the option of taking part in this for only $6.97, which is worth a lot more than that. So $6.97 gets you everything. And to go, so the link there, acornwealthcorp.com/breakout. Now, I think I've got a couple of minutes left, so I just want to show you something extra we're going to be doing. And this is actually the photo of me about an hour and a half ago. I was sitting there. I was looking at my two bikes. I've got two exercise bikes because I had ACL and meniscus surgery 2 years ago, and total knee reconstruction basically. And so I bought this exercise bike you can see on the right, and I bought that in 2020. And then we got this Peloton. There's two exercise bikes sitting right next to each other, right? And the difference between these is on my Peloton, which I got 10 days ago, I've done 15 rides. Sometimes I go 2 or 3 times in a day, 15 rides on it. These exercise bike that I bought for my post-surgery recovery, I rode 6 times and never used it again. Why? They do the exact same thing. They have the exact same mechanics. They're the exact same machine. Why am I a hardcore Peloton lover? Because of the community. Because of the coach, because of the experience and learning and being motivated by being in that community, by watching my favorite instructor each day who gets me motivated. And that, to me, is a difference that makes a big difference in looking after my health. And when you're looking after your finances, you need the right coach, you need the right community. It does matter. And so this is why we're also including in today's offer 12 weeks, 3 months of our insider alerts, 5 alerts every single week with entry signals, exit signals, and targets, stop losses, videos for each idea that you can click to and watch, all uploaded to the portal. And again, that is what we're very well known for in our community, with all the interviews that students do with us, with all the relationships that we've built over the years. That's why people keep coming back to us, and that's why people stay. So once more, the full breakdown of everything that you're getting for only $6.97 is there. The alerts and live trading rooms you're going to also get every Tuesday and Thursday. We do a live class from 4 to 5 p.m. Pacific. You're going to get that too for 3 months. The value of the alerts and the trading room is $600 on its own. So if you think about it, you're only really paying $100 for the course, lifetime access to that course, the new indicator, and access to the scan for life as well. So for $6.97, there you go. There it is, and I'm going to put the link in the chat. Oh, Jeffrey's already done that for me. Thank you. So yeah,
You're
guys,
welcome.
if you have any questions, I think we've got 1 minute left. Great presentation. Yes. This is for today only. Excuse me. It is a special, and we are, and it, as you can see. So head over to acornwealthcorp.com/breakout. You'll get access to everything via your email. You get your login and so forth sent to you right away. Again, I've shared a lot of stories and ideas with you today. And as I said earlier, none of that matters as much as what you do with it. Your story, right? It's all about you. And that starts here and it starts now. Just like exercise, don't put it off. Make the commitment to yourself. And make that decision to not be the lion, to not be the lamb, to be the lion. And that's how you can do it. Go right now, click the link, acornwealthcorp.com/breakout. And we have some brand new, fresh ideas coming out to you over the weekend that I think you're going to love. So the value is almost instant. I think that pretty much covers everything. I'll leave the breakdown of everything there on the screen. And if you are signing up right now, throw a quick shout out in the chat box with and welcome on board. Jeffrey, thanks very much for having me, and it's been a pleasure.
Good to have you. I enjoyed looking at SpongeBob too, the whole time. All right, very good. Sean, great job. I appreciate you coming in. All right, very good. Let's go ahead and kind of do this. I'll go and meet the presenter. Go ahead and show the screen. And I want to talk real quickly about what we're doing tomorrow. Thank you, everybody, for coming. TK, I'm sure I said that right, said it's been a wonderful session, loads of learning, great information. Thanks for putting everything together. Lots of really good feedback about the sessions. I hope you're enjoying them. I think they've been great. I'm really happy with today and yesterday and the day before that. And it's just been going very, very well. So I appreciate everybody for participating, for being here. Tomorrow, we're going to start with Jeff Tompkins. He has a beautiful first name, and he does a really good job. He manages a hedge fund and does Altos trading. So after that, we're going to do Adrian Mance, Kelly Clement. Fausto Pugliese is going to come and talk about what to expect after the election, which is going to be interesting. I wonder if we'll have finalized results by then. John Thomas is going to come and talk about stuff. Tyler Wood from the CMT will be with us. The trader chick Marina V. And then we're going to close up with Jeff Killian. So we have another great day tomorrow. I hope you can join us. Thank you for registering. One last shout out to our sponsor, Stocks and Commodities, CMT Magazine. Hold on. Okay, anyway. We are, of course, MetaStock, 29 years in a row. If you want to get an extended trial about MetaStock, or you want to try any of the products that you saw today or yesterday or the day before, go to metastock.com/conf-promo. You can also visit us online at metastock.com/salespchat. You can give us a call at 800-882-3040. Wayne says, thanks. It's just been terrific. Thank you, Wayne. I'm just really keeping everything rolling here. And it's great because of the presenters we have and the audience that we have. So we'll see you tomorrow. Looking forward to it. Have a good evening.
Hi, Kelly Clement here from MetaStock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do